Hey, welcome into 2025. Today we are doing something that is not usually done in my industry. We're going to do a live marathon on home ownership, how we can become homeowners in 2025. We're going to have my take on what the market will look like in 2025. Not only my take, but the take of industry professionals who will give their side of the story in terms of what they see in real estate from different parts of the country. I'm blessed to see 2025. Hopefully, you all enjoy yourself, lock in, because we're going to be here all day long. Um, so just to give a few items that I want to go over. So at any time during the course of this live, you can ask questions to any of the speakers. Do me a huge favor. I want you to reach out and invite some friends. Let them know that we're going live talking about home ownership for 2025, and not just home ownership for 2025. How to better budget, how to take care of the land that you do own once you do have it, and then we'll dive into different markets in the country. We're here all day to answer any questions that you have pertaining to real estate, the real estate market, whether you're a first time home buyer, repeat home buyer, you've inherited property from a family member, if you have already purchased and you want to refinance. We're going to dive in and try to get all of your questions answered. All of my contact information will be below. The guests, their contact information will be below in the description after the live. And we're going to make sure that we take care of you guys, because right now it seems like the market is a challenge, right? But there's ways to navigate through the market. There are ways to get money to purchase homes. There's opportunities to get homes, and I'm not going to say at a discounted price, but better than what you see online. We're going to dive in how important it is to have a great team. When I say having a great team, I mean having a experienced real estate agent, an experienced lender, and an attorney's office who can take care of you and answer any questions that you need pertaining to the real estate market, why you need an experienced team. And I know this one's probably going to hurt, but even if your cousin is a realtor, but they don't have any experience, right now might not be the right time for you to utilize their services. Don't shoot the messenger. I'm just telling you what I think you should do. And if your family member is new to the industry, make sure they have someone to help you, because this is not for the faint. Purchasing a home is a daunting task. And yes, you may go on TikTok, you may see the Facebook reels, you may see the YouTube reels or Instagram reels, and you see people popping champagne, confetti, but the back work to get to that point was difficult. There's going to be conversations had. The buyer's going to be pissed with the agent. The buyer's going to be mad with the lender. The lender's going to be mad with the agent. There's emotions. So people say, well, why are the emotions so high? Because this is the largest purchase you've ever made in your life. This is the most amount of money you'll probably spend to this point in your life, and it's going to take some effort. It's not going to be easy. It's going to be a hard road potentially getting there, but today is why I wanted to take the beginning of the year and take my day and some of my friends' days to help you guys propel into the next year. This is not a fluff. This is not a fluff session. This is hard facts on what you need to do to become a homeowner in 2025. So, my first guest is a good friend of mine and my family. She has helped us. She's helped plenty of my clients become homeowners. I've helped her clients become homeowners. We've probably been working together. She's probably over 10 years now, well over 10 years, probably closer to 15 years between her sending clients to me from her industry and vice versa. I don't want to take it lightly that Shannon's spending her time with us this morning. She is a expert in budgeting. Um, and I will let her get into her story on how she got to where she is. We're going to bring to the stage Shannon Payton, and she's going to discuss the topic of budgets.
Sea giveth crispy fish.
Hi, friends. Sorry, can everybody hear me okay?
You sound
I
great.
don't know what's happening. Look, I don't know what's happening. I think I just shared the live and the YouTube say that. So my name is Shannon. I am a I'm a financial literacy expert, but more importantly, I've experienced a lot of things in life that have made me be more aware and compassionate towards people's plight when they're trying to become homeowners and getting their finances together. Just a little bit of backstory about myself. Me and my family found ourselves homeless. We were evicted the week before we went to give birth to our second son. And we were able to take that experience and prepare for homeownership and then purchase a house within 11 months. That experience taught me a lot. And I think that's when I first met Kevin. Right after that, or within that time, that's when I became a housing counselor. And then I started to learn the steps to financially prepare for homeownership. So my goal today is to be able to help you to not just prepare for homeownership, but hopefully if you use what I'm saying today, you'll be able to use those steps to prepare your finances, period. Because being broke sucks. And I don't think that God intended for it to be that way. So that's my goal at this point, to be able to help more people become financially aware and avoid some of the things that I've had to go through, whether it be the eviction, the repossession, foreclosure prevention, job loss, all the things, garnishments. If you name it financially, I feel like it's happened, minus a bankruptcy. So yeah, that's my goal today.
Gotcha. So Shannon, January 1st, 2025. You
Hmm.
know what it is. New
Yeah,
me, new year, new
yeah,
house, new car, changing everything, leaving old things
yeah,
back in 2024, right?
yeah,
You and I both know realistically those are great ideas, but we have to take steps besides just making that mantra, right?
for sure.
So I want you to kind of talk to the person who says, I need to make some changes this year. Like, I really need to figure out where my money's going, and I
Hmm.
need to figure out how to allocate my money so I can save more or just have enough to pay my bills because it's tight right now. Even though they said we're not in a recession, things are still expensive.
Yeah, it is.
So, outside of even purchasing a home, what's the first step that someone needs to take to get a hold of or figure out what their budget even is?
So the first thing that a person is going to need to do is understand what a budget is not. Okay. So with a budget, it's not just I'm going to write down everything that I have to put out for the month. Well, that's just going to make you upset. You know what I mean? So the thing with a budget is you want to not only figure out what you're putting out, but also what you're bringing in, because both are important. And once you know what you're putting out and putting in, then you can decide what budget method and trackers work for you. Um, I think people automatically assume that one budget fits all, and that's not the case. So there are several different types you can go through, and I hope to share more of them with the group today.
Okay.
Yeah.
Oh, this is the hard part.
Uh huh.
You're married, I'm married, right?
Uh huh.
How important is buy-in from your spouse on budgeting?
Oh, it's essential, and because you can create the budget and you can make the plan, but you have to be on the same page. Because if you're not, then your spouse might. My husband, he's going to have a different opinion on what needs to happen from what I have. And we might have different priorities, and not even just your spouse, but if you have children, because we all know that they're going to come up with something the day before it's due. I got a field trip. When's it due? Tomorrow. What? You know what I mean? So you want buy-in from everybody that's within your household. And if you're divided with your budget and you can't come to an agreement about it, then your finances are going to feel like that they're all over the place. So one tip that I have, and I kind of learned it this Christmas, believe it or not, I still learn every day, is that if you can't both be in agreement, then pin it. Put it on the table until you can. Because that
Got
way it just makes it easy and nobody's going to have any hard feelings.
Got you. So you said it's not just about putting down. Say that again. Not just putting down your expenses. What
Hmm.
should you do? Like, matter of fact, where do I even put it? Is there a budget worksheet I can find? Like, is there a notepad we
Yeah.
take? Like, where do we figure that all out at?
Okay. So I think the first place to understand is it doesn't have to be complicated. Um, I use a budget planner. I like to have something in my hand, but everybody's different. If you have a notebook, you can use a notebook. I was trying to see if I had one close. This is my old one. So I had a budget planner like this, where every month I would go in and write it down. Some people might just use regular note, pen, and pad, but the important part is documenting what comes in and what goes out. We don't care what you put it on. You can put it on an app. I like Rocket Money. I don't use it because I'm the type that I have to see it, but I like Rocket Money. You Need a Budget or Every Dollar. Those are all really good budgeting apps. A lot of people's banks will show you what comes in and goes out if you're trying to figure that out, because that's the starting phase. You have to figure out where the money is going and how much of it is coming in. Once you determine that, whatever method you choose, it doesn't matter. It's not complicated. Just choose a method that works. You're going to have to choose the budget type. Now, if you're like, well, Shannon, I don't know what I spend every day because I just swipe my card, I just Cash App, I use Apple Pay because I'm guilty sometimes too, then pull your bank statement. Look at your bank statement from the month before and write down what you spent and what came in, because 9 times out of 10, that's going to be the most accurate picture of what your spending is doing. Does it make sense?
It does make sense. That does
Okay.
make sense.
And then that way you don't miss anything.
Got you.
Mm-hmm.
So there's still some old school people, right? That
Mm-hmm.
right now we're in a society where going to bank, I mean you get paid, it goes directly in the bank, but there's still some people who go to the bank and physically take out all of their money, right?
Right. Mm-hmm.
How should that person budget? Like, how do they
Okay.
figure out their budget if they take out everything, get the receipt, ball it up, toss it in the trash, and going out the store?
Mm-hmm. So that type of person, the good thing about budget is there's different budget types for every personality. So for that person who likes to see it, you can do something like cash envelopes. So where you can get like a binder, and I don't know if everybody can see this. I don't know
We
if
can
you can
see it.
see or what it looks like. Okay. So this is a binder. I've tried a few of them. You have different slots for different things, and you have to know what you're putting out. But if you want to save for, let's say, your car insurance, you'll put the amount of money in for your car insurance into the car insurance envelope. Whatever you might have to spend for your rent or for your mortgage, you put in rent and mortgage calendar folder. Whatever you have to do for your tithing, for your saving, for your groceries, your gas, whatever it is. And then that's a very visual way for you to see what you're doing with your money. And here's the thing. You only use that envelope for what it says. If it says car insurance, you use it for car insurance. You don't tap into it for lunch. But if you want to go out for lunch, then make a lunch envelope. So budgets aren't restrictive. They are giving you permission to live however you want, but you just have to stick to whatever it is that you have there. Because if you don't, then that's when your budget will get out of place.
Got you. So I'm asking, and I'm kind of thinking about me, right?
Mm-hmm.
Personal. To see what your budget is, like, when should you start tracking it? Meaning, like, there's looking at your bank statements and
Mm-hmm.
seeing what you spend, but then there's not when, how long should you track it to kind of see your spending habits?
You want to know what you're doing for a month.
Okay.
So one thing that I do is I will take I want to explain how I budget, and then I want to explain a couple other budgets. Or I'm going to actually explain the different types of budgets, and then I'll explain how I do it, because
Okay.
I think this is important. So as far as budget types, you have the types of budgets that give you like a threshold or an idea how much you can spend. So you have something called the 50-30-20 budget, which says 50% of your income is going to go towards your needs. 30% is going to go to wants, and 20% is going to go towards savings or debt. Now, those numbers can slide according to what your life looks like. But the thing is you have to focus on what needs are and what wants are. Needs are things that you're going to have to live. Like, if I don't have this, I'm going to die. Or your 4 walls, or housing, shelter, food, clothing. Those are like our innate needs, okay? Wants are going to be things that just make living more comfortable. Now, in my instance, your instance, I work from home, right? I need the internet. That isn't me being like, I have to have it. I need it because I have to work. If I don't have the internet, I can't work. Right? So you have some things that are going to slip into different categories. Okay. If you are a homeowner and you're trying to use the 50-30-20 budget, you might use the 20% for saving towards your down payment. So if you make $1,000, 20% would be $200. You would save that every pay period to go towards your savings goal. That's what that would look like. $500 would go towards your needs. That's going to be things, like I said, housing, food, shelter, clothing. And then your wants are going to be the other things, like maybe a cell phone or different things of that nature. The next one would be a reverse budget, which says we're going to save our money first. We worked 80 hours this pay period, we're going to save some money for ourselves. So you would save 20%. You might choose to save 10%, but it gives you some sort of idea. And then the last kind, which is the one that I prefer, is zero-based budgeting, which is where every single dollar has a purpose. So as I gave the example earlier, your kids have field trips. They might have sports. You know you need to put that money to the side. You cover your mortgages and things of that nature. So you have a purpose for everything. If I want to spend $50 for going out, I write that on my budget. So now that we've gotten that out of the way, when I do my budget, I get like a calendar view. So 1 through 30, and I get it unmarked, right? And I write out every bill that's due so I can visually see it, because I need to know what pay periods it falls between, because sometimes it can slide. Like this month, for instance, we have 3 pay periods if you're paid every 2 weeks. Most people. I don't want to say everybody. It happens twice a year. Okay. Once I have it on my calendar, and once I write out all my expenses, I put it on my calendar so I can visually see what days it comes out. And then I go to my biweekly budget, which is where I write out the income that we're about to get for the pay period, and then what's to do between this pay period and the next one, so I can make sure that I pay everything that's on there. I have to do it that way. It seems cumbersome to somebody if they don't like to write things out, but I have to see it. That's the way that I budget. It works for me. When I'm done, I check it off and I feel fulfilled. So,
Got you.
yeah.
What's your take on writing it out versus maybe using the app? Because we have the phone at our hand all the time.
True.
What is your thoughts on those two options?
So I think as long as the app is going to work as long as you have it connected to all your bank accounts that you use, right? So it's going to track it the same way as writing it. So if you know that you're going to log in and you have it in your hand, do what works. If it works for you to log into the app and look at it, do that. But if it doesn't, don't pump fake with it. You know what I mean? You have to do what works. And that's the thing about a budget. Like, what works for me, what works for you is not going to work for everybody else.
Got you. So, in terms of writing, and let me say,
Mm-hmm.
majority of my followers are typically single women. I jumped
Mm-hmm.
into marriage. What does a single person do in terms of their budget? Single mom, single
Mm-hmm.
dad, who, just them, or with kids, like how can they stay motivated? Because, sometimes they see more month than money. So
Right.
how can they say, you know what, Kevin, I'm going to make a change today in the way I spend my money. I need to sit down and write this out. But they're alone, so they don't have anybody to motivate them. What are some things that you would tell them as a single? I know you're not single, but as a single person to kind of keep them motivated.
Well, you want to start with the goal in mind. You know what I mean? If the goal is home ownership, you're going to have something that's, you want to tie your budget or the purpose behind it to something that makes sense to you. So if it's, I need to do this because I need a home, because my child needs to be able to have a space where they are comfortable. They say, or statistically, like children who grow up in a house are more focused, and it puts them in a better position for success later in life. You can Google it, but that's what the statistic is. Okay. So you tie it to a goal. And also, it's okay to like give yourself little treats along the way. You know what I mean? It's not such a strict thing where you can't, if you know that you enjoy maybe getting a pedicure, you say, if I budget every day like this and I can put this into my budget, then this is something that I can do for myself. Maybe you might want to go to, I like, I'm an old lady. I like gardening. So I like going to arboreums and things of that nature. Maybe you might tie in going to something that you like a museum. But you have to keep your goal in mind, and you have to be easy on yourself. Another thing you can do is you can join groups. Like I know you have a group on Facebook. Find other people who are like-minded. And it might not be your regular circle. Like there's some of my friends, they do not care anything about gardening. I can't go to them about gardening. I can't talk to them about small business, but have pockets of space that works for you that can encourage you along the way. Um, Usually whatever you follow is what you'll become more like. So like I said, get in these groups, follow the YouTube channels and things of that nature that are legitimate. Okay, that are proven. Um, And then two, and this is not even just for single people, but when you make a decision to make change, you have to be willing to let things go and people, because everybody's not going to understand the vision, and you have to be okay with that.
Yeah, you do. So one of the things that I see,
Mm-hmm.
from the lending standpoint is people having the phone in your hand all day,
Mm-hmm.
having access to your phone all day, right? And being on the phone, you've got versus watching TV, you have a ton of people advertising to you. And one of the
Yeah.
biggest culprits, but they're making a mint, is TikTok Shop.
Yes.
And it's so like you can get stuff on TikTok Shop and it's fairly inexpensive.
Mm-hmm.
Maybe it's $20.
Mm-hmm.
Well, if you do that 10 times in a month, you spent $200 on something you
Mm-hmm.
may not even need it.
Right.
Because what I found, Shannon, and I'm thrifty, right?
Mm-hmm.
Sometimes I find myself looking at stuff like, man, I was getting ready to get it,
Mm-hmm.
but I didn't even know I needed this.
Mm-hmm.
Like they're creating things that are useful and you don't know that you really needed it, but is it
Mm-hmm.
worth the $20 or is the bigger goal in mind of paying down debt better? So like people get called into those impulse buying things.
Mm-hmm.
And you mentioned, treating yourself.
Mm-hmm.
How can I determine what type of budget I need to treat myself based on based on my budget? Like
Mm-hmm.
what line item can I put aside and say, "Hey, Kevin, you got $100 a month based off of what you have available to treat yourself?" Or should I not treat myself until my debts are paid down? What are your thoughts on that?
Well, I think that you should budget it.
Okay.
That's what I think. So, all right. So one, I want to touch on the impulse buys because that's two different things. So when we buy things impulsively, typically it is fulfilling that need of gratification instantly, right? So I used to be a really bad impulse buyer to the point where I would regret things as soon as I bought it. I'm like, I could probably take this back, send it back. So I go through these three steps now, and now it's a little easier for me. But the first thing is before you before you budget in treats, you want to make sure that you cover your bases. Have I paid my rent? Have I paid my car payment? Have I paid the bills, the necessities that I need to live? If you've answered yes to all of these, then you move to step two. Can I pay cash for it? Can I pay cash and or debit? Is this going to create another credit issue? Right? If again the answer is yes, I can pay cash. It's not going to create a credit issues. I paid all my bills. Then you go to the third thing, which is, will I want this equally as bad tomorrow? Like if I wait, will I still want this tomorrow? Because oftentimes it's like the shiny object. It looks really pretty. And then you get it and it's a little rusty. You know what I mean? Because of the finish that's on it. And then two, TikTok shop is cool, but you have to understand that these things are strategic. We can put information into marketing to people who have made similar purchases. This is like a thing that you can choose. Just real quick on the, you know, um, if you watch videos with a lot of stuff, they're going to start flooding you with it. Like if you type in today hoof shearing, like if you YouTube, I don't know if anybody else has ever watched the hoof shearing or got onto the shaving of the cow's hooves. I'm like, how did I get here? Right? I don't even know how I got here, but I'm so engrossed in this, right? You'll start seeing stuff like that. TikTok shop, these things, they do the same thing. They build off of a person's emotions. So a lot of times the things that we do as far as our finances are emotionally led. Um, if you find that you keep falling in the same areas financially, maybe it's spending, you have to question your past life. Like, did I grow up in poverty, or did I grow up in a situation where I felt like um, I was entitled or given things a lot? Because usually the person who feel like they grew up in poverty and the person who feels like that they had a lot kind of had the same type of thought process. I see it, I want it, it makes me feel good, I'm getting it. It doesn't matter what your finances can do. I know that was a loaded answer for such a simple question, but these are things to consider as far as impulse buying. So if you covered all your bases for your needs, then you can budget in the treat. If you haven't, then you need to go back to your budget and decide what to cut. Because when you're doing your expenses and your income, you're going to see if you spend more money or if you make more money. If you spend more money, you have to cut things or make more money. And you just said it, it's really hard right now to try to find more because of the way that the economy is. So those are some things to consider if you're in that position.
Got you. Um, hey guys, we've got Shannon for an hour, right? But she's given us great information. We also want to make sure that we answer any questions that you have
Mm-hmm.
pertaining to a budget, specifically to your needs, right? Um, so if you have a question pertaining to budgeting, pertaining to your budget, um, drop them below. We'll answer as many as we can while we have Shannon here. I definitely would advise you to contact her if you can. I think she'll have. Will you have a budgeting worksheet for us to give them everybody that
I
they can
can.
download? Okay.
I can.
Uh,
Mm-hmm.
all right. As well as maybe getting on her calendar and doing a one-on-one consultation to see if you're using, if you're budgeting right or if you have questions. I may even, I'm on the spot. I might even ask Shannon if we can do maybe a Zoom meeting where people sign up and you have a budget worksheet in front of you and we do it
Mm-hmm.
together, like me included. We
Yeah,
just spend some time and we have a tribe and we go through and we kind of put down our budget. We ask questions. It'll be a real intimate setting.
mm-hmm.
And I think we can do something like that this year sooner rather than later to give everybody a good start.
For sure.
Yep.
Yeah, for sure we can do that.
Hey, Kim. So I recently got rid of several streaming apps. Man,
Mm-hmm. They get you,
listen,
don't they?
they get you.
You're
They
like,
get
ooh.
you. So this is what I've learned from research on streaming apps. Let's take one of my favorite shows, Martin.
Mm-hmm.
Martin may be on BET Plus,
Mm-hmm.
but seasons 1 and 2 are on BET Plus because that's what they've allotted in purchase.
Mm-hmm.
Seasons 3 and 4 or 3, just like season 3 is on Prime, and that's all that they have. Season 4 might be on Netflix. So the only way to really binge Martin's show is to have access to all of those apps. And they do that strategically, so
Mm-hmm.
you have to go to those apps.
Yeah.
So I didn't learn that. I was like, why they only got like, me and my kids were looking at
Yeah.
old Steve Harvey show, and I was like, why is it only season 4 on here?
Yeah.
And then I started learning and researching, and they do that so you have to have those apps. And the cool part is, um, the apps can save you money, but the apps can cost you a lot of money. Because let's be real,
Yeah. Mm-hmm.
let's drop a one in the chat if you still have cable or some form of cable and a bunch of apps. And I'll be the first one to drop it, right?
You know what?
So
I broke up with cable like 13 years ago.
you said you got done with it?
13 years ago, I broke up with cable. Yep.
We broke up and went back together. Um, we're like it's getting higher. We dropped cable to save on spending. We picked up direct stream, which is just the app on direct TV. It goes where we go, so when we go away on vacation, we can pull it up on the TV, log in, and see our Atlanta stations, right? The Atlanta news
Mm-hmm.
and all that. However, I just got notification maybe a month ago that they're increasing. So then when I look at what I originally paid and what I pay now, it's increased by like $30 and I haven't
Mm.
gotten any more channels.
Okay, so here's the thing that I did. Like when we first went to Netflix was like $6.99 back when you had to like take the DVDs and send them back, right? Now Netflix is $22.99. I'm like, Netflix got one more price increase before I contemplate breaking up with them. I tried it for like a month. We failed. tremendously. I was like, girl, come on back. Come on back, Netflix. So what I started doing was looking for things that I already had that might have offered me something. So for instance, we have Comcast for internet only. Well, if you have internet only, one day they gave us an offer for like I think it was Peacock was included for free. So we have Peacock for free because we have Comcast. We're already paying for it. So you want to look for things that you're already paying for that are going to give you additional things or like an additional benefit. Walmart Plus. I like Walmart
Yep.
Plus. I think I like it a little bit better than Amazon Prime at this point. But Walmart Plus is great because they'll give you Paramount Plus for free.
Yep.
So you
That's
just
what I
have to look for it.
that's what I got, Paramount.
Mm-hmm.
I got Paramount Plus through my Walmart app. Um,
Mm-hmm.
my niece has like T-Mobile, and T-Mobile
Mm-hmm.
subscribers get Peacock for free.
Yeah.
Um, Somebody mentioned Rose. You're right, Rose. So, uh, when you get the Black Friday or holiday specials, like last year we got Hulu and Disney for like
Mm-hmm.
maybe 25% of the price. However, we were on a cruise during Black Friday,
Mm-hmm.
and my wife just opened up and she was like, "What's this for 10.99 from Hulu?" And
Mm-hmm.
immediately I was like, "We missed the subscription." So then it goes up. So that's how they get you, right? It- They
Mm-hmm.
bait you. They get you in with a introductory price and say, "Oh, two ninety
Yeah.
nine a month. I spend that on Chick-fil-A, more now on Chick-fil-A sandwich, out of
Mm-hmm.
sight, out of mind."
Yep.
And it can be years where you're constantly
Mm-hmm.
being charged
Mm-hmm.
and you don't even know it and you don't notice
Yeah.
it. So I think that's where the Rocket app helps, right? Because I see the commercial all
Yes.
the time. I've just
Yep.
never used it.
Yeah. It does. And I want to kind of touch on something first. I didn't realize that I was looking at the private chat. I was like, oh, nobody said anything. And I was like, wait a minute. So I just saw all the comments. So bear with me, people. Okay, my plan is to put the amount of money I paid to apps into savings account. Okay, so yes, these things are good, and I like Rocket app because it'll tell you. But more apps are doing it. Even your bank apps are starting to tell you, like you are overspending here, or you put more here than what you spent last month in this. This is something you want to look at. I have USAA. I think it's great for that. But I do want to touch on something that Kimberly is going towards, which is savings, right? So I think that what she's saying is valuable. Like she's taking something that she found savings in and she's applying it to savings because of homeownership. What I'm doing this year, I actually just ordered it because I'm a little frugal at some times and I didn't want to pay $30 for a savings challenge, but you can purchase these little saving challenge binders from off of Amazon. And I think I just got mine for like $7 because people gifted me Amazon gift cards, and it's $1,000 little saving binder, and you will put $40 in each little slot, and when it's full, you've saved $1,000, right? And my thing is when you're going to save, especially when you're trying to save for homeownership, you want to save in two different spots. You want to save for your out-of-pocket costs or earnest fees, and then you want to save for your down payment, right? If you have to. And I'm sure you guys will get into this later, so we're just going to talk about saving. When you're making your budget, you first want to make sure that you save for whatever your insurance deductible is. Because usually an accident is going to be the thing that's going to catch you off guard. Tires shouldn't be catching you off guard. Car maintenance should not be catching you off guard because if you have a car, it's your responsibility to take care of it. You're going to have to replace tires every 50, 60, 70,000 miles, depending on what type of tires you have, right? There are certain things you're going to have to do. But you want to at least save your car insurance deductible first. Once you save that, you want to choose another method of saving, whether it be in a binder, like a little savings binder, like I just explained, or whether you have direct deposit from out of your check to a bank that you don't frequent or don't easily have access to with a high interest rate. You want to just make sure that you are making a purpose to save and you understand why you're doing it, so that when you reached it, you can say, oh, I did it. And two, when you're saving for your deductible, if an accident or something happens, you don't have to try to figure out how you're going to get the money to to fix it, because the things that keeps us held down is when these things that we forget about come up, like tires.
Right. You're right.
Tires.
You're right.
So,
So, you know, in terms of like certain things that I see from the lending standpoint, because I want to give you the
mhm,
practical of what I see, and I also want to I want to give you what I see from the lending standpoint.
mhm.
The buy here, pay here, the buy here, pay later items like Klarna,
Yes.
Afterpay, they
Mhm,
seem great because you don't have to spend your money at that moment. But
mhm,
from the lending standpoint, when it comes out of your bank account on a monthly basis, we see that. So
yeah.
the underwriter says, hey, I see that Mr. Jones has 69.99 coming out once a month. There's nothing on his credit. What is that? That's the
Mhm,
question they're going to ask. Why is this going to XYZ? And then we have to come back to you as the lender and say, hey, we see you got 69.99 going out a month to ABC company. What is that? And then you
mhm,
explain to us, hey, it's where I got some tires. I didn't have the money at the time, but I'm paying them on a monthly basis to such and such.
mhm.
And if you have more than 10 months left on that, we have to count that into your debt to income ratio. 69.99 doesn't sound like a lot, but at this point in the game when we're underwriting your file, that could be the difference between you being able to purchase that home and not.
Mhm.
It could be the difference between you no longer qualifying. It could be the difference between you running out of money because, hey, the only way you qualify for this house is if you pay that bill off in full. Well, if I pay this bill off in full, it'll come from my closing costs that I don't, that I have set aside, so I'm short. So it could change things, right?
Yeah.
So with, with that being said, be mindful of those things as well. We all run into situations where we need to get something and we don't have the money at the time. I'm not saying not use it in an emergency situation, but don't let that be the way that you get through without using your credit cards. Cause see, that's the thing. You hear us talk and say, hey, don't use your credit cards for this, this, and that during the transaction, but don't use Afterpay either, because we're going to see it. Like we're going to see those items. So like just be mindful of those things. And if you do use it, have a game plan on how you're going to pay it off. Um, I want to make sure that we're mindful of you guys. And I just want to reset the room, right? We're taking the beginning of 2025 and we're starting off with Shannon Payton, who is talking to us and explaining to us how we should budget, different methods of budgeting, and why having a budget is good. We want you to start 2025 off on the right foot, and not just from January the 1st to January 5th,
Mhm.
right? We
Mhm.
want you to use this from January the 1st beyond, like constantly beyond. I've got some millionaire loan officers in my company who teach us budgeting every time we have a conference, right? Twice a year. And they review their budget once a month. When
Mm,
I say, I'm not talking about they got $1 million worth of property and they call themselves a millionaire. I'm talking about they have millions of dollars in the bank and they still budget. One guy says that if it's less than $20, he uses cash. If it costs more than $20 and he has the money in his account, he uses his credit card to get the points and he
mhm.
pays it right off as soon as it shows.
Right.
In doing that part, you see a ton of videos on that. Doing that part sounds great, but it's a science to it because if you
Yes.
don't pay it, then you're constantly building credit card debt. And the purpose is to get the benefits from the points, not to run up the credit card. Um, so Shan,
Mhm.
what can I do uh today, this moment? I get off this live.
Mhm.
What can I do today to get started? Because if you're watching the live, probably not at work. If you are, well, cool. Thank you. I appreciate it. But what can I do today to get started? Not just like me, my family. Like, what
Mhm.
can we do to get started on the budgeting piece? What's one action item that's not overwhelming that I can do today to step in the right direction?
Just look at what you have going out and coming in. Like that's the basis, because doing that single step, you'll be like, hmm. Because you might, I think, I can't remember if it was Rose or Kimberly, but somebody said, I just canceled a bunch of subscriptions. A lot of times we forget, like you just said, I did it for $1 and now it's $10.99. I don't even remember. You know what I mean? So just knowing what's going in and coming out, just do that, start there. If you're already there, then the other thing that I would say is save. Save. I can't say enough about the save and challenge bonders. I like them. I like them a lot because you can visually see it. Um, I have a little cue card of everything that you're talking about. I was like, and I wanted to like kind of piggyback on. Um, I actually have some tips here for budget success, so I'm gonna just kind of go over those. You
All
know,
right, cool.
stop your buy now, pay later. Like if you know that you got a problem with that, stop them. It's easy to get caught up in those. Um, if you find that you have, once you look at your budget and you just look at it, and you find you have more month than money. You know, get a side hustle or put a number on a skill. If you have a skill that you do well, put a number on it. Don't be afraid to do that. That'll help you make some money. Um, if you haven't used it in a month, let it go. Let these subscriptions go. If you haven't been to the gym in 3 months, you're not gonna start going this month. Nothing's gonna make you go to the gym this month because it's New Year, right? Let it go. Sell anything with a tag on it in your closet that you haven't worn for 6 months. How many of us have things that we're like, oh, I plan to wear that? When? It's never gonna happen. Let it go. We're not going to do it. And even if you can't sell it, just sometimes just having that out of your mind, it reduces the stresses that you might have. If you have bills that you feel like are high, like for instance, Comcast, they have the tendency to creep, is what I call it. So you'll have them for a while and then they'll gradually increase the bill. When they do that, don't hesitate to call and say, hey, I noticed that my bill is going up. We need to do some adjustments. Can we evaluate my bill to get a lower bill? Our bill went from, I think we dropped it like $40 just off of a phone call. It was worth the call. You know what I mean? So be willing to, look for things maybe in a non-traditional way. When you were talking about your guy with the millionaire with the credit card thing, the thing with that you're saying that you have to be strategic about is understanding the difference between your statement date and your due date. So I'm sure that he's paying his bill by his statement date, not by his due date, because whatever he's paid by the statement date is what's going to report on the due date.
That's great information to have. Great
Mm-hmm.
information to have. Um, I want to give you guys a trick too that I've done multiple times. So when you call in, and let's say you call into your cable company and you tell them that your bill's high, let's review it. Is there anything else you can do, right, to lower your bill? The person that you talk to on the phone first could potentially care less if you stay or you go,
Mm-hmm.
right? To them, they're going to get their whatever amount of dollars an hour and, go, right? So they're initially going to probably say, no, there's nothing we can do, Mr. Jefferson. Say, hey, I appreciate, and don't get nasty because, it doesn't
Mm-hmm.
help. Hey, I appreciate you helping out. Can I speak to a supervisor? Their antenna goes up. Well, why do you want to speak to the supervisor? Hey, you haven't done anything wrong. I want to speak to your supervisor because I need some more clarification, right?
Yeah.
Well, all my supervisors are busy. You'll have to wait. Cool. I'll wait for a supervisor. When you speak to the supervisor, they typically have a different mindset. of, hey, we need to try to retain this client, this customer, because it depends on our company making money, which then pays us and we don't get laid off. I know Comcast and AT&T have a retention department.
Yeah.
So they have deals that they can offer you, even for if it's for 6 months, that the upfront people can't. So they're like the back line. So if you call and ask to review your bill to see why it's higher, to see what you can do to lower your bill, and even if it's $10 a month and you're like, I'm not satisfied, ask for a supervisor or a retention department or the retention department,
Hmm.
right? And then they can offer things that you may not be able to. So, like with me, we went on a trip. I messed up in terms of my Wi Fi service on a cruise, and my bill doubled.
Hmm.
I called in that when we got to land, and the young lady said, "Hey, Mr. Jefferson, you're not going to be able to dispute it until the bill actually comes out." I said, "Cool." The bill came out. I called in, and the person went through my bill and said, "Hey, we can offer you $100 credit." And I said, "Great. I appreciate it. Can I speak to a supervisor?" I said, "Because you can see I wasn't using my phone willy nilly. Like I wasn't just using my phone. It was an honest mistake on cutting it on, and I paid dearly." They sent me to a supervisor. She went through my bill, and she gave me, I didn't get it all taken off, but the majority of it came off. If I had just settled for what that person said and went with their word, then I'd be paying a much higher bill. So like asking for someone above that person helps because they want to retain you as a customer. They want to keep you as a customer, because you can get out and leave them and go somewhere else. So they want to keep you, but there's a way to do it with tact, not
Yeah.
fussing, not angry, you know, because, I've seen where people, on the other line, I've been next to them and they got nasty and, oh man, we got disconnected. No, they hung up on you, but because you were acting up. So those are just ways to save. Um, Shannon, do you have
Hmm.
any budget challenges coming up that you're offering?
I think I'm actually going to start. I'm going to start with doing budgets every month on YouTube. It's going to be an accountability piece for me. And I'm also doing the $1,000 budget challenge with the binder. As soon as it comes in, I'm going to start. Matter of fact, I'm just waiting for it to deliver. Should be today or maybe Saturday. So we'll be doing that. And then, so yes, I do have a few of them coming up. Um, the person, she said the Spectrum has a monopoly in my area. They don't budge. They will though. If they have a retention department, they will. Especially if you're not like, I work in accounts receivable like on my regular 9 to 5. And sometimes like what you're saying is absolutely true. Like if I have a person and I work in B2B, which means business to business. So if I have a person who's being like a jerk on the phone, I'm probably a little less likely to think of, I'm going to help and do what I have to do. But I'm a little less likely to be tolerant of your foolishness, especially if you're difficult to work with. You know what I mean? I'm like, I'm tired of working with you. I'm going to go ahead and do what we got to do. But if you're kinder, then it makes it a little easier to be like, you know what? I can get you a little bit more time. Now, sometimes we just can't do what we can't do.
Right,
But being kind costs you nothing. You know what I
right,
mean? So what you're saying is absolutely true. And every company has a Spectrum included. What is it? MediaCom. They all have some sort of retention department. You just say the right thing. Maybe don't be like I'm quitting, but say, especially if you know that you've been a good customer. I'm having a hard time. This is too costly, but I need this service. They'll get you to somebody.
right. So for me, um, we had AT&T
Hmm.
for internet and cable, right? Um, AT&T, who owns DirecTV, is the one who said, "Hey, we have something through an app called Direct Stream. Uh, we own it. It's the same channels, just different numbers, and it'll help you save X amount of dollars." I was able to cut my bill in half at the time, so that was helpful. And because what they did was the person took the time to say, okay, Mr. Jefferson, what stations do you watch? So I told them what channels I watch. I said, hey, I want to make sure I have, some Christian stations in there because my grandmother watches them. And they say, okay, here's the package that looks like what you have with AT&T. Of course, at the time they give you a little, oh, well, you can get Stars for 12 months and Showtime for 3 and HBO, like they give you those little things. Um, so that was very helpful. If I had not did that, I knew about Direct TV and the antenna or the disc, but I never knew
Hmm.
about the app of Direct Stream. So, just little things like that, because a lot of these companies are merging. So in terms of spectrum, I would call back and I would just ask for a supervisor. My
Different
spectrum
person.
is small compared to the other companies. So they need to pick up a market share or retain what they have. So I would venture just to kind of take what Shannon and I told you, call back. And if they don't save you, see what other service you have in that area. Because the good part about switching, if you have to switch, is typically the introductory price and rates are better than what current customers get. So that would be something I would check into. Real quick, man, Kim, you got the game on lock. She says, I own a small home daycare. My side hustle is babysitting my clients' kids for date nights. I charge $15 per hour and I have filled my savings both with that money. That is smart
Clutch. Yeah.
because we moved to Georgia and we don't really have family that's in proximity to watch our kids. We've got to go. Our in-laws would do it, but who wants to drive 2 hours there, 2 hours back to do it, right? If they can't stay, right? So like we don't really have anyone that could watch our kids. Like so we would take advantage of when they were in childcare around definitely around Christmas time, they would have a date night so parents could go shop. When the boys did karate, they offer date night like once a month. And it's not $15 an hour, but it's like $40. And we got 2 kids, so it cost us $80. But that was an opportunity for me and my wife to get away and just have us time. So that's definitely smart, Kim. And you using that for your savings as opposed to spending more money because you're making more. So that's what it's all about. Also, when you pick up a side hustle, when you pick up or you start a business or you pick up a second job, the goal is to use that opportunity to help you and not to spend more money.
Yeah.
So I see people who have multiple jobs and their lifestyle is based off of 2 jobs. I see people who have multiple jobs or a job in a business, and you can see where they take that money from that job or that business and save or be able to pay things down. So that's definitely the way to go.
Yeah,
Avoiding the
that's a it typo. I'm telling you, man, YouTube gets me. But avoiding the lifestyle creep. That's what
oh,
it is.
gotcha.
Like it's easy for us to start to absorb. Like when we find, especially if we get like an increase of income, we absorb it immediately. And like one thing that I'm trying to work on, true story, is I am trying to work on having us live off my husband's income and then using my income exclusively for like debt reduction and savings.
That's smart. That's smart. Um,
Yeah.
Hey guys, you guys have been great. We've had a lot of comments. Before we let Shannon skedaddle on out, is there anyone who has any questions for me or for Shannon pertaining to debt? Or Shannon, if you got a little bit more time, we can go until the next speaker arrives. It's up to you.
I mean, if you want to, I know we did the budget, but whatever you want to talk about, if you want to
Got you.
talk about,
All right. So not only is Shannon my budget person, she's also very knowledgeable in credit. Very knowledgeable in credit. So while we have a little bit of time, um, in terms of credit, where you want to start? We,
I feel like there's a lot of information out there about credit, and I just like to ask like whatever questions people have, because I feel like it seems like this group it has a foundation. So, what questions do they have about credit is what I'd like to extend, because something about this year too is I want to be more of service to people. You know what I mean? I don't want everything to be intentionally about a benefit for me. You know what I mean? I really want to help more people where they need it. So
right.
I'll pose a question to the group. What questions do you have about credit that maybe you were like, I don't know. This seems odd. Like, I don't know if this is legitimate or not. Because I'm
Got you.
going to do my best to give you the best answer that I can. And if I don't know, then I'll tell you that too.
Got you. So let me give you a scenario. So maybe this will help them with
Mm-hmm.
some questions. Um, I'm looking at my credit,
Mm-hmm.
and I have a $500 Comcast bill that dropped
Mm-hmm.
my score. What happens if I pay that bill? Does my
Collections?
score go up? Yes, in collections. Does my
It's
score
gonna
go up? No.
No. And the thing is anything that's in collections, like I tell people when you're looking at your credit report, if you are wanting to know like what's going on, or if you think you have some issues with your credit report, you want to first make sure that you're pulling your credit from all three places and make sure that you're seeing everything. I recommend creditscorego.com. I like it because it offers you the opportunity to do free credit repair, but it also gives you a credit report. Okay. So if you pay a collection, it's typically not going to improve your score because the damage was done by reporting the collection, not the payment of the collection. Right. But you
Mm,
have to pay the collection because the lender's going to want to see it paid. Right. Because you can't owe people while you're trying to get money. That defeats the purpose of trying to get money. Right. So that's
right.
something that you want to focus on with that.
Kim says, hold on, let me get to it.
How many credit cards should I have?
Yep. How many credit cards should I have?
I say 3 to 5. This is from a credit professional position. Kevin could vary, but you'll tell me if anything's changed. I say 3 to 5 because whenever you're trying to apply for something, you want to have a thicker credit profile, right? Which means 3 to 5 lines of credit that show that you know how to substantially use it. Okay. It doesn't mean that you have to use all of them at the same time. It just means that you need 3 to 5 lines of credit: mortgage, car, 3 credit cards. If you have that, typically that'll help you with getting a decent credit score if you pay them like you should and if you use them properly. Lenders need to see, they can see it at 6 months, but I tell people you want to age it for 2 years because that's going to put you in a better position.
Right. So from the lender standpoint, couple things. We have options in terms of being able to purchase a home if you don't have a credit score at all, right? We have the option of FHA as well as VA, which allows for you to establish three credit lines. Non-traditional credit lines. Non-traditional credit lines would be what some of the things we spoke about. Your
Right.
Comcast bill, showing that
Mm-hmm.
you've paid on time for the last 12 months, right? Your lease, if you currently leasing your apartment or leasing a home and you've made 12 on-time payments and not been at least 30 days late in the
Mm-hmm.
last 12 months, that's an option. When it's VA, they look at a 24-month history. So in the last 24 months, have you been late on your lease agreement? And we get that verified through a third party. So it's you can't bring us a form from your uncle who filled it out for you, as well as we look at like utilities. We can look at car insurance. We can look at Netflix bills. Some three forms showing, hey, over the last 12 months, Kevin has not been late 30 days on these items, and we get them verified, right?
Mm-hmm.
Now, if you do have a credit score, we FHA is a little bit more lenient, right, in terms of credit history. When you're talking about conventional financing, that's when you need to have an established profile, right? You need to have a history of having credit over a specific period of time, And if you don't have history of having credit over a specific period of time to get conventional financing, the only other way to compensate for that is to have some assets. When I
Hmm.
say assets, money and savings, stocks, IRAs, 401k, something that's liquid to say, hey, after I pay my down payment and closing costs, I have reserves available, and that makes you a stronger borrower. Um, I've seen people who've had 660 credit scores and assets get approved with conventional, and I've seen people who've had 700 credit scores and no money get turned down because the
Hmm.
score is one thing. Do you have money also? So those are just little things that can help. In terms of the biggest mistake that I see people make when trying to establish credit is they go buy a car.
Mm.
And when you go buy a car, yes, that's a trade line. And now you're just like, oh, well, if I can afford this car, I should be able to afford a house. The problem is, if you didn't
Right.
have a car payment before, and now you have a $600 car payment,
It's
that's
your
five
house.
or $600 less of a
Hmm.
house that you can buy, which is a
Yep.
significant amount of money.
I've never seen in person, and I know you. This is my last piece, and I know we're about to go to your next speaker. I tell people you can always get a car after you buy a house, but too many times I have either had deals fall or people not be able to qualify because of a car. So get the house, then get the car.
Yeah, gotcha. Cool. Well, Shannon, I definitely appreciate you coming on, joining us. We'll definitely do some more stuff throughout the year. Hey
Hmm.
guys, Shannon's contact information will be below. Shannon, if you can put in the chat, if you can put in the comment section, not the private chat, if you can put
Yes.
your YouTube channel so they can follow you. Uh, follow her for great information. What I will say is she's all content. It's no fluff. It's no get rich quick or scheme. It's hey, these are the things that we need to do to position ourselves to be in a better place.
Yeah, I'm in here. It's being broke sucks. My name is Shannon
Gotcha.
Payton on there, but being broke sucks is how you can find me. Thank you. Thanks, you guys,
Oh,
for having me. I appreciate it. It's always a pleasure.
all right, Shan. Thank you.
Have a good one.
All right, bye bye. So hey guys, hopefully guys and gals, hopefully you guys gained some valuable information from Shannon and I discussion on budgeting. Grab yourself a sip of water. We have another guest coming on. Her name is Kiana Stewart. She is actually she's an insurance agency owner. And she's going to discuss something about homeowners insurance. When I say something, so right now not only are interest rates still on the higher side, we're also seeing homeowners insurance increasing as well as property taxes increasing. So those are main components of your mortgage payment. You've got principal and interest, taxes, homeowners insurance, mortgage insurance. So those are the major components of your payment. What I want to get from Kiana is she's going to talk to us about how we could potentially save on our insurance and how they look at how they're going to insure you or your property. So as we bring her to the stage, you're bringing on Miss Kiana Stewart. You're on mute, Kiana.
Thank you. Good morning, good morning, good morning, and Happy New Year. Happy 2025.
Yeah, happy 2025 to you too. We appreciate it. Appreciate it.
Well, it's bright and early and so for anybody else who's here to ready to see how they can align their goals with actions to get them towards those their goals, I'm here for it.
We're, did you fall?
I didn't. My computer, my my phone did. I did not. I
Cool,
logged in on
cool.
my phone, but so yeah.
Gotcha. So tell us a little bit about I gave you an introduction, but tell us a little about who you are and what you do.
Full name Kiana Stewart. associated with Allstate. So I have an Allstate agency, one located in Midtown, and the other are in our primary agency located in Tucker. I've been with Allstate now for 2025. I will hit my 13-year mark. So I guess I can say that, I know a little something about insurance at this point. On the service staff, we have a service and a sales staff that will help and assist customers. But in terms of homeowners insurance and new homeowners insurance, I think that I like that you're having this so one, people can ask questions because by the time they go through the process of getting the loan and ready to close, there's so many questions around every single thing that they pick and choose. And when it comes to their auto, they think, oh, I have auto insurance, homeowners insurance will be just the same. And I don't know how many new homeowners can completely explain all of the coverages that are associated with their home. So I'm glad that you're having this morning.
Thank you, thank you. Yeah, so Keon and I, we do business together. She insures my home and my auto as well. Um, and I send clients to her, and sometimes they can help. Sometimes her helping them saying, "Hey, is we can't help." So, when you're in that situation, you don't want to get blindsided as to why your insurance is so high. So, going into the process, as she mentioned, maybe there are some things that you can do to, position yourself better. So, Kiana, if I am a first-time home buyer and I'm looking to purchase a home, how do they even figure out what my insurance is going to be on my house on 123 Main Street?
So we go through an application and underwriting process just like you would for the actual home. And in terms of the applicating and underwriting process, on the application, we pull your simple information, your name, address, current address, date of birth, and we're also looking for who all would be, how many members would you have in the household, and we look at that just so we can make sure that we have enough of a certain type of coverage. And in addition to that, we're looking at factors of the home that you're purchasing. If it's a new home, then that pretty much tells us everything we need to know. We know it's a new home. If it's not a new home, one of the questions you'll see us circle back and ask is, what is the age of the roof? When was the last time the roof was replaced? Not repaired, but replaced. Because that is one of the more significant claims that a homeowner can have. And, it happens in Georgia as well. Georgia gets a lot, I like to say that Georgia is the Seattle of the South. So Georgia gets a lot of rains. And so there's natural degradation to the roof over time. Roofs do not last a lifetime. They do need to be replaced. So that's the reason why we ask that, so we can start to assess. And I say we, I'm just saying the insurance industry in general can assess, how much wear and tear has already happened to the roof, and to start to determine what's the likelihood of this roof surviving the next year, and what does that look like. The main thing, the other thing too, though, is if you're buying a house, what we insure, what insurance companies insure, is the replacement cost of your house. So my grandmother's house, when it was built in the 1940s, cost a certain amount of money. In 2025, you cannot rebuild that house for the same amount. I think we all understand that. So in particular with Allstate, and again, this is going to be with all insurance companies. The percentages may change, but in the state of Georgia, which we go under the Georgia rules and regulations, it will be this. So pretty much when we insure a house, we meaning Allstate corporate, they're putting 60% of the replacement costs in a corporate checking account, if you will, in the event that that house burns down overnight. And so that's one of the ways that we look at it, and that's why we have to do the replacement costs, because insurance is about the what if, and we never know what's going to happen. But that is a way of telling the state, of telling the government, of even telling investors that we can provide coverage for this house if something happens. So often what I get is, oh, I'm only paying $300,000 for this house. Why is it insured for $400,000? That's because the market price of $300,000 is exactly that. It's what you and the seller, or you and the seller agreed to purchase and sell the house for, but it's not the same amount that it would cost to rebuild the house. In addition to that rebuild cost, you'll see that impact your premiums on an annual base, because after 3 years, it may cost a different amount to rebuild that same house. But that's what we're looking at. So we're asking for, that's why we're asking, that's another reason why we're asking for factors for the age of the roof. We're determining, is it a brick? If it's four sides brick, um, two sides brick, how much brick is it? 30%, 50%? We're looking at all of the components that it takes to replace the house. And a lot of lenders have started to request and require that information, because they want to make sure that as they are securing the loan to that home, that if something does happen, that that's another avenue for them to secure their funds as well.
Hey, right there. Got a question for you.
Yes. I think I know what it will be, but yes.
When something happens to your home, who should I call first?
You should definitely call your local office. You should call and speak to someone in the office. And I say that because if you call 1-800 Allstate, if you call 1-800 Progressive, 1-800 Geico, 1-800 State Farm. Now, primarily State Farm and Allstate are going to be the two companies that you can reach an agent with. You should call them, um, to see if that's something that to give, so that they can give you insight into what the claims process would look like. And what I mean by that, there are clearly certain things that you have to file a claim for. Okay. There are other things like a squirrel getting in your attic and eating away at your electricity, or eating something that you may file a claim for and find out that rodent coverage is not covered. And I hear all the time, well, my neighbor, they paid for it for my neighbor. Your neighbor could have had their policy for 30 years and the insurance company no longer offers that policy, so your policy may not cover it. But if you call the 1-800 number and you speak to someone to claims, welcome to the claims process. You have just filed a claim. Intentional or unintentional, you have just filed a claim.
So how does
And
that affect my insurability?
so, in terms of your insurability, if you are, so as you go to your next home quote, one of the things that they're pulling back, along with what we do is call a soft credit pool. We don't see your score. We actually use a 2-digit score with Allstate. And as you know, with FICO, it's a 3-digit score. So there's no way to translate. Um, the claim will show up. From an underwriting perspective, underwriting changes, and it could be that if the insurance score, the 2-digit score, is, let's say, between 1 and 10, they're allowed 3 claims. But if it's between 10 and 20, they're allowed 2 claims. And anything over 21, they may be allowed 1 claim. And when you get to a 40 and a 50, they're allowed 0 claims. I see a lot of times where a customer will have a 0 paid out claim because they call to ask a question. And when you are talking about, if you say, hey, I want to know if this is covered under claim, should I file a claim? They are going to transfer you to the, and if you're talking to the 1-800 number, they will transfer you to the claims department. And the claims department will take your information. They may have someone to call you back, and that someone may be an adjuster. They may go through the process and the claim is denied. And the claim could be denied just because it's below it falls within your deductible. And so the insurance company may not pay out anything. If you have a $5,000 deductible and it is quote unquote a valid claim, but it's only projected to cost $3,000 to fix that, that's a denied claim because it's below your deductible. And that your deductible, as you know, is the amount that you pay before the insurance company starts to pay anything.
Wow.
So your amount of claims can impact, from an underwriting perspective, it can impact whether we are able to help you or not. So that's another way to determine, or that's another example of how either we can or cannot help you. So it's not always driven by price. Oh, well, they can't get me to a price that I'm comfortable with, which is where a lot of people start out looking for a insurance quote or insurance policy for homeowners and for auto. But when it's time for you to file a claim, all of that goes out of the window, right? You want to have all the wells and whistles. You want the bells and whistles. You want to have everything that can potentially be covered under your policy. So in the office, we're trying to ride both of those because we do understand that in the event that something happens, and trust me, we've seen things happen, that you are properly covered. And the state of Georgia and most states will, there are certain things that are automatically included on a homeowner's policy. So those basic things you will have coverage for. Fire, if your house burns down, that's pretty much automatically covered on most standard homeowners policies. And I have to clear that because you could have a non-standard policy, but on most standard homeowners policies that will be there. And of course, Allstate, we offer standard policies. So you filing a claim and not completely understanding if it is a claim that is covered, and if we do a quote and it comes back that there was a claim filed, we see two things. We see we see several things, but the date, the type of claim, a fire loss, a water loss, a theft, and the amount of the claim. And so that's just insurance companies sharing information between each other. And so sometimes the amount of claims that you have and the type of claim that you have can prevent you from qualifying for a home policy. And that's just associated with the level of risk that the insurance company would like to take. So, Kevin, on your side, when you guys are sending your stuff to the underwriter from a credit standpoint is associating how much risk do we want to take for this loan? Do they have enough income to cover all of their debts? And if not, the underwriter may reject it to say, hey, we're not willing to take that risk. So from an insurance underwriting standpoint, our underwriters are doing the same thing, but they're looking at claims and also that score that we call an insurance score, which your credit is a component of it as well.
Got you. So Kimberly has a question. Is it
Yes.
possible to know exactly what coverage you have before an incident happens? I don't understand why so many people are surprised by what is covered and what is not.
Yes, it's possible. By law, we are required, every insurance company is required to mail you or to give you access to what your coverage is. So when you do an Allstate policy, if you go online, because that's where society is going, 2025, welcome to the online world, you will see your first set of documents outlays every single thing in your homeowner's policy. And it could be 20 pages, it can be 40 pages. So yes, you know that, but I think sometimes it comes down to the how it happened. Case in point, what I get all the time is, hey, I have water all over my floor, and I had a pipe to burst and I want to know if it's covered. The moment they told me it was a pipe burst, yes, it's covered. But if they say I have a leaking pipe, that's not covered. So the damage is still there. Technically, por- a portion of how it happened is still there, but the initial onset is the reason why the claim will be denied. So, Kimberly, that's a great question. Let me walk you through that and clear that up a little bit further. So, again, if there's water damage to the floor, whether it's a pipe burst or a pipe leak, you still have water damage to the floor, right? The pipe burst is sudden and accidental, and that's what insurance covers, things that are sudden and accidental, right? Think about it. If you take your car and you go and run your car into a pole, somebody may call the police, but the insurance company is not necessarily going to fix that. But if your car hits that pole because you lost control of the brake or something, that's sudden and accidental. That will be covered. Same thing on your home. The pipe burst is sudden and accidental. The leak, that leak has been there for a while. By the time you have damage to your floor, there's so much water that has pooled from somewhere, and now it's damaged the floor. And that's how you even noticed it, is because you noticed a spot in the floor that was small at first. It didn't catch your attention, and eventually it got large enough to where it did catch your attention. That's sudden and accident. That's not sudden and accidental. The leak is not. So that's an example of, you have a homeowner, and it doesn't have to be a new homeowner. You have someone who has the same outcome on their side. They have a damaged floor, but how it happened will determine whether it's covered or not. So, and then too, with that, again, unless someone out here has like an 80-year-old policy or 90-year-old policy, Under the current policies, and just because I have not seen every single policy that's out there, but for all state, we don't cover the plumbing work. So, we'll fix the floor, we'll fix the wall, we'll cover any damaged furniture that may be to the house in the event that the couch set completely on the floor and it's now damaged. All of that will be covered, but the pipe work is never covered. And if you just think about the history of pipes in PVC versus lead, and a lot of that, kind of goes back to that as well. So that's an example of how a person would not know if something is covered. So technically, a pipe burst is covered, a pipe leak is not covered. And so one simple word can make that covered or not. And then someone who's listening to this will say, okay, well, I know in the future, if this ever happens to me, I will tell the insurance company it was a pipe burst. Okay. But of course, there's enough technology and to know whether it's a pipe burst or not. Pipe burst, the water will be everywhere, and there's a lot of water at one time. A pipe leak, slow water, whether it's trickling or whether it's pouring, but not the same force, and it will pool at one place more than likely first before it's noticed, and the pipe break will be different, right? And sometimes, unfortunately, there are times, depending on, I'm not a handyman by no means, right? I can change my light bulb. I can change my filter, which I have to do now that we've hit January 1st, 2025. But anything other than that, I need to call my handyman to kind of give me some ideas about what I'm looking at. So you will have some situations where some customers just call and say, hey, I want to see if it's covered under insurance. And I give them guidance to say, have you reached out to receive 3 quotes? Depending on what they're telling me, I say, I may not be sure, but it sounds like this may be something that's covered under your deductible, and you may not have to file a claim. This falls under in your deductible, and you may not have to file a claim. And some people, they're like, I don't want to go through that. I just want to see if it's covered or not. And if so that I can start doing work. Now, what happens with that is, just because it may be covered, but now you have to go find somebody to do the work. So you might as well get 3 quotes in the beginning anyway. And I say 3 quotes. I did have to have some work done to my place. One quote was 9,000, and another quote was 12,000. And one quote was so ridiculous. I was just like, just tell me you don't want to do the work because there's no way that, the two that was 9 and 12, I can live with that, right? And I have to compare what they are going to do it, the timelines, all of that, the experience, all of that. But the third one, I was just like, yeah, so I knew automatically versus if I had just called one person. By getting 3 quotes, it allows you to become educated on the process, and you can see what's in one quote and what may be missing in another quote and start asking questions. Does that answer your question, Kimberly?
He has another, I guess,
Okay.
something to piggyback off it. So if an
Mhm.
inspector misses a leaky pipe and you purchase the house, you are not covered.
You're not, but let me tell you, it would be highly. Well, a leaky pipe. Okay, a leaky pipe. So I was about to say it would be highly impossible for an inspector to miss a leaking pipe. And let me tell you why. They do go in and they run water. And Kevin, you can speak more to this more than I can because you see more inspections than I do. But I just remember, what you get is you get a 30-page inspection report, and there are things he's going to make a notation of every single thing, and there's going to be certain things that he call out. So I remember when I got my place, one of the first things he did when he came in was turn on the heat and turn on the water, whether it's heat or AC, because he needed those to run for a while so that he can do his assessment. To answer your question simply, though, if an inspector misses it, no, you are not covered. Here's the thing with that, though, right? At the time that the inspector did it, the pipe could have been frail and fragile after you purchase a home 3 months later, even 6 months later, the pipe has worsened in condition. So that could be a situation. But, sometimes, being a homeowner does come with some surprises. And I don't necessarily know anyone, including someone who's purchased a brand new home, because you should still do an inspection on a brand new home, who hasn't had a lovely homeowner surprise. For a while, I felt like I wasn't welcome to a new city until I got a ticket. because I just felt like every time I moved, somehow, miraculously, I would get a ticket. Um, and so sometimes with homes, there are going to be things that, unfortunately, that are discovered later that may not necessarily have come out in the process, and it may not have anything to do with the inspector. It could be that it's just normal wear and tear.
Right. So, from my standpoint, so Kiana's right. It's going to be tough that a home inspector misses a leaky pipe. Um, but what happens is you got to remember, aside from you and the realtor, the next person, once you're under contract, that sees the house is the home inspector. Typically, a transaction is over the course of, let's say, 30 days. So if it's vacant and no one's in the house, the home inspector can only go based off what he or she sees at that time. The only way to figure out if you're going to have any additional issues, and most people don't do it, is to get an inspection at the end as well to make sure it's okay. Now, you have a buffer. The buffer is the home inspector takes a look at the house to make sure it's habitable. Let me tell you something about home inspectors. They will find stuff that you wouldn't even think of, right? To make sure they've done a thorough job on the house. Sometimes they go a little too far. Doorknob in the back bathroom is loose. Like that's not a major defect. So when you get a home inspection, you got major defects, minor defects. Um, okay, home inspector's done his or her part, and they've given you what they've seen. Now you have the appraiser who goes in. If you get FHA financing, VA, USDA financing, they do a safety check. Are there any leaking pipes? Are there any cracks in the foundation? Are there any cracks in the wall? Does the electrical sockets work? Are there GFI switches in the proper places? The life of the roof. There's a they're the next person who sees it and inspects it. If there's something wrong, then they notate it. And if the appraiser notates it and it's not fixed, you can't purchase until it's been remedied, which means it's been fixed, right? Now, I've had clients, the HVAC system went out. It was working when the home inspector was there. It was working when the appraiser went there, but it died. So it was at the responsibility of the borrower to replace it or get it repaired. Is that something that you want to do? Nobody wants to replace, HVAC unit as soon as you get in the house. However, those things happen because we don't know when it could go out. Like you could have lived there for a month and it worked, and then all of a sudden it stops working. So, you know, just it kind of goes back to the beginning conversation that we had with Shannon of budgeting for those items, like immediately begin to budget because now you no longer have um, the landlord to call if something breaks. You're now the person responsible for fixing those things. So, a lot of people, like when I talk the first time home buyers, what you ask, they're scared to buy a house because they don't want to fix anything. They're used to somebody else taking care of it. But to me, the risk, the reward outweighs that little risk. It now, if something tears up every month, then you brought a bad house. But for the most part, over the course of time, things are going to tear, whether it's new construction or whether it's an existing home. But you just have to be prepared for it in those cases. Hopefully that answered your question. Um, Na- Natasha made a great point, and she said most of the time when people purchase homes, she thinks they get the least amount of coverages, which is not always the best thing because then um, you find yourself in a pickle. If you get the cheapest insurance out there, you're not going to get the best coverage. Am I right or wrong?
Yes and no. And let me tell you why I say yes and no. So let's cover the no factor first. Again, there are certain coverages that on a standard homeowner's policy, the state of Georgia requires anyone that's writing a standard homeowner's policy to have. So you will have the coverages. There are optional coverages, right? Water backup is an optional coverage. Um, let's say the amount that you have covered for jewelry is an optional coverage. The base coverage is no more than $1,000 per piece, maxed out at $5,000. But if someone got some beautiful earrings that cost $5,000 this Christmas, you need to have your appraisal sent to the insurance company so that they can have proof that you own those and that the value of those, and they can increase that coverage. You don't want to find out when you lose one down the drain as you're putting it on one morning or taking it off one morning, that your policy only covers up to $1,000 when it comes to jewelry. So the reason why I say no, most coverages will be there. Basic coverages, it's the amount in coverage that you have, right? So even in that situation, so the situation with the earrings and it's covered at $1,000, unless you increase the amount. If you have $1,000 deductible, there's nothing that the insurance company will do for you, right? Because you have chosen that deductible amount to say, hey, this is the responsibility that I want to take on my side. And when doing that, you do get a lower premium for that. So the higher your deductible, the lower your premium. The yes portion of that, Natasha, is yeah, people are calling, back in the day, there used to be someone who would advertise to say, give us 15 minutes, we'll save you X amount of percentage. And so, can you always ask all the questions that you need about your largest purchase in life? Not all the time, especially if you're new. I wouldn't necessarily want 15 minutes, right? Um, so you are correct. People are sometimes rushing through the process and they always don't get all of they're looking for a cheap policy. So they're just like, hey, just give me the bare minimum, whatever I need to get. Right. And when you do that, there are certain coverages that will be on the policies, but the amount and how you are covered will be impacted. And so there are certain times when someone may choose a certain deductible so that they can have a certain premium, right? So let's say we go from a $2,500 deductible to a $5,000 deductible. And keep in mind, I said that the higher your deductible, the lower your premium, right? So doubling your deductible could save you $500, right, on an annual basis in your premium. And that may be what you need in order to get through your process with your loan officer. And when I see individuals making those decisions, I say, okay, we both need to talk to each other when we're on the other side, because now you need to ask yourself, are you comfortable with this amount? And so that's another example of how the coverage is there, but because they are looking for a cheap policy, we've increased the deductible, maybe because we had to. We had to get we needed to, get within the, what do you guys call it? The debt to income is a debt to income ratio. So maybe you had to, but that doesn't mean that has to stay there, right? So you next year you can be doing an annual insurance review. You have the option of changing that deductible. Next month you can call back and say, "Hey, I've closed. I still have some additional information, additional questions about my policy." Do an insurance review, and you could change it then as well. So I do think that you are right, Natasha. But again, what we do is we're in a regulated industry. So, for example, anytime there's a rate increase, your governor knows and your insurance commissioner who is voted on knows before you do. They approve all rate increases.
Wow. Wow. So you should be calling them, huh? Instead of the insurance agent.
Well, well, I'm not. You can call us, and for me, you can call me, and I'll listen to you vent because I understand, right? I mentioned in a staff meeting last week, when you mess with people's money, you know what happens, right? And so, if they're being surprised that oh well, I used to pay 270 for my auto insurance, and now it's 330. To me, I look at that as messing with somebody's money, especially if they're on automatic with automatic withdrawal, right? But I've thought about creating a page where you can see all of the changes for the different insurance companies, because it's not just Allstate. Every single insurance company have to file the rate increase. And if there's a rating, let's say if there's a rate increase in January, the state received that more than, with the minimum, I think, of 3 months ago, right? So insurance agencies or insurance companies will target, let's say, a lead time of 6 months, but I think the minimum is 3 months. Don't quote me on the lead time, but my point is that the state has already seen it, reviewed it, and approved it, Every rate increase has to go through the insurance commissioner. And keep in mind, though, typically the reason why there are rate increases is not necessarily so the company can make more money. It's so that we can make sure that the claims and projected claims will be paid out.
Okay. So we got a couple questions, Kiana.
Hmm.
Let me go up to Blair. Um, are the things covered slash not covered, pipe breaks, plumbing, etc., determined by each insurance company, or is it an industry standard? For context, in Florida, and our insurance options are limited. I think you
I
answered part of it, but
Well, I love her question because I don't know if you can put it. Well, I don't know if you can put
I
it
can put
back,
it
but
back.
but she asked to kind of give guidance. She says, "Are they determined by each insurance company?" But she also says, for context, I'm in Florida and our insurance options are limited. So it's a combination. It's determined by state, and you are heavily impacted by that. Florida and California are two states, and especially your state. You can speak to this where a lot of major insurance companies have pulled out of the state of Florida. Okay. And you guys are limited when it comes to homes, I think, to citizens. And that is a basic, very basic policy. It is probably more basic than quote unquote the standard policy. So, in order to build it up where it should be, you may, or where what we would consider a standard policy, you may have to add additional things. But with that being said, I'm not licensed in the state of Florida. I'm just trying to take an educated guess about that. Being in the industry, I do understand what's happening in Florida. So your state can impact some things, and when I say your state, so the companies that pulled out, State Farm, Allstate, those companies decided to pull out on their own, right? They were not kicked out. Okay, think about it. Companies would want to stay in a state where they can make money, but if they cannot make money, if the state will not allow them to take a rate increase, yes, they will leave. Okay. So the first part of your question is it determined by each insurance company? So again, in the state of Georgia, a standard homeowners policy will have certain, it doesn't matter whether you're Progressive, Geico, and Progressive and Geico don't do homeowners insurance. They sub it out to someone else. So whether it's Travelers, State Farm, or Allstate, there's going to be certain coverages that are automatically including on the standard policy because the law, the insurance commissioner, years ago, hundreds of years ago, has said this is what it will look like. So everybody has come to an agreement with that. It's always those optional coverages. A company may not offer that coverage. That is possible. If you are a first time or a new homeowner, that's one of the reasons why Kevin has established relationships with people because we understand that as a new homeowner, you may not know everything, and so in terms of what his suite of loans, I guess, his options that he has for loans, conventional versus FHA, there are also certain criteria that they each require. And so, as he's gone through his process and he's taken his clients through the process, he may say, "Hey, I know that FHA requires or does not accept a $5,000 deductible, for example. Does FHA accept a $5,000 deductible, Kevin?"
They will. So typically when I call you and I say, "Hey, we can't go over X amount of dollars," that's because it's a down payment assistance program that doesn't want the borrower to run into that issue.
Okay, so the DCA program, so he knows that again. But as I was saying, the different programs with the different options that he has in order to get you to the closing table, they may have certain stipulations and certain requirements as well. So as he's been through this process several times over, and he's established and he's run into roadblocks, he knows where to direct his clients so that they can have the best chance of moving on to the next box. And in addition to that, so for example, if you have an FHA loan, and I've seen this, I think if you have an FHA loan, if you have more than 4 steps, they require you to now have railings, right? So there's certain things that an FHA may ask you to fix that maybe a conventional, when the inspection comes back, may not per se ask you to fix. And the same thing with an insurance company when you do the inspection, right? 2 steps may be okay. 4 steps we require a railing, but the house that you're looking to purchase does not have that railing. That's a safety factor. That's a claims factor. So it's a combination of both. You are in probably the hard, well, yeah, you are in undoubtedly the hardest hit state when it comes to insurance. Just because it's a hurricane prone state, so every year there will be rate increases, right? Every year, the insurance company is paying out billions of dollars. And if there cannot be an agreement between the insurance commissioner and the insurance companies, don't have to provide a service, right? Delta can stop flying to Miami at any time they choose to. They can cut that route out. But as long as they're making money on that route, they will continue to do that. Um, so your state has all types of things going on with it, and everybody having to get a new policy who is a current homeowner, and pretty much their only option is citizens. But you can have some insurance companies that may not offer certain coverages, but for the most part that gets into, and I'm probably thinking more too broad, too general, because for a homeowner's policy, you stick with the standard companies that you typically see doing commercials. You should be fine.
Gotcha. All right, we got a question from Clark. Yes, I think this is a real good one. Clark says, "Do you think someone should put a claim on a roof to get it replaced prior to selling it, or should they get a quote and pay out of pocket, especially if they're trying to buy another house?"
Oh, that's a loaded question. So first off, I would say you should get like, why are you automatically getting a new roof replaced? Like, do you know that it has leaks is what I would say, because if it's just due to age, right? Then you can go and put a claim in, because the if you really think about shingles, they have that granular stuff. Like if you took your hand and if you rubbed it enough, those grains will start to come up and come apart. Those fall apart, or they fall from the shingle naturally due to age. And so the thickness of that shingle will tell the inspector, will tell a roofer how old that roof is. And so most of the roof claims are denied because of age, because of normal wear and tear. Someone may say, "Hey, I have a leak. This needs to be covered." Well, if you have a leak because the roof is 20 years old, that doesn't necessarily mean that it has to be covered, because the reason why you have a leak is because it's 20 years old. So do you think someone should put in a claim on a roof to get it replaced prior to selling it? It goes back to, why are you automatically looking to have the insurance company to replace it? Like, I feel like I need more information there. So if you know that it has, again, if it's just because it's old, I would kind of get quotes. I would kind of get quotes with your three roofers or with someone because when you call to make that claim, they're going to ask you, what's going on, and you have to say, "Oh, well, this is where the roof is damaged," and they're going to ask you, "When did it happen?" Right? And so even if you say, "Well, you noticed it on X date," if you say it's weather related, one of the things that I know the insurance claim has to do for roof is they have to go and verify that there was heavy rains. Like if someone says, "Oh, as a result of a storm," that adjuster has to go and verify that there was indeed a storm in your area on the day that you said that it was. So I think to completely answer that question, you would only file a claim if you have something that is worthy of filing a claim for. Because in terms of the insurance company fixing it, then I have to ask you also, what's your deductible? If you have a $2,500 deductible, because what they don't do now is they do not automatically, and this is going to help answer your question, insurance companies do not automatically give you a brand new roof. Those were in the days of my grandma, right? You had this one section over here that was bad, new roof. But then roofers kind of figured that out, and then they wanted everybody to have a new roof, Oprah style. You get a new roof, you get a new roof. That's why all the neighbors were getting new roofs. So insurance companies had to say, "Nope, why are we replacing 100% of the roof when only 20% of the roof is damaged?" Okay. So, yeah, should they get a quote and pay out of pocket? It depends on, if you have a valid claim, then I think we all know the answer to that. But if it's just because it's old, you run the risk of, if you're selling your house, are you selling and repurchasing somewhere else? And now when you file this claim, your rates are going to be higher on your new home because you filed this claim.
So that was part two to his question. He said, I know the insurance agent I chat with says the claims can follow you possibly 3 to 5 years.
Oh, they will definitely follow you at a minimum of three. So there is no possibly. They will definitely do that. And so, because sometimes we will see that a renter had a claim, thinking they're renting may not necessarily be a claim, but it could have been it could have been a theft claim, right? So, that theft claim shows up, and now depending on what your score is, we're starting to chip away at how many, what are the other factors in this process that the underwriter is looking at. Um, and so that the question that's a good question, but needs details. And what I mean by that is too broad for me to kind of give even guidance beyond what I already have. Because again, what's the deductible, right? How old is the roof? What is driving you to say, hey, just to get it replaced?
Right. So to give you some context of what she said in terms of the renter, uh, it's last year. Last year around Thanksgiving, I had a client was purchasing a home, and we had a hard time getting her insurance. Had a hard time getting her insurance and a hard time getting her insurance within the parameters of what we needed a monthly payment to be. So first she tried, and then I said, wait a minute, let me reach out to some of my insurance agencies. And Kiana Lisa looked into it, and she's like, Kev, she got 3 theft claims on a renter's policy. Like, I think she was like, it was like one last stage that you guys could do for like an outside agency. It might have been Georgia Department of Insurance or something, like somewhere in there that could help offer. But the quote, whatever it was that she could get, the quotes were just too high. Eventually we end up getting someone to be able to do it in that parameter, but like just willy-nilly filing claims and going, because of thefts, those things hurt. It may pay out at the time, but down the road it affected her payment. Her payment ended up going up 100 and some more dollars than she expected it to be, all because she had filed 3 claims previously. Looks like we lost Kiana. Unless my staff kicked her out, but I doubt that. Um, let's see. Let me see. All right, Clark. It says you gave a lot of context around it. Thanks, can't write, but so much of these comments. I got you, man. It's only so much you can put in the comments. While we're waiting for Kiana to come back, we're gonna take a brief break. Maybe you guys grab some water. I want you to take a look at this commercial that we have, and I'm gonna grab some water as well, and then we'll be right back.
Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long.
And we're back. Kiana's back also.
All right. Sorry about that.
No problem. No problem. So Clark had commented in the comments. He said, "Thank you. You answered his question." He was like, "It's only so much you can write in the comments." So, but he said you answered his question for him.
Okay. Awesome. Awesome. Glad I was able to help.
Got you. Blair said, "Thank you for answering my question, Kiana. I appreciate it." Um, Build by Asham says, "From personal experience, the insurance company will definitely verify the storms in your area. And as a matter of fact, you could tell they already knew when you were calling in."
Yep.
So in Georgia, you're here in Georgia. In Georgia, once a week, if I'm not exaggerating, somebody's walking through, knocking on my door, leaving something, saying that they can help me get a new roof. File with insurance agencies. They've had great success. You file a claim, they'll take care of everything else. And if the insurance company doesn't, accept the claim right away, then they have another way of getting it done. They give out this high percentage. But the craziest thing is I live in a subdivision with 25 houses, and they're telling me they're working on my neighbor's house. I see nobody getting a roof. Like nobody has a roof, and I'm like, you're not working on my neighbor's. No, I don't want to go through this process. I'm in the mortgage industry. If I file a claim, it follows me, and then they look dumbfounded, and then like, well, in case you need me, walk off. Like in Georgia, roofers are not regulated. So you have them constantly coming and soliciting to you. And I'm not knocking the hustle, but people need to be wary of those things because essentially they're leading with, oh, we can get you a free roof.
Yes. And they're saying, we'll take all the heavy work off of your plate. We'll file it with your insurance company. They're doing, they're trying to test to see if what they're just trying to see what can go through. They don't care about the fact that you'll have a zero paid out claim. You'll have a claim. I had one of my customers called me, 80-year-old customer. And luckily I had her daughter's information on her profile. And I said, hey, you might want to reach out to your mom. You got roofers knocking on her door saying that they're working with the neighbor. That's always a thing, right? Because now you have somebody that's going to validate that they're a good company or that they've already went through this process and they can do this. And then they say that we're going to take the heavy lifting off of you by saying we'll file the claim. Oh, and if that doesn't work, because it may not work, then we have another way of doing it. But the sad part about that, though, is because I've had some customers who fell victim to this, is if the insurance company does not pay that, guess who's left holding the bag?
Assumer.
Yeah, and they will get their money. The thing about it, if it's an older company, there's ways. We may be familiar with mechanic liens, but there's ways that they can get their money from the older consumer, right? So yeah, I think at this point, though, it's beyond a hustle because the roofing industry does not understand how much impact they've had to the insurance industry. They used to go up in the day, and of course this is not all of them, right? But they would go up and take a hammer, and that's how you get the hole in your roof. So what did the insurance industry have to do? They needed to spend all of these millions of dollars determining this is what a hammer hole looks like, and this is what hail damage looks like, right? So you have those situations to where they will knock on doors and say, this is what we can get you. Because keep in mind, they don't get paid unless the insurance company is paying out.
Back. And then so we had our neighbor's son. He just so happened to work for a roofer. And he came down on his scooter, like he a college kid. He came down on his scooter and he was just like riding. I live in a cul-de-sac. And I was like, that's weird. Like of him to do that. And then I seen him looking up and he came over and he talked to me. And he was talking about, hey, we can get him replaced, this and that. Now his approach, I guess because he knew me and he lives in the subdivision with me, his approach was different than anybody else. We do need a new roof. We've been prolonging it. And I said, hey, dude, like, you know what I do for a living. I used to work with your dad. Like, we're not going that route, but get me an estimate. Right. So he got me an estimate. They proposed the estimate. And then even the guy who gave the estimate was like, he was truthful. He said, really, Mr. Jefferson, like your insurance company is probably just going to replace the shingles. He was like if you had said, "Hey, file a claim," you would be wasting your time. You would just get the shingles replaced. Depending on your deductible, it might not even get covered. I'm estimating like $1,500. So like I appreciate the fact that he did that, because I've also had people come and say, "Oh yeah, we had a hailstorm in July of 2018 that should have covered this. We'll be good." And like, I was here and I don't remember a hailstorm. Like, I lived in this house at that time. So like, just being truthful, and just avoiding those things. But a lot of times, not only, like, I know this channel is typically for first time home buyers, but if you're a homeowner and you're looking to buy another house, you have to be mindful of your claims that you claim on your house going to another house, because that's going to make a huge difference. Not only does that claim follow you, we didn't know until we're getting insurance that the house here that we live in had a claim filed on it in less than 3 years. It was a water leak. It wasn't disclosed to us by the agent. It wasn't on the disclosures. The sellers didn't disclose it. If it wasn't for the insurance agent say, hey, there was a claim put out on this house less than 3 years ago, we can't even insure it. And we was like, what are you talking about? And they could tell us exactly what the claim was.
And and that doesn't necessarily mean there's a problem, because hopefully whatever the claim was for, it was fixed, i.e.
Yeah, it was fixed.
it would have showed up in inspection if it wasn't.
Yeah, it was fixed. Well, guys, we have come towards the end. Let me see. Right quick. Kim had a question. How can you find out if a roofer is regulated in your state? I'm in VA. Or maybe if roofers in general, like here, they're not regulated in Georgia. How can you find that out in another state? Would you know?
Not offhand, I do not know.
Gotcha. I would I'll be honest with you, the easiest thing is probably to Google it.
Yeah.
That would probably bring up that answer for you, Kimberly. And then Clark says, that's even good to know about renters filing claims on their renters insurance. So cool. Kiana, we appreciate your time. Kiana's information will be below. She's in Georgia, and she has connections, and maybe I'm overstepping. You have connections in other states if someone wants to get a quote, correct?
Yes, I mean,
All
Allstate
right,
is countrywide, so yes.
got you. All right. Well, Kiana's information will be below. Kiana, thanks for joining us today, and you have a happy new year.
Thanks for having me. Bye, guys.
All right. Cool, guys. This has been good. So we've been through budgeting, we've been through insurance. Let's see. Yep. We've been through budgeting. We've been through insurance. Now, during the course of your time, as in this process, I've created a journal. My journal is about the home ownership journey. It has information everywhere from the budgeting standpoint to pulling your credit. Um, while you're in the process, it also has information in terms of when you're interviewing your real estate professional, when you're getting referrals from someone on real estate professionals, your lender, when you have questions and you're going to interview your lender. There's a section in there for that. You get past the lender in the realtor section, you're looking at homes, you have your pre-approval. We have a section with notes on each individual house that you look at. You put in the address, so you're not going through the process trying to figure out, hey, can't remember what was in Main Street or what's on Second Street. Like, you can take notes as you go along in the process. So it helps a couple ways. After, from experience, after you see about 3 houses, you forget what you've seen, right? Or if your spouse is not there and they have questions, you've taken hopefully copious notes about the property besides what's on the MLS sheet. And then you can kind of confirm, because if it's between 1 or 2 houses, you have notes to go back and say, hey, this is work, this is what this has, this is what that has, right? The journal also has where after you've purchased a home, it has a section in the back where you can put your HOA information so you remember, right? Your phone numbers as well as your utilities. Has a section where you can put in when your roof was replaced, maybe if you had pipes replaced. Let's say you put up a fence, you replace windows. All of that information can go in this journal. So when you decide to sell the house and they ask you on a disclosure, you have that notated. Or if something were to happen to you and family members needed to know that information, they have it readily available to them. The link for our journal will be below. It's currently selling for, I think it's like 1988. Click the link below. It's been very helpful. I spent a lot of time putting it together myself and my team. If you're interested in it, the links below. And I would, in advance, before you purchase it, thank you for your support. So we talked to an insurance agent. We spoke with Shannon on budgeting and some about credit. Now we're going to bring in one of my partners who I've done deals with, and we talk. A fellow YouTuber as well, Natasha Bazile, great real estate agent. She keeps it real. She's put out a book. We're going to talk to Natasha about first time home buyers. I'm going to ask her some of her predictions from her industry experience on what she thinks the market is, what the market's going to look like. If you guys have any questions pertaining to home ownership, Natasha is very skilled, great agent, and she'll give you the real. Like, she's not going to give you fluff just to try to get your business. She's going to tell you, yeah, we can do it. You might want to wait. So I'm gonna bring Tasha on. Hey, Tosh.
Hey, thank you for that wonderful introduction. You know, I had to get some pictures, right?
So how you been?
Listen, look, we made it to another year. Happy New Year.
Happy New Year. Happy New Year. So I want to first say thank you for giving me some of your time on New Year Day. Um, I definitely wanted to make sure I had you on because I love your insight. Like, we have conversations, and you be like, "Bruh, these streets ain't right." You know what I mean? Like, we have real conversations. Um, so first of all, tell a little bit about who you are.
Okay, all right. Well, hello. I am Natasha Bazile, realtor, associate broker. This is my 14th year in real estate. I specialize in new construction, relocation, dual moves, someone's selling their starter home, buying their next home. However, I have sold all over Georgia. I'm licensed in Georgia. I have sold all over Georgia, and I have worked with all types of transactions. Um, I have also assisted people that aren't in Georgia. So if you do need an agent that's not in Georgia, I can refer you to a like-minded agent. Yeah, I got into real estate because I did it wrong. I purchased at a time where they were just giving away houses, and I can't, born in New York, moved to Florida, grew up in Florida, and around 2006, 2007, it was real easy to get a house, and they were giving away houses, and I signed documents. I had a $30,000 balloon payment, and at the time they were just like, okay, when you move, just refinance. Yeah, you can't refinance if the market crashes. I mean, yeah, things have to align. It's just not a blanket statement, just refinance. But I didn't know that. I didn't educate myself. I could have lost my house. Thank God I didn't. But coming through that process got me interested in real estate. And I said, I'm going to help people do it better. So that's how I got here 14 years later. We are still here. And I just want to thank Kevin for having me today. Yeah, supporting you, Kevin. Normally on New Year's Day, I'm kind of like, just chill in the house. But for you, I was like, as long as I have to leave the house today, Kevin, you got it. I am here for you. So kudos to you for just kicking off the new year right and providing such valuable information. And for those that, if you're hopping on later or you see that's coming up on your timeline, please go ahead and watch, because I have legit been over here taking notes about budgeting, insurance. This is great stuff. So thank you, Kevin.
Thank you. Yeah, I wanted to do it because, like, I felt like it's the best way to start, right? I wasn't going to be doing anything anyway. I needed to make sure I got some content out to my clients, and I challenged myself. Like, I
Mhm.
want to go live because what I see is, like, people are still here when I end my lives. So my team and I is like, what are they there for? like legitimately. Like
Mhm.
I'm gone and I still see that there's people there. So I wanted to go as long as I could and give them more time. Because if someone's still waiting and the show's over, they want more. And I
Okay.
wanted to give more. So I figured I'd take the opportunity to give them more by bringing on professionals. They can ask their questions. We can give information and it gives them a great start.
Mhm.
2024 in terms of the real estate industry was a different look for all of us, right? A
Mhm.
different look from me from the lending standpoint, different for you as a realtor, but also the consumer. It was like, am I ever going to buy a house or should I buy a house? Because
Mhm.
you don't, you've got everywhere from the market's going to crash to a reverse crash to interest rates going up to are they coming down? And what I tell people is in life situations, doesn't matter what the interest rate is. If you need to move mom in and she needs a downstairs bedroom, you're not going to say, hey, mom, wait until rates get 3%. You're going to figure out how do we buy this house, right?
Mhm.
If you need to refinance and you're getting a divorce, you're not going to say, hey, let's stay together till rates get better. No, like you're going to get out of that
Right.
situation. Um, I can speak from a lending standpoint of what I see of the market, but I want your take on it because you have a different role. Like you're in the trenches with the buyers. We've had a lot of new rules as to what real estate agents can do and what buyers' responsibilities are, and I wanted them to hear it from. They hear it from me from my standpoint of what I see, but I want them to hear it from an actual agent who sells real estate on a consistent basis and who's been in it a while has seen a couple different markets.
Mhm.
So let's kind of start out with the buyer's brokerage agreement. Um, how is that affecting your buyers and your business as of now?
It's not, and I'm going to
Okay.
tell you why. Um, this is something that has been in play for me. Well, let me go back. Georgia is one of, I want to say 5 or 6 states that was already using a buyer brokerage agreement. So we were already ahead of the game, and other states had to get on board, and they used Georgia as an example because we already had one in place. So that's one. What did change though was like kind of like leniency. So our brokers are advised like, okay, you should get this filled out, at the beginning, but we relax. Agents relax. Some agents were like hard set. They got it filled out at the beginning. I will be honest with myself. A lot of my clients, we have a relationship, even though you can't go on that 100% of the time. But we do have some form of relationship where it could be like before closing, a couple of weeks before closing, and we're just kind of crossing T's, dotting I's, and we're like, okay, let me get this paperwork in. Hey, can you sign this by a brokerage agreement? Granted, we've already went over it. They know what's involved in it, but the actual physical form they may have not signed. So I'm getting that in. Now you have to get it signed before they even see a property. So where I say it, it hasn't really impacted my business because it's something I always talked about up front, went over it in my home buyers consultation, just making sure we were all on the same page. So it was always a part of business, but now just you have to get it done up front. So for maybe someone else that's in a different state where this is totally new, they never got anything signed, then I could see, it's different for them. And then also depending on, how they're finding their agent or how the agent is finding their client. A lot of my clients find me online. And before they've even contacted me, they've watched several of my videos. So they've gotten to know me in a sense, or to get a sense of of what working with me is like. So there's a level of comfort there. It'd be different if someone just went on Zillow and just got an agent, and now this agent is just putting a document in their face saying, hey, sign this person doesn't know anything about that agent. So I could see, there would be some hesitation in signing something and they don't know anything about this agent in that regard.
Got you. So you brought a good point up, Tasha.
Mhm.
real estate is it's local and regional. So like you get when you look at the news, you get a nationwide perspective, right? As well as when this NAR settlement came out, you get a nationwide perspective. Those 5 states in place that already had it going, about the buyer's brokers agreement, it's business as usual. But to the consumer here, and let's take Georgia for instance, to the consumer in Georgia, they're scared because, oh, I may have to pay down payment, closing costs, and my realtor. So then that's put fear in people from being able to buy, um, which slows up the market. So you add another level of being scared. You've got housing prices increasing, interest rates not going down, and now you want me to pay my realtor? Like, why don't I just do it myself? I get the mindset of, hey, I could potentially save money by not using the realtor, but 10 times out of 10, you're going to cost yourself money for not using the realtor. Because, yeah, you might save, let's say you save $4,000 now, which what it would seemingly be. But what if you overpaid for the house in the beginning? You're not saving anything. Um, kind of touch on some things you do because I think people the so the NAR case that the case that we're talking about real estate agents, we're talking about where some sellers said, "Hey, I didn't know that I was paying for the buyer's agent." And I feel like if I'm selling the house, I shouldn't have to pay the buyer's agent. Like I wasn't aware that that was $6,000 that was taken away from me that I could have had. So then they file a class action suit, right? Now, this is my take. You're filing a class action suit and you win, and the the deal is millions and hundreds of millions of dollars. But those sellers that were a part of that class action suit get between $20 and $100.
And you know who gets all the money? The
The
lawyers.
attorney.
The lawyers. So sellers knew that, you said they weren't aware. They say they weren't aware. Sellers were aware that it was, they were paying. They may not have liked it, but, they were aware of it. And it's baffling to me. Not baffling. Maybe baffling isn't the word, but when those sellers bought their house, they didn't pay a commission. You know why? Because this person that sold it to them took care of it.
Yep.
And there are a lot of sellers to this day that are still of the mindset that they are willing to assist the buyers, whether it's closing costs, commission, they are willing to assist with funds. So just know that even though it's, I feel like it's a lot of fair media put out there, there are a lot of sellers that are willing. You will encounter some that are going to play hardball and like, no, we want to sell for this. Next, that would be my approach, would be next, because there are going to be a lot of other sellers that are going to be out there that are going to be willing to assist in those costs.
Right. So tell me what you do as a real estate professional in terms of with your buyers. Because I think that's also misconstrued of what you guys do. I think with the TV shows, you show 3 houses, you meet the listing agent at Starbucks, you guys shake hands, and then all of a sudden the next week the buyer's got keys. Tell me what it exactly is that you do as a real estate professional. And you can be as detailed as you want because I think people need to hear what you have invested into them and understand, even if they appreciate what you do, to give them a clear picture of what they should be looking for in an agent as well.
Okay. You remember In Living Color?
Yep.
I wrote a song about it, like here it go. Wrote a book about it, like to hear it go. But I really did write a book about it. This book was for agents. because there was a time, maybe it's tapered off, but for several years, it's like, I'll just get my real estate license. It's so easy. Like they were quitting their jobs and getting into this business thinking that it was going to be the easiest thing in the world. And I encountered many agents. I was like, yeah, I got my license. And then I got out of it, like, because this was not what I was expecting. There was a lot more to it than meets the eye. Granted, you're going to have your handful that are not in it for, true purposes. They're not really in it to help people and guide people, but they're going to fall to the wayside. A lot have been falling to the wayside. But what I do, so yeah, it's going to start with a home buyer's consultation. And for a long time, agents were just seen as like door openers and tour guides. We're just going to get out and see houses. That's all agents do. No, your journey needs to start with a home buying consultation. It needs to be a meeting of the minds. Let's discuss your goals. What are you trying to achieve? Everybody's goal is going to look different. You may be trying to move down the street. You may be moving from an apartment to a house. Somebody may be moving from New York to Georgia, may have a house to sell, and then moving down here. Everybody's journey is going to look different. So we need to first identify what your goal is. We also need to see if we're on the same page. Our expectations, what is the agent's expectations? What is the buyer's expectations? We want to have that meeting. We also want to discuss the process. What does the process look like? Because you may have one idea in your head, and then when we talk, I'm like, okay, well, this is actually the process. And that actually happened to me a couple of weeks ago. This lady, she has a house to sell, but she was like, yeah, she wants to get out and start looking. And when I spoke to her and kind of explained the process, yeah, you have a house to sell and she wants to eventually end up paying cash. But I'm like, if you're going to look at homes now, you actually need to have proof of funds showing the cash, or you need to have a pre-approval letter. Like, we need to have something. And she's like, that makes sense. I didn't think about that. So that's where the conversation happens to discuss, okay, what are you trying to do? Let's put a game plan in place. So it's going to start there. Then we're going to get to identifying, well, we got to get with the lender, because I say this is a team effort. The lender is the finance person. They're going to give us the go ahead, the pre-approval to say, okay, go out here and start shopping. Then I can get you out here to actually get you the house. Those two things have to be lined up. Like, we have to have that financing in place. And there's components within that I have to understand in order to help you reach your goal. For example, are you approved FHA or are you approved conventional? And if you're approved FHA and now you want to buy a townhome in Georgia, that limits your options as far as townhomes go. And we won't get deep into that. But this is where we have the meeting of the mind and the game plan, and just understanding your goals and what you're trying to do, so we can put a game plan in place for you. And I know you watch social media, or you've spoken to a cousin that bought 10 years ago, and this is, what happened for them doesn't mean it's going to happen for you. That's why we need to tailor a plan for you. So now we're going to move forward and we're going to get into the home search process. And I've heard people say, well, I'm the one that found the house. And you might have found the house, but your agent is going to be sending you things. You could be looking online. Like, that is not the end all be all of a real estate transaction. Who found the house? It's what happens after you found the house. If it's a resale transaction, there are so many moving parts and components. You have your the offer, writing the offer. What's important to the seller? Like, what is going to get your offer accepted? Are there any other offers on the table? Just finding out all those different components and what's going to work for you and work for them. So putting that offer together so that it works. And now, is the seller willing to put money towards closing costs, agent compensation, just tailoring that, getting your offer accepted. Now you have earnest money that you put down. You have your inspection period. Now we're going through the inspection report. The inspection reports are always going to be long. unless it's new construction. They're going to be shorter. It's still going to be a report. But I have to advise my clients in the home buying consultation, like, don't run when you see your home inspection report. It's going to be 50, 80 pages. A lot of it is going to be FYI. A lot of it is going to be maintenance. We are looking for big ticket items. We are looking for red flags, talking you through that, talking with the home inspector if we need to get clarification, guiding you through that. Then there's also the appraisal piece of it. Is the house going to appraise? And then that's even back to when we put in the offer. We looked at comps to see, okay, is the house priced right? Is it overpriced? Are we going to offer less? If we're going to offer less, how are we going to justify it to the seller or explain it? Because it's one thing to say, yeah, the house is overpriced. But if you're dealing with a seller who has in their mind that they have the best house ever and they want top dollar because of XYZ, there's a lot of emotional navigating as well. So I know that was a lot. Within that, we're also trying to manage timelines because we want you not to lose any money in this transaction. So you put down earnest money. We want to make sure that we are adhering to deadlines so that if for any reason this transaction is not going to go through, that we cancel within the necessary timeline so that you get your earnest money back. So there's a lot of things that are happening behind the scenes, and with social media, TV shows, see 3 houses, you pick one, you go to closing. It gives the impression that, I really don't need an agent. I can just do it myself. There's a lot that does go behind the scenes. I would highly recommend that you pick your team. Like your team is your lender, your real estate agent. There's other people involved in your team, like your insurance person, like I don't want to say her name wrong. Kiana. Like Kiana, you're going to have your inspector. That's going to be a part of your team. But your primary team at the beginning is going to be your lender and your agent. So I know that was a lot. Take it back.
Yeah, I want you to be detailed. I wanted them to get a full picture scope of what goes on.
Yeah, and there's more to it, but I'm just going to stop there because even after that, after the appraisal is done, what happens if the appraisal comes in lower? And I'll just give you one example. I did give it to you, and I'm going to take it back to give you an example. It's very easy for people to say, well, I just won't use an agent. And it's almost like having insurance, like you talked about before. We're paying this money every month, whether it's home insurance, car insurance. In the event that something happens, we'll have that protection there. So you go through a real estate transaction, you say, I'm not going to use an agent. And you're hoping that you're hoping it goes through smooth. And I had to let that go a long time in real estate because I really thought, I'm like, why? Something is always coming up. Like it has to be something on my end, right? I realized, no, it's just real estate. There are so many moving parts, so many different people in a transaction. Something is always going to come up. So I do not promise my clients perfection. What I do promise them, as things come up, I will navigate you through the process. And I also let them know that in the beginning, like when things come up, don't run. Don't say, oh, this must not be met. No. It's just part of the process. Anything worth having it's going to be a process. But I'm going to help navigate you to the closing table. So the example I was going to give you, I was working with some buyers. They were relocating from, was it New Jersey or New York? Up north. And they were moving down here. We got a home in Locust Grove under contract. They were approved through a known company and an online company. And the appraisal came in $95,000 below asking price. And yeah, the appraiser, we just happened to get the appraiser that nobody would ever want to work with. He was mad at the time that the market was rising the way it was. And he said he refused to use the comp next door. He refused to use any of the comps in the area. And the comp next door was exactly like this house. He refused to use it because he just didn't agree. Sir, we don't care if you agree, like just do your job, right? So there's things in place when, an appraisal comes in low, there's a process. And the lender that they went through, this online lender, they were just like, there's really nothing that they could do. So I ended up taking that client to a different lender who got the FHA appraisal thrown out, got another appraisal ordered, and they were able to get to closing. So if you were working that transaction by yourself, not knowing anything about real estate, would you have known what to do? So there's an example of why that's reason enough why you want an agent to guide you along this journey. And I consider myself a guide. I'm guiding people through the process. All right. Go ahead, Kevin.
No. So we got a couple questions. So I think Clark's an agent as well. So Clark, thanks for helping out in this in the chat, man, because hearing another agent's standpoint definitely helps us out.
Yes.
Kimberly wants to know, how much is earnest money, and does it change per house, or is it a standard percentage, and when it is supposed to be paid?
All right, great questions, Kimberly. So how much is earnest money? It depends. It varies. There was a time when I first started, mind you, I got licensed in 2011, where the kind of going was $500. A buyer could put down $500 and get under contract. The market has changed, and then it kind of changed to $1,000. People could put down $1,000 now. And for the past while, we're seeing like the norm being 1% of the purchase price being the norm. So you could say, hey, I only want to put down $500. That doesn't make your offer look strong in this market, because now we're just seeing, oh, sorry. I'm saying sorry to the mic that I knocked over. Disregard that. But yeah, you just have to go with, okay, what is going on in the market right now? So for the past while, we have been seeing earnest money being typically 1% of the purchase price. Some people do more because it can be a way to strengthen your offer without really giving more. So let's just say you have two buyers putting an offer in on a property. One person, $400,000 house, they're putting down $4,000, 1%. Another buyer is like, hey, tell them I'm gonna put down $10,000 earnest money. It's really no more money that the seller is getting, provided nothing goes wrong and the seller doesn't, keep their earnest money, but it's just showing them like, hey, we're more serious. I'm going to put down more. So it's negotiable. You could say it depends on how much you want to put down. Does it change per house or a standard percentage? Okay, answer that. And when is it supposed to be paid? Earnest money is generally paid once all parties are in agreement, meaning it is a binding contract. All parties have signed on the contract. So let's say we write a contract today. You and I working together, you're the buyer. We submit the offer to the seller. Today's Wednesday. So Thursday, the seller signs off on it. There's a step that needs to go on in between that where it what's called a binding agreement date that all needs to be signed. All that is filled in tomorrow, which is Thursday. Then the clock starts starting Friday. So let's say you have 3 days to submit your earnest money. So we put in the offer Wednesday. Everybody signed. We're binding on Thursday. The clock starts Friday. So now you have Friday, Saturday, Sunday to get in your earnest money. So that would be your 3 days, or if it's 5 days or 7 days, however it works, that's when your earnest money is due.
So how do I submit earnest money? Do I submit it via check, Cash App, Zelle? Like how?
Cash App, absolutely not. Absolutely not. So it needs to be an official payment source. Through your bank. You're going to do a wire. You are going to write a check. And I tell people, correct me if I'm wrong, Kevin, like if they're writing a check, let it come from the account that the lender is aware of, right? Because on the back end, the lender wants to see, where was this earnest money paid from? So don't take this $4,000 from under your mattress and say, well, I paid them in cash, because that's going to raise all type of red flags when you go to underwriting to say, oh, you paid this money in cash. So no, it needs to be a wire. It needs to come from, a check. And who are you paying it to? That's going to be written in the contract. Is it going to be paid to the closing attorney that's going to be handling it? Is it going to be paid to either your broker, whoever's holding it, their broker, who's ever holding it? It's going to be written in the contract when you're putting together the offer. So that's who and how it's paid.
Got you. So let me add my 2 cents.
Mm-hmm.
From the lender standpoint, all the routes that Tasha says, are great to do. But let's say, for instance, it's a situation where you get it from a parent. Your parents pay it for you as a gift. Well, your parents pay it for you. We're going to look at that as gift funds from the lending standpoint, which means that we're going to have to source where those funds came from. We're going to have to get something called a gift letter, which we provide to you. We're going to have it filled out. It's going to have both names, how much it was, the donor, which is your parents' bank account number, and what bank it is, and then they're going to sign it. They're going to sign it, and you're going to sign the paper as well. They're also going to have to submit the wiring instructions, the wire that they sent to the attorney's office, or a copy of the canceled check, and they're going to have to provide their bank statement. We do that to source where it came from, so it didn't come from the mattress, right? We do that to make sure we're in compliance with what FHA requires or whichever type of funding source it is that it requires. Is it additional steps? Yes. Let me or whoever your lender is, let them know up front, or let your agent, Natasha, say, hey, the gift is coming from my mom. I mean, the money's coming from my mom, so we can get that paperwork up front. And because sometimes the bank statements get looked at, underwriters don't see it until maybe sometimes they don't see it until the second time, right? So we want to make sure we have a source for it. Not only that, the way that the deal is structured, because you got a gift, that could be the difference between you being able to qualify and not. I'm gonna tell you what I mean. If you're getting down payment assistance, the seller contributed the closing costs, and you get a gift. So let's say you don't have any money into the deal at all. Depending on your score and your assets, it could be a red flag because they're saying, hey, yes, they have the money for down payment and closing costs, but they don't have anything of their own into this deal other than maybe $500 for an appraisal that we can count, and their file is marginal. Is this a risk for us because they don't have any money, but they're also maxing out what they can buy with their debt to income ratio? So how likely are we to get this property back? If you have those scenarios and you have funds left over that are liquid, then that's a different story. So, why I said that's key is because when we typically run a file, I run it as if the borrower is giving their own deposit. And if they are, and then we get down payment and closing costs, and we run desktop underwriting and we get an approval, we're Gucci, right? But adding that one additional layer could take away your approval. So we need to know all of these things up front. Um, just wanted to add that because it happens more often than not. And let me go even deeper. If if the down payment, let's say the wife is on the loan, the husband isn't, and he gives the $1,000, it's still considered a gift because it's from someone who's not on the loan. So we have to get that same documentation. Or and also we have to get an access letter if you guys share the same bank account. So if the money came from you and it's you and your husband's name on it, he has to provide an access letter saying, hey, I allow for my wife to use this $1,000 from our account, just so they can document it to where the funds came from. So I wanted to add that so people knew. And if you're in the middle of it and it's happened to you, then that's why, is because they've got to document everything. See, we got some more. Clark
Okay.
answered that. Go ahead.
Can I also add on to that? Like, yeah, and the sourcing of the funds, it sounds easy when it's like, okay, well, such and such is going to give me the money or give me a gift. But when you then tell them, oh, you have to provide your bank account, or the other steps, you have to make sure that that person is going to be willing to go through with that. So one of the main points that I have here is like, be upfront with your team, your lender, your agent, and let them know upfront. And we can figure out, again, how do we navigate this to the closing table? The worst thing you could do is just not say anything. And then at the 9th hour, right before closing, it's like, oh, this came up, or yeah, I lost my job, but I really ain't want to tell you until they call. Like, no, like let us know so that we can like navigate things together. And then also you might be thinking like, why do they ask for so much information? I know you get that a lot, Kevin. Like, why
I
do they
do.
need to know? Like, why did like I spoke to somebody recently and they want to relocate. And I'm like, okay, well, how long you been on your job? Like, what kind of job is it? Okay, when you move here, like, are you transferring? Are you finding a new job? And he was like, well, we'll find something. And I'm like, okay, I need you to talk to the lender, which I need to put them in contact with you, because in his mind, he's just like, I'm a good person. I'm a stand-up person. I'm going to find a job. Lenders don't care about that. Like, everything has to be documented. And correct me if I'm wrong, Kevin, like that came about when the market crashed in 07, 08, right? Things got tighter and stricter and what they're asking for. So I tell people in my buyer's consultation, like, pack your patience. Whatever they ask for, they may ask for something multiple times. Just send it to them, give it to them. You are asking these people to borrow $400,000, $500,000, $600,000. It's going to come with some questions, having to provide things multiple times. Just do that, because once you close, generally, you never have to provide this information again. So just pack your patience.
Okay. Yeah, for a fact. Kimberly says, what happens if the deal falls through? Does the buyer get it back? It sounds like a down payment.
Are you referring to the earnest money?
Yeah, referring to the earnest money.
Okay, what happens if the deal falls through? Why did it fall through? So your earnest money, so is it okay, you buyers have some protections within a contract. So you have your inspection period. So let's say your inspection period is 7 days. You did your inspection period, you got the inspection report back. We identified, okay, these are the five things these are the major five things that we are going to ask for. We're not asking for, oh, we don't like the paint color. That is cosmetic. We are looking for, listen, the AC was not working when the home inspector tested it. Not that the AC is old. And Kiana mentioned that before, like with the roof. Just because the roof is old doesn't mean it needs to be replaced. So just because something is old doesn't mean it needs to be replaced. But if it's not working, so seller, this was not working, we need it to either be replaced or fixed, and we're going to spell that out. But we did all that and we could not come to an agreement. Or maybe sometimes the seller says, hey, I'll do 4 out of the 5 things you asked for, and that's fine. But let's say we could not come to agreement and you cancel within those 7 days. That was your inspection period. You can get back your earnest money. If you wait till day 8, 9, 10 to decide, yeah, I don't want to go through with it, no, you will not get back your earnest money because you are outside of your inspection period. Another protection is your appraisal period. You have a certain amount of days to operate within your appraisal period. So when I spoke about what an agent is doing, how I'm assisting you, one of the things that we're tracking are these deadlines. So when we are saying, okay, we need to go ahead and schedule inspection, if the inspection period is 7 days, we're not scheduling an inspection on day 6. Like, we need to get this done so we can get the report back, we can get it to the seller, we can get everything done within the timeline, so that if anything happens, you can terminate. And then there's also a financing contingency. Like, you have a certain amount of days for this loan to be approved. If for some reason the lender comes to the back end, and Kevin can speak to that, like, why would we get all the way to the back end and now the loan can't be approved? You could terminate if you're within those time periods. But if you're outside of those time periods and you cancel, no, you do not get back your earnest money.
Right. So to answer the last part of your question, it sounds like a down payment. So whenever you put down an earnest money deposit, you get a credit for it. So if you put down $1,000 on a contract, we credit you that towards your down payment slash closing costs. If the seller's paying all your closing costs, it goes towards your down payment. So when I want you to remember, whenever a lender gives you figures, if I tell you that your closing cost is going to be $15,000, I can speak for Kevin. I've already given you credit for whatever the seller's giving you for down payment. I've already given you credit for if you use a down payment assistance. Any credits that you've gotten or anything that someone else is applying to your closing, the down payment assistance, you put down or seller giving a credit, that's already been subtracted from that number. So I don't need you doing new math saying, hey, from that 15,000, the seller gave me 5, mama gave me 2, and I put down 3. I only got to bring X amount of dollars. I'm always going to give you that number with those things subtracted. So it keeps me in place and it keeps you in place. Um, if in fact, and this is rare, but there's some opportunity, like if you do USDA, and let's say, there's no down payment, and let's say the seller was gracious enough to pay $6,000 and it cover your closing costs. If you have, if you had put down that $1,000, you could potentially get that back. The reason why I mention that is because sometimes you hear people talk about, hey, I got a check back at the closing. Typically, it's going to be USDA. Every once in a while, you might see something with like FHA or VA, but majority of the time, um, whatever you put down goes towards your down payment. And then if some down payment assistance programs, if like for instance in Georgia we have something called Georgia Dream. Let's say the down payment assistance covered all the down payment, the seller and whatever was left over from what you got for the down payment covered the closing costs, but you still had that $1,000 invested into it. It's a requirement that you invest 1,000 into it. So Georgia Dream just uses that $1,000 to lower the principal. So hopefully that helps explain everything. Uh, Let me see. I'm assuming that's Brienne. I'm sorry. Sign for a 7% rate while houses get built, or too much if at risk. Um, I think you're asking, should you put down? I think you're asking, should you apply an interest rates of 7%, or is that too much risk on waiting? From the lender standpoint, if it's going to take them 4 to 6 months to build a house, I wouldn't lock in the rate, because every day that the rates lock, it costs the builder. It's kind of like playing Russian roulette, though. If you wait, rates could go up or go down, but for the most part, there's different options. You got lock and shop, where you can lock and kind of wait and see, or you can float your rate, but not necessarily saying it's too much risk. But if you do lock it in the beginning period, most lenders are probably going to charge you some sort of premium for that time period, because they lose money every day that it's locked.
Yeah, and I do a lot of new construction, and normally they're not locking. Like they may quote you like when you get approved at the beginning, like here's what current rates are. You sign the contract, but you can't lock your rate until like the house is kind of near completion, or X amount of time out.
Yep, that makes total sense. Let me see what
But
brother
I would
Clark.
also just add here, as far as interest rates go, like my recommendation would be stop trying to time the market. Like buy when you can afford it and it makes sense. Like the 3% interest rates, like throw that out the window. Like, I don't think we're ever seeing that again. How about you, Kevin? Do you think we're ever seeing that again?
No, it would take a lot. It'd take
Yeah,
a lot to happen. A whole
yeah,
lot to happen.
I would say stop holding out on that. If that's what you're holding out on, like I would say just give that up. And just buy when you can, because it was just around election time. People are like, well, I'm going to wait till after election time to buy. What exactly was supposed to happen after election? Like we're the day after elections, were interest rates supposed to just plummet? So yeah, so you waited, home prices went up. It's like, just buy when you can, when it
Gotcha.
makes sense.
Clark said he heard from a lender. Is it true that if your deposit is less than $500 in your account, they will not ask you to provide where it came from, or is that just with refinancing? So that is true. There's a certain percentage of your income or the sale of the house that if it's less than, let's say, 1%, that you may not have to source it. But I always prep for the worst. Let's be able to source it. $500, probably not. But it just kind of all depends. So yeah, there are times where we don't necessarily have to source the deposit. But for purposes of meeting the minimum investment requirement, we may have to. What's that mean? There, with FHA, there's a minimum requirement from the borrower of at least 3.5% if they're not getting down payment assistance. So let's say they got some type of lender's credit, and we have to make sure we document that Susie has all of her money to meet that 3.5%. She may not have to bring the 3.5% to closing, but between her earnest money deposit, her down payment that she's bringing to closing, and the appraisal, that she's met that requirement. So, but yeah, certain things you don't have to source. I just like the prep so we understand, because typically it's not just $500 sitting under that mattress. It's a little bit more, and we don't want it to keep coming out. So, and if you think about it, it just makes sense. Like all the crime we have going on now, funneling money into real estate. I mean, you got to have your checks and balances. But yeah, Clark, that's a good point too, my man. Brienne says, "Thank you. Don't want to lock in just pre-approval." Yeah, nah, you don't want to lock in just in the pre-approval. You might be looking for 6 months. Just depending on you. What you're looking for or looking to build. So I want to kind of reset the room for a second. We're discussing, with Natasha about what the current market looks like. We discuss what the buyer's brokerage agreement looks like. And we're in this particular case, we're talking specifically to Georgia, how it has not affect her business because Georgia already had those checks and balances in place. Later, we can get into with another agent that's coming on about how it's affecting his business, right? Because he's not in Georgia, he's in another state. So just I want to get perspectives from different places. So Tasha,
Mhm.
if you were to give some advice to some buyers that's looking, this is January 1st. If you're looking for someone who wants to purchase this year, and they're not sure what to look for in an agent, just give us like your top 3 things that they should ask. Like, top producers don't mean they're a good agent either. I've witnessed that.
Okay.
Like,
All right. So there's actually, if you go to my YouTube channel, I want to say my intro video is 5 ways to pick a realtor, 5 things to, yeah, something along those lines. So just check that video out. But just off the top of my head, one, you want to see if this agent is kind of specializes in what you're looking for. You do have some agents that work anywhere, doing everything, that's fine. But let's just say you want to buy a multifamily property. I would recommend that you go with an agent that is either working or specializes in investment properties or multi-units. Now, you could find an agent that's saying, hey, I'm willing to go with you along this ride to figure it out. But you want to make sure that, kind of what you're looking for is what their expertise is, or, they're willing to go on that ride with you. That's one. Another thing in an agent, that they're willing to, guide you through the process. And I think this is where the changes in the buyer brokerage agreement, like agents now, even though it's been in place in Georgia, a lot of agents haven't been, I'm not going to say a lot, some agents did not kind of lead with value, like really showing like, okay, this is what the process is going to look like. This is how I'm going to assist you. Like, so you find one that is going to be a guide to you through the process, not just a show up, open this door, and fill out the contract based on what I tell you, like based on you running the show. And on the other side, if you are somebody that is buying and you just want to run the show, so you just want somebody to fill out paperwork, be upfront with that too. Like if somebody came to me and that's all they wanted me to do is just fill out this paperwork, that wouldn't be a good fit for me because I'm more of a guide along this journey. So if you want somebody that, hey, I just want you to fill out this paperwork. You just want somebody to do ministerial duties. Be upfront about that, what you're looking for. Did you tell me to do 3?
Yeah.
And the third one, so I said, pretty much their niche, their expertise. You want to definitely do a home buyer's consultation. And you want them to be their guide. And another quality for an agent. Third one is escaping me right now, but go ahead and watch that video on my channel.
Natasha, when you get a chance, if you can give us the link so we can place it below.
Okay.
So I mean, from the lender standpoint,
Mhm.
in terms of working with your agent, I think you want somebody that's knowledgeable. Um, they don't have to be a superstar. They just need to be willing to accept feedback. So, from a lender standpoint, I encounter agents who don't want me to tell them anything.
Mm.
And because they've never seen it done that way. My goal is to help you as my partner to make sure we all achieve the goal for the buyer and the seller. Um, example, the there was a deal that I was working on. The listing agent actually, the listing agent, there was a repair that needed to be done. We was FHA and we wanted to do an escrow holdback. And, the buyer's agent had never did one before. She's like, Kevin, can we do a three-way call with the listing agent to kind of explain to her so we're all on the same page? Cool. Whatever it takes for the team.
Mhm.
I call her. I've never heard of that. I've been doing this for 30 years. Of course. Never heard of it. That's fine. This is something that we offer. We can do up to $10,000. What we'll need to do is get estimates for the repairs, let the buyer decide or the seller decide who they want to do the repairs, and then we get an invoice. We submit it to underwriting, and then they approve it. We close on the deal. The buyer, they have um typically like 14 days to get the work done, so it's not drug out, right? Because it's not going to be a major repair at that point. And we want to make sure they understand they get paid once it's been inspected and the work is done. It's done that way to protect us and the buyer and protect this whoever pays money. Explained it to her. I've never heard of such thing. No problem. Talk to your seller about it. If you want me to jump on a three-way call and explain it to your seller so they understand, that's fine too. But at the end of the day, either closing's going to be delayed until it's done, or we can escrow the funds with the attorney's office, and then we can close. And then the only way that money leaves escrow is once it's an approved repair. Cool. Call the agent. And she calls me back. Well, my lender's never heard of it. Doesn't mean it doesn't exist. It's something that my company does. And we finally got it done, but it was like it took time. So let's say, if I'm not mistaken, it probably took 4 days. That's 4 days we lost. So closing pushed back anyway
Mm.
because you didn't
Mhm.
agree. And when I say like, I I know of a lot of programs because I try to find ways to get deals closed for people. So I like the problem solving aspect of it, right?
Not all lenders
Um,
do, by the way.
right. Yep. I like the problem solving aspect of it. And I tell people all the time, I'll do a jumbo loan and I've worked on it, but I haven't done a ton of them. The ones I've closed, but if someone said, is that your strong point? I'm going to be honest and say no, but I can get it done. If you ask me FHA, VA, USDA, conventional, bank statement loan, DSCR loan, yeah, we're going to get it done and we're going to figure it out. And that's just being realistic. Some lenders don't know about programs because they don't have that kind of business. Like, I did a deal with an agent. She said she'd been doing it 10 years. She said that was her first FHA deal. And
Wow.
I asked her, she was willing to do it, but I asked the buyer's agent, I was like, how is that her first FHA deal? Well, she comes from a well-to-do family where her clients have money, so it's conventional or cash. But she did the FHA loan,
Mm.
and you know what she told me, Natasha? She said it's not as bad people say it is.
And why would, yeah, yeah. And
She was
Clark
like,
said,
and she had been there for 10 years. She was like, Kevin, I've heard horror stories about FHA lending. That's why I never tried to even do one. I said, it's just
wow.
like any loan. Like, and I explained it. You can have during the pandemic when nobody wanted to accept FHA, I did a call with an agent and she was like, it's FHA. My client they want conventional. I said, listen, this young lady's 25 years old, recently out of college. She doesn't have the credit profile that that conventional financing will accept. However, whether she goes conventional or FHA, she's got her own down payment, she's got her own closing costs, and she has her own score. The only reason why somebody doesn't want to go through FHA is because they're afraid of the appraisal, and it's not that bad.
It
If
really
there's
isn't.
things that need to be fixed, you should have fixed them anyway.
Mm-hmm.
And if it's things that need to be fixed, sometimes it's not a major repair. That's the only thing. We went through that transaction, there was no repairs, and she said the same thing. She's like, it wasn't as bad as like we thought. And we closed I had on that particular deal, we closed early because the buyer was ready to go. So like when I say they need to be coachable, sometimes even though the seller says they want conventional, and if it can fit in that guideline, they just have to fight and say, hey, talk to my lender. This is what we've done, and go from there. And that's what I mean by being coachable. The agent doesn't know it all on the financing side because they don't do financing. Just like when people, under contract say, hey, what do you think of this house? They've never seen it. Put it in the Google picture. So like I'm sure you get questions about lending and you're like, well, that's not my job. You know what I mean?
Like, there's no way I could know everything that I'm supposed to know and keep up with it because we both have to do continuing education to keep up on it. So there's no way I could do what I do plus do what you do. That's why it's so important that we function as a team and we actually listen to what the lender says, because at the end of the day, it's going to come down to the underwriter. Like, are
Yep.
they approving this file? I do not want to do all this work on this side to get you, and now your hopes and dreams are set on closing, and then we get to underwriting and they're like, no. So that's why we really want to function as a team. And then Clark said, you do bump into people who don't want to listen or even or try something. It can be a nuisance, and that's seller side, the other agent side. Yeah, there's a lot of managing that goes, of emotions, expectations, all of that. So if you say I'm not going to use an agent, you're taking this on. Good luck. Like,
And your job?
and your primary job, running your household, your family, all that, and you're going to figure this out. It's a lot. So,
Gosh.
and then if you're relying on the seller's agent to now take care of you, they cannot do both at the same time. So,
Nope. Nope.
yeah.
Or you may have to cash app them.
Kevin, I know we're about
Shoot.
to wrap up, right?
Yeah, we're gonna wrap up. We're gonna wrap up.
Okay,
Um,
I just want to say, like, the big picture for me here that I want anybody to take away is, like, I do not see home ownership getting easier. This year, like, if home ownership is a goal, whether it's your primary residence, buying another property, like, I need you to get into this market and stop putting it off. Like, the more I drive and the more I see these full communities available for rent, it scares me. Like, I'm like, what? this is very strategic. It's not getting easier. The interest rates, the home prices, now buyers gotta, may have to take care of some costs. It's not getting easier. So the longer you put off, it's making your chances to get in this game harder. So I would just say, really get a team, put a game plan in place and actually work that plan. If you need to do some things, you need to work on your credit, we need to put a plan in place and really see where you are, where you stand, and what needs to be done. And I'll be grabbing your journal, Kevin.
Yeah, cool. I
Let's check
appreciate
that
it,
out.
Tasha.
Yeah, I'm gonna check that out so I can give it to my clients. And then also just a nugget you mentioned earlier about kind of not waiting throughout the year, waiting to the end. I'm going to recommend this book, The 12-Week Year. And we're going to continue to reassess our goals throughout the year. So this book kind of talks about breaking your goals down every 12 weeks and reevaluating and adjusting. Like, we're going to keep this goal. If your goal is home ownership, if it's budgeting, whatever it is, we're going to keep it top of mind 2025 and get it done.
Cool. Appreciate it, Natasha. Natasha's contact information will be below. We will have a link to the video she spoke about on her channel, as well as her channel. She's got a dope channel, great information.
Thank you.
I don't know if you got your comedy hour on there as well that you do on your reels.
That's a sprinkled in. I can't leave my day job.
But hey, if you guys are looking for an agent throughout the United States, Tasha has great referrals. Give her a shout and support her YouTube page. Thanks, Tasha.
Oh, my pleasure. Happy New Year, guys. Thank you for having me.
Likewise.
All right. Bye.
So, guys, we're going to take like a little 1-minute break. I need to stretch my legs out. And then we're going to bring in Jacinda Walker. Jacinda Walker is actually an attorney. She's my attorney that does my real estate transactions. We partner on certain things in terms of transactions. I want you guys to hear and ask questions pertaining to closings. And then I want to get her feedback on different things that we see in real estate and certain things you can and can't do. So, we're going to have an attorney on, closing attorney. She also does deeds and trusts. So any questions that you have pertaining to that, definitely be ready to ask her your questions.
Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes, well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long. Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long. Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long.
Cool. Appreciate that. So I want to go back. Sorry. I want to go back and answer some questions that are in the comments section so you guys don't feel neglected. Um, Glenda. Glenda, where's your question? It says the seller agrees to pay a portion or all of the down payment and I qualify for down payment assistance. Is it possible to get both? So sellers can't pay for the actual down payment. They can pay for the closing costs. So depending on the type of loan that they're getting, they can pay up to a certain percentage. On FHA, it's 6%. On VA, it's 4%. Could be a little bit more. Conventional financing, if you put down less than 10%, the seller can pay up to 3% in closing costs. If you put 10% or more, they can pay up to 6. It cannot, the down payment cannot come from the seller. It has to be allocated to closing costs. So if you have a down payment assistance, down payment, let's say it's 3.5% on FHA, and the seller's willing to pay 5% for closing costs, we run it that way. You typically can use both. Um, Sorry, I got my laptop up. You can typically use both. So, but in terms of the seller being able to pay the down payment, that typically doesn't happen. Let me see. Hopefully that answers the question, Glenn. I think you had another question. All right. Uh, do the lenders have to disclose the down payment assistance in the pre-approval letter? Not necessarily. Depending on the program, like before, you would disclose it so that everybody was on the same page. Now, if it's a program where there's going to be a separate underwriting and approval, we may want to touch bases and let the agents know, hey, buyer's good to go in terms of down payment assistance, but just like any other deal, the final saying comes from the underwriter. And in the case of maybe a down payment assistance, if they have to underwrite it, then the decision comes from them. But in the pre-approval, no, you don't have to, because some people shy away from down payment assistance programs, even though they're not bad. It kind of goes alluded to what Tasha and I were talking about, and what Clark mentioned. Everybody doesn't know everything, or they have a thought process on, maybe certain types of loans, but no, you don't have to disclose it in the pre-approval to the seller. Hopefully that answered your question. So great. Thanks, Clark. Thanks for everybody. And again, guys, thanks for everybody tuning in, listening to the channel, listening to the live on your day off, or on during your spare time. Again, we're talking about the home buying process. If you're just joining, we spoke to a budget uh, expert, budget professional. We spoke to an insurance agent who owns an Allstate agency, who talked about insurance do's and don'ts, what to expect. We spoke to Natasha Bazile, who's a real estate agent, that gave us clues and tips on how, their importance as a real estate professional slash realtor, as well as things you can do as a buyer to prepare, or things you need to do to look for. In those conversations, I gave from the lender standpoint on what I see based off that person's expertise that we spoke to. Now we're bringing on Jacinda Walker, who is an attorney. I think she may be having some technical difficulties. So while we wait for Jacinda to hop on, if you have any questions pertaining to lending, pertaining to home buying process, refinancing, investment, you can drop them below. We're here for you today. Um, I do want to, kind of touch on a few things that I hadn't had a chance to talk about. So we have an amazing Facebook group. We have a Facebook group that, we post at least 5 times a week about things pertaining to real estate, wins, questions. We quiz you, we give you tips, we give you all kinds of information. Um, we give you all kinds of information pertaining to home ownership, um, budgeting. We plan on doing a little bit more. I know I said it last year and I didn't get a chance to. I plan on going live in a group, and we build like a little community for people. That's our amazing Facebook group. If you have not joined it or not a part of it, the link will be below for you to get access to it. And do me a huge favor, if you are part of the group and you know someone who will add value to, invite them to the group so we can, start to build our community. We also have an amazing newsletter that goes out at least twice a week. Inside of the newsletter is tips about real estate, things going on in the real estate industry. Also, if you missed a live, if there's a live coming up, if there's a video that came out that you didn't quite get notification about, we also send that out. We don't spam you. We only give you great information. Um, in actuality, I feel like we need, because of the type of market we're in, that we need to give more information. So I think the frequency of that newsletter, excuse me, I'm sorry, the frequency of the newsletter will increase. So the link to join the Facebook group and the newsletter will be below, as well as I don't have it here. Uh, I do. So I wrote a book on student loans. I have a book called Student Loan Debt No Problem. Inside of this book, it journals. It talks about, people who I've successfully helped become homeowners, even though they have student loan debt. As much as $800,000 in student loan debt. So student loan debt is something that is a hindrance to you, or you think that student loan debt will stop you from being able to purchase. That's not necessarily the case. There are opportunities to purchase homes if you have student loan debt. There's opportunities to purchase homes if you have your kids' student loan debt. Like this book right here, is very helpful. The link to grab my book will be below. It's currently 24.88. And in advance, to those who purchased it in advance, I appreciate you. And if you think it'd be a great gift for someone who's looking to purchase a home, um, do me a huge favor and show me some support and buy the book. The link will be below. Um, Couple things I want to touch on while we still waiting for Jacinda. I think she's having technical issues. So in terms of, and don't forget the journal. I always get it mixed up. Don't forget the journal. In terms of 2025 and the home buying process, I think 2025 is going to somewhat mirror what we've seen in 2024. I don't think that and I don't have a crystal ball, but I don't think we'll see, super low rates. We may see rates closer to like 5.5, 5 3/4 at some point during the year. Maybe later on during the year, unless this administration decides to pick up buying loans a little bit more. Um, Also, right now we've got more inventory on the market than we've seen in the last 4 or 5 years. So there's definitely inventory on the market. Um, uh, Definitely more inventory on the market, which is more opportunity for home buyers. Um, and more opportunities for home buyers to purchase, opportunities for sellers to purchase. So I think that we definitely are going to see a little different market. But if you're in the market to purchase, I would still move towards home ownership. Don't try to time the market. Get yourself in preparations to buy, and take advantage of what you can now. Sellers are more willing to contribute closing cost assistance uh, right now as they weren't before. Uh, and then there's still some room to do some sort of negotiations in terms of, when to buy. Nobody knows the perfect time. I just say position yourself now so that you can take advantage. And if you need to refinance later on down the road to get a slightly better rate, or to get some of the equity out of your property, you want to make sure you stay in position for that. What's going on, Miss Walker?
Hey, having a little technical difficulties this morning, but I made it.
Gotcha. I was like, dang, it's 101. She done bounced already. She said he taking too long.
No. I didn't try it. I was like, I'm on my third device, so we trying to make this work. I don't know what's going on. It kept kicking me. My device just didn't like it. Kept kicking me off.
Gotcha. Yeah, I saw you backstage coming on and off. I don't want to waste time because we don't know what the internet gonna do, and I know you got something else to do, so we'll definitely talk to it. Um, so Jacinda, kind of introduce yourself, who you are, and what you do.
Well, my name is Jacinda Walker. I'm an attorney here in Atlanta. I'm the managing partner of the J. Walker Law Group. Our primary area of focus is real estate, but we also do contract and business law.
Awesome. So Jacinda, and we're gonna get right into it.
All right.
From from your standpoint in the home buying process, what exactly do you do if your name is put on a contract to be the closing attorney?
Right. So initially, when we get a contract, the first thing we do is make sure that we have earnest money. So we try to, send reminders about earnest money. We send reminders about the due diligence period because those are triggers for us. Once earnest money comes into our office, it triggers us to open the file. That's literally what opens the file because technically there is no contract until the earnest money has been deposited in our office. So once that happens, we open the file. We look at the due diligence period. Once the due diligence period has ended, we go ahead and order title. And title is a big part of what we do. So what title means is that it's just ordering a history of the property. If there are any liens, if there are any mortgages, if there's an HOA, we get to know everything about the property. So as soon as the due diligence period ends, we order title so we can kind of work through any issues that may be on the property, because the most important aspect of this is making sure that the buyer has clear title. They don't have to worry about anything else coming up on title once we're done with the property.
Okay. Title. run me through what that process is.
So honestly, truly, all it is somebody, we call them abstractors in this field. They go down to the courthouse and they literally pull documents. So they pull anything associated with the property. That could be from previous owners, it can be from the current owner. So anything associated with the property gets pulled. Also, anything associated with the seller's name or anything associated with the buyer's name. So we want to make sure that when this property closes, there aren't going to be any liens that automatically attach to the property, or there aren't any liens there. So we want this to be a lien-free property. So basically, that's what title does. We pull water bills depending on the county. Like if it's DeKalb or Fulton County, we have to pull water bills because that has been an ongoing issue. We'll make sure the property taxes have been paid or up to date. We just basically do like a thorough background investigation, basically, of the property to make sure that when you get it or when the seller sells it, that everything is paid the way it's supposed to be paid and the buyer doesn't have any issues with the property from that point forward.
Gotcha. So we're once you do the title, once you guys pull title, what happens if it comes back with some type of lien or judgment or something that could affect my ability to own that property?
So if it's a lien or judgment, the first thing we do is make sure that it's supposed to be on the property, because sometimes there'll be previous owners, 3 owners ago, and it's actually been paid. So we might have to do a little bit of research. We go contact the previous law firm. We look for the previous title insurance policy, right? That's a big one. The previous title insurance policy allows us, they give us a pass, basically. They're like saying, hey, we wrote a policy on this and we think our attorney did awesome work. And we're willing to give you basically what we call basically a pass. So we're willing to write over the policy and allow you to not have to go back and look this up. We're going to guarantee that it's been paid. So the seller having an owner's title insurance policy makes the process a lot easier. If for some reason they don't, then we have to kind of go back in time and track it down, and at the end of the day, if we can't track it down, the seller has to pay it because it has to be clean title before the buyer can move forward.
Gotcha. All right, let's say we've went through the title policy, and I mean not title process. We went through the title process and it's clean. Is there any protections for us? Because hey, the person it's an abstractor, so you're saying the person is human doing this search. Do we have any type of protections after the fact?
Absolutely. So the abstractor pulls title. We also look at certain things, right? We look at certain things to ensure it physically inside our office. And then we issue what we consider title insurance. So title insurance from the owner's perspective is, let's just say the abstractor missed something. Let's say the attorney's office didn't catch something. Let's say it's so old that nobody went back that far in the records, because that does happen, right? There are time limitations for when a lender asks for things to be looked back. Well, let's say it happened 100 years ago and it comes up. Your title insurance as an owner protects you. So that title insurance, you file a claim with your title insurance and they're going to figure it out, whether it be paying the property off, going to court, whatever the action that needs to occur, a quiet title action, they're going to take care of that action through your owner's title insurance policy. It's part of the reason why I tell people it's so important that you have it. It protects you individually, and it should not be confused with a lender's title insurance policy. So a lender's title insurance policy is just that. It protects the lender. It protects their mortgage. It protects the investment until it's paid off. So if there's a title issue, the lender can invoke a title insurance policy to protect them, but it does not protect you. Okay, so as an owner, it's really important that you have an owner's title insurance policy. A lot of firms in Georgia won't even do a closing if you don't have owner's title insurance, if you don't opt to get it, because of the liability associated with it. So it is a one-time fee that shows up on your closing disclosure, okay? That's something you have to pay over time. It's a one-time fee, but it's really, really important.
Okay, cool. So in terms of, you said that the lender's policy does not cover you. It just covers the lender.
Right. And lenders require it. So I always tell people, if a lender requires something, right, if they're like, this is mandatory or we can't close a loan, then there's no way that you as a buyer should say no to it. Like if a lender's always requirement, it's a requirement of their loan. If they can't get title insurance, they won't offer the mortgage. So if it's that important for them, it should be important for you as well.
Got you. What if a buyer opts not to get the owner's policy, because they need to save a couple dollars to get it closed? Is there an opportunity to get it back?
Yes, you can apply for owner's title insurance after the fact. But the attorney would have to run title again because we have to ensure that title is clear. So if you don't get it within 30 days of closing, if you come back and you try to get it, they'll have to basically take you through a closing process. So you have to pay the attorney to pull the title again, clear title, and then move forward.
Wow. How
Yeah.
long does how long does the title policy, like the title insurance policy, how long is it good for?
It's actually good for a really long time. So it's good for you and your immediate heirs, their lifetime. So like if it's me, like it's just I'm gonna use myself as an example. If it's me and I pass the property to my daughter, it'll be good for my daughter's life.
Oh wow. Okay. That's good. In terms of we've talked about the title policy and talked about title insurance. What's up with all these closing cost fees? Like that's the biggest thing. Like down payment is down payment, right? Like,
Right.
it's gonna be 3.5%, 3%, 0%, 5%, 20%. We know the percentage of the down payment on the property. But the closing cost is one of the most unpredictable things, and it's the biggest thing that everybody try to nitpick, from the realtor to the seller. And then they always like, oh my God, the lender's charging $10,000. I'm like, a lot of this stuff we're not even charging. You gotta pay your taxes.
Yeah.
Like, can you kind of go through some things that are on the closing cost sheet that has nothing to do with your fees, my fees, or a realtor fee that have to be paid to get the home closed?
So when we say closing costs, I want people to know that it's more than just one fee. So when we say closing costs, it is like a category that includes like basically four different categories of fees. So it'll be your title insurance, whether it be lenders or owners policy. It'll be your property taxes. It'll be the state and government county taxes. We don't have any control over that. It'll be the lender fees. It'll be the attorney fees, and it'll be miscellaneous things, right? So if you got a power of attorney, if you had to do a mail away closing. So there are certain additional fees you may pay for those services. But a lot of it are things that we can't control, like intangible tax. We don't control the taxes. We can't. It's mandatory. It's a state mandated tax. So we don't control that. It's based upon the sales price of the home. Okay. We don't control the recording fees or the required taxes at close. Okay. So that means property taxes as well. So whatever is outstanding, it'll be prorated between the seller and the buyer. And depending on when we're closing in the year, would depend on, basically how much of a prorate you need. If we just close property taxes in October, obviously as a buyer, you're going to be paying less. But we can't control that. Like property taxes have to be paid and accounting for. HOA fees is another one. Okay, we don't control what the HOA has as their initiation fee. Some of the initiation fees can be pretty costly. They'll cost, it'll be $2,000 for you to initiate into the HOA. We can't argue with them. We can't negotiate for that either. Whatever they say the fee is what it is. They send us a letter and we have to go by that. I always tell people the same thing, and this is a little bit different than closing costs, but the same thing with payoffs. Like people get frustrated, like, well, that's not supposed to be the payoff. We can't argue with a written payoff. Like you as a borrower, if it's on you, or as a seller, you guys have to negotiate the payoff. So we can't do that. We have to give what we're given on paper. So just know, I would say a majority of your closing costs, well, I would say a majority, a lot of your closing costs is just set prices. They're set fees. Um, we can't control that. But you can, as a buyer, it can soften the blow to have a seller, right, paying a portion of your closing costs, because it can go to any of the above, right? So, and that's the reason why they keep the category so broad. So if you need help with the lender origination fee, or if you need help with paying the attorney fees, the seller's contribution can go towards closing costs, period. So it can go towards any of those category of things.
Got you. So, like there's Besides the intangible tax, what's that $10, $8 fee that we have to charge or we get fined?
Oh, I don't remember what it was. I can't remember what it was. A CRMP, I think is what it's called. But there is a fee that the lenders have to charge, and they can't get around it. And it can't be something. So even if you don't have, if even if a lender says I'm gonna give you zero origination costs, this fee has to be paid. Like they can't opt out of it. It's not something they can opt out of. The same thing with some of the recording fees and the stamp, like some of the stamp taxes. Like you can't opt out of those, and no one can pay them on your behalf. So just know. I think the best thing is to remember like averages. So when you're looking at closing costs, the national average for the Southeast, I know Georgia may be a little on the low end, but for the Southeast, we're looking at anywhere from 3 to 5%. It's what you should be thinking in your head as far as total closing costs. Um, so just kind of keep that in mind and have that in the back of your brain so you're not surprised by that. And then you're not surprised by other costs, right? You're going to have to pay for an HOA letter, right? They're generally $150 to $400 depending on the HOA. If you live in a condo community, it's going to be more. The HOAs are more because they handle more. They have more liability. They cover more if something happens as far as damage. You have your appraisal costs, right? And then you have your inspection. So you should always get an inspection done, even if it's new construction. So those are things you should think about as you're leading up to closing. They don't have anything to do per se with what's actually on the HUD, right? Like those are things that are coming out of pocket. Yeah, you get credit for it back on you'll see where it says paid before closing. Like it'll literally say that on the HUD, paid outside of closing or paid before closing. It'll say those things, but you need those things before you even get to me. So just kind of keep those costs in mind.
Right. And in terms of like closing costs being a percentage, like she alluded to, it varies because you have to take in consideration that if you're in the city limits of, let's say, Atlanta, you're paying
Yes.
city and county taxes.
And they do
So
not
you
play. They be busting y'all over the head with them city taxes. So if you are a city anything, just know you're gonna be on the higher end. Okay.
right, yeah. And then like again, the initiation fee. We don't know as the lender and the attorney doesn't know until the HOA says, "Hey, we want 6 months." Or if typically, um, if it's new construction, I've seen new construction ask for a full year in advance. So like those things go up, and it's nothing that we can do as a lender or as you guys as an attorney's office can do to lower those fees because we're not the ones being paid to. So when I discuss closing costs with people, I just let them know, hey, it's where everybody gets paid and asks for their fee, whether it's the city, the town, the county, the the insurance agency, everybody gets paid out of the closing costs from that standpoint. So like you just, have to be prepared, in some cases, you may not have closing costs because maybe the seller was gracious enough, but I'm not sure if we're in that market. Just know that you're
Yeah.
going to have to pay something at some point.
Yeah. I don't think we're in that market right now either. And honestly, I was listening to you guys speak before I came on, and I agree with you. I don't think the market's going to change that drastically in 2025.
Right,
Um,
right.
so I still think it's going to be what we consider, a seller's market. So it's just, you just have to have a certain amount of cost in mind. Does it still make it a good deal? Yes. Do I still push home ownership? Absolutely. But it looks a little different in this market than it does in others.
Got you. Um, and for those who are online pushing for you not to buy a home, they typically have a course or something you can buy that's the cost of your down payment. So just think about it. And it's typically attached to real estate. So no, I don't want you to buy a house for you to live in, but buy this rental and get $100 a month, and still pay your rent. So just remember those things as well. Like, you know, for most people, home ownership is the gateway to being able to leave a legacy, right? Or owning something,
Right.
or wealth, right? So take that into consideration. You know, do people lose homes? Yeah, people lose homes, but it's because something drastically typically changed. So to say I don't want to buy a house because I got to fix the toilet, maybe you aren't right for home ownership because you're gonna have to fix the toilet. Truth be told, if you're renting, sometimes you gotta fix the toilet anyway because the landlord not getting there fast enough. So,
I always tell people the difference between you renting and the cost of the mortgage probably makes up for all the repairs you have to make in the house.
wow.
But now you have equity and it's yours. And you have an
Yep.
asset that you can pull from if you need to. Because when I think about it, what pushed me into home ownership, honestly, is they went up on my rent like 3 times in one swoop. So one rental period, they're like next year, instead of your rent being 1,500, it's now gonna be 3,200. And I was like, this is mortgage money. What are we doing? It doesn't make sense because I can make all the repairs and then some. Because you got to think about it from a investor perspective. If the rent was 1,500, that means my mortgage was less than 1,500. That means I had enough money at 1,500 to fix whatever needed to be fixed in the house and still pay the mortgage on the house. So when you think about that from a numbers perspective, they're going with the rental market. I get it. The market demands, they can demand more for the house. But from a buyer's perspective, you got to think about it. Dang, that means their mortgage is less than 1,500, but they're about to charge me 32. That doesn't make sense.
Wow. That's crazy. Hey, I'm talking to my team. Can you guys put some of these questions on the screen? I can't see the questions for some reason with my screen. So if you can put them on so I'm answering people. So Clark says, should you ask your realtor to ask the seller for a seller's disclosure or latent defect disclosure when closing on a property? And does having this in place provide a sense of protection if anything comes up afterwards?
So yeah, seller's disclosure should be part of a package. Typically, most agents have the seller fill out a seller's disclosure, just giving them knowledge of what's happening with the house and disclosing anything that they already know. So a latent defect, by the definition, a latent defect disclosure would do nothing because it means you don't know. The seller is unaware. Okay, that's the definition of a latent defect, because I'm unaware at the time that this is happening behind the walls of the house, which is why it's really important to get an inspection. So a latent defect disclosure is not really a thing because if they knew about it, it would be on the seller disclosure. The whole point of it being a latent defect is that they don't know. Okay, they're not aware of it. So a seller by law, unless they're selling the property as is supposed to disclose anything that they know is happening with the property. So you can, I mean, I've had some agents, they negotiate for a warranty that the seller pays for. So a warranty that covers the house for, a year and then covers structural damage for 5 to 10 years, depending on, if you're getting a standard 210 warranty or what you're getting. But you can negotiate for a homeowner's warranty of some sort through a warranty company. But there's certain loans, and Kevin can speak to this, certain loans are going to require the house to be in a certain condition. So certain loans require you to get an inspection, and they're going to require the home to be in a certain level of condition before they'll even lend on it.
Gotcha. Clark says in Georgia, I heard you don't need a seller's disclosure to actually close a transaction. Is this true?
It depends. You don't, because some properties are sold as is. So if a property is sold as is, you don't need a seller disclosure. If you're buying it as your primary home, I don't recommend it. If you're not going to renovate the entire premises, I don't recommend that you not have a seller's disclosure. It's important for you to know what's going on with your house. I don't recommend that you move into a house without an inspection, even a new construction home. I don't recommend it. New construction homes sometimes have the most problems. So just be aware of that and know that even with a new construction home, you want to get a separate and independent inspector, not the builder, to come inspect your property. You want somebody else to come do that for you. So you technically you don't have to. Some lenders require it. So depending on the type of loan and what lender, they may require a seller's disclosure because they're putting their money on the line.
Cool. Which brought a question up in my head.
Mhm.
A couple. So with all the new rules going on in Georgia, well, not Georgia, I'm sorry. The new rulings going on with buyers brokerage agreements. and probably not particularly Georgia, but it could happen where a buyer does not want to utilize a real estate agent. Can an attorney represent them or look over their contract? And if the attorney looks over that contract, can they represent them in the transaction?
Yes. Most attorneys won't though, because it's not what we do. Like it's not our lane. I'm just being honest with you. Like the seller disclosure document, the lead notifications, the things that occur, knowing to maintain and keep your 8-day unilateral. Like there's so many things that real estate agents do that are not our lane. And I don't think an attorney would be the best person to represent you in a transaction because it's not what we do day in and day out. Now, if you want an attorney to look over the contract, fine. I will say in most states where there are attorneys, I can only speak to Georgia, but Georgia is a closing attorney state, which means you have to have an attorney at the table in order to close. And that attorney is neutral. So they should be able to answer any questions that you have about the contract. You don't have to hire a separate independent attorney to look at the contract. That's what the closing attorney is there for, and that's what you're paying them for, is for them to answer questions regarding the contract. Now, I will say this. They're not going to hold your hand through the transaction, and that's where the real estate agent comes in. That's just not their role. It's not what they do. So, I mean, even I, as an attorney, had an agent. I don't think it's smart to go into a transaction without an agent, in my personal opinion.
Got you. It makes sense. I just want people to get a broad scope of how important it is to have representation.
It is.
Even when you go to a new construction builder and they have an 8 sales site agent there, they don't represent you, they still represent the builder.
Yeah, I think it's even more important with new construction, to be honest with you. Because a lot of new construction, they like to bully people into using their closing attorney. And as a buyer, at least in the state of Georgia, you should have the right to choose your closing attorney. But what they'll do is they'll say, well, we're just not going to accept your contract if you don't use us, if you don't use our closing attorney, and we're going to make the down payment more if you don't use our lender. But I think it's worth it to push back against that because for most people, your home is going to be the primary investment that you make in your entire life. And you can't have somebody bully you around about the investment. You got to know exactly what's happening. So having an agent is important. Pushing back on who you want to use as your closing attorney is important. And having the money ready to use your own lender is important because I didn't use the builder's lender for my process. So it's really important for you to push back against those things in order to have a successful experience.
Got you. And, like most people assume that having that site agent represent you saves them money.
Mm-mm.
Like, oh well, they don't have to pay the realtor. I can save that. If the house is 350 with the realtor, without the realtor, it's gonna be 350. Like
All
they're
you're
not
doing is
cutting
saving
anything off.
you're saving the builder money. That's what you're saving. Yeah. You're saving the
And,
builder money by not having representation. So
and they're
to be
already, it's not going to create more or less of an incentive if you use you sound like a real estate agent. You want to, again, kind of what Tasha was talking about, what you're saying, I'm saying, you want to have representation because if you ever had to have issues and went to court, you don't have anybody to represent you or be on your behalf because that salesperson is going to be with the builder because that's who pays them their money for their 9 to 5. So,
correct.
yeah.
Absolutely correct.
Hey guys, put some more questions up on the screen. I seen that Clark had a couple as well. He had, let me see. I think I can click on it. He said, when selling a house in Georgia as an investor, can you sign as an LLC or do you need to put your name in the DBA, the LLC?
Either way, it doesn't matter. The DBA is just a fictitious name, so that's not as important when it comes to selling the property. We just need to know the official name that the property is held in, which is your LLC. But we do need to know there's a DBA as well, because we have to run a lien search on the DBA. But no, the DBA is not a separate entity. It's just like saying, you know, a Johnson family product, right? is the parent company, right? But Crest might be the DBA. Like that's just, I mean, it's not truly how it is, but that might be an example, just so you guys can see. Like the Popeyes might be the franchisee name, right? What's shown on everything, but the actual entity name is probably, Walker Family 123. So
You
just be
trying to
aware
tell
of
us
that.
you own Popeyes?
No, no, I wish. That's another conversation for another day. The franchises, I think people be sleeping on franchises. They make money. Like when you see like people like Shaq and everybody own 100 franchises, there's a reason, So
That's a different conversation for a different day, huh?
it is. It is. Real estate makes money so many different ways, and franchises is another aspect of real estate. So
Okay. Yeah, that makes sense too. Let me see. So guys, if you got any more questions, let's see. Drop your questions below.
oh, how
So guys, I
sweet.
want to reset we appreciate that, Clark. We appreciate your interaction, man. I might have to get you on the show, bro. So, hey Sabu, run the commercial right quick. I need to check on my sound. Guys, we're gonna take a little.
Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast. They won't last long.
Hey, can you guys hear me?
Yeah, I can hear you.
But I got an echo. I don't know where the echo comes from.
You don't have an echo for me.
I heard it, and I still hear it now. And then people in the comments said they hear it also.
Hold on, let me see if I mute, if that'll help.
Hello? Hey guys, somebody tell me if they hear it in the chat. I don't hear the echo anymore. It's still echoing? All right. Jacinda, do you have me on 2 devices?
No, I only have you on one.
All right. That's better. All right, we're gonna rock with it. We live. All right. Thank you, everyone. I appreciate it. Blair had a question. Her question was, what is the role of the attorney that reviews closing documents in comparison to the title company? I'm in Florida and they're not requiring a closing attorney. They don't require a closing attorney.
So basically, in Georgia, the attorney and the title company are one. So they perform the same tasks with the added benefit of the person overseeing your transaction having to be an attorney here in Georgia.
Okay.
Okay.
Brother Clark says, what type of deeds are there, and what's the most common deed you see, and which deed is good for ownership?
So there are all kind of deeds. Generally, when you come from a closing, we're going to use a limited warranty deed is what we use. Generally, warranty deeds are like a general warranty deed is like the first deed that you get from the first time that a property is sold. So we don't really see those very often, and title insurance companies don't like to see them because it gives an additional warranty that they don't want to oversee. So generally, most of the time when you see a closing, it's going to be a limited warranty deed. The most often, the deed that I see the most is a quitclaim deed, which is probably the deed that's the most dangerous. Because a quitclaim deed, literally by the definition, it just transposes whatever rights they have in the property. They could have no rights. They could have, all the rights. It just depends. So when you're using a quitclaim deed, we typically only recommend those like if you're changing ownership from a individual to a business, or a business back to you as an individual, or between family members, something of that nature. But quitclaim deeds aren't our favorite deed because it doesn't guarantee any type of ownership. Other deeds that are good for ownership, if you're in the state of Georgia, is we have joint tenancy with the right of survivorship. I love this deed amongst couples because what it does is, like, if I give my husband, if me and my husband are on a deed together and we are joint tenants with the right of survivorship, if something happens to him or if something happens to me, we don't have to go through probate. We get to avoid the probate process. It literally automatically goes in fee simple to the last surviving person. So I like that deed for couples because it avoids probate. It makes it much easier to access the property. All that's required is an actual, like, what we call like an affidavit, basically. And it just makes it, easier, especially for couples. You can do it with children as well. Take upstairs, your sister. You can do it with children as well, but you just got to be mindful that if you have multiple children, you want to make sure that you have structured it properly, right? So if you have multiple children, just know that the last child who's living is going to be the one who owns the property. So I don't suggest doing that with several children. I recommend, like, if I had 2 children, I would do joint ownership with one child with the right of survivorship, and on another house do joint tenancy with the right of survivorship, so that each child would have an asset at the end of the day.
Gotcha.
Yeah, a joint tenancy is something that's slept on a lot in Georgia. And for most people, their house is their primary asset, and what it goes through, and it helps people to avoid probate, just straight up. It allows you to prevent probate, or it makes probate a lot simpler. If you do have to go through probate, it makes it a lot simpler. The main 2 assets that we as middle class people have, right, are going to be our home and life insurance. Life insurance is already not a part of your estate. It's outside of your estate. Whoever your beneficiary is where your life insurance is going. Has nothing to do with probate or your estate, and you can make your house that way as well.
Cool. Hey guys, we got a few more minutes with Lucinda. Can you mute right quick, Lucinda? Because I still hear the echo on my end. Sorry. What are 3, I think, least common known things that first-time home buyers need to know about the attorney/title company closing process?
3 little known things. The title company or the closing attorney are neutral between the buyer and the seller, so we're not going to pick sides. I think that's something that's little known. We don't pick sides. if we decide if anybody's going to be the lender. Generally speaking, we have someone that we have to also get things approved by, and that's the title insurance company. So they're kind of like our boss in a sense. Like just like you have to go, like a lender would have to go through an underwriter, we have to get things approved through the title insurance company. And if they won't do it, if they won't cover it, we just can't close it. So just understand that we have somebody we have to speak to as well. And the third thing is that you can call after, like after your closing, if you have questions, if you lose your title insurance policy, if you lost your closing documents, we generally keep documents up to 5 years. Personally, I keep all electronic documents. I'll get rid of paper documents within 5 years, but I keep electronic documents forever. So if you can't find your title policy, you can reach out to your attorney at any time and get those documents, and we'll always send them to you. If for some reason the attorney isn't available, you can reach out to the actual title insurance company and they'll have a copy of it as well.
Can I add one?
Of course.
When the attorney's office, mute for me right quick. When the attorney's office sends either the email or the letter asking you questions about how you want it titled, closing, phone numbers, information, please fill that out and send it back, because that is stopping the process. Because if they can get the title order from us or the realtor, right, and they work on it, if they don't have the information, how you want it titled, your name and all that stuff, that slows up the process. That's probably number one for me. They're not just writing you a letter. They need that information.
My closing manager is probably going to kill me because she knows that that's the number one thing is, even if we have title, like if we don't have your social, so we can verify if this debt belongs to you. Or if the seller hasn't told us, we can upfront before even title comes in, because title does take a while depending on the county, right? It can take anywhere from 7 to 10 days. But if you go ahead and tell us, that seller, that you have 3 mortgages and an HOA, we can go ahead and get the information. We don't have to wait for title to get payoffs. We don't have to wait for title to get a hold of HOA. Because as you can imagine, Wells Fargo is not always motivated to give us a payoff just because we call and ask for it. It might take 3 to 5 days. So, if it gets to be about a week before closing and I don't have the things that we need, I'm going to call and be like, listen, if you want to close on time, I need this tomorrow. So it is really important. It's not something we just do just because it's because we need the information. And the title report doesn't tell us everything. We still have things we have to do on our end. So yes, before Amber kills me, and Amber's my closing manager, let me make sure I mention that. Good job, Kevin, on not getting me killed tomorrow in the office.
Cool. Let's see. Question. Who determines the closing date? The builder, new construction, or the closing cost attorney's office?
Neither, the lender. The lender is who determines when they're ready to go, and they determine the closing date.
Gotcha. So in perfect world, and the way it should be is the realtor has had a conversation with the lender ahead of time to say, hey, Kevin, how long do you guys need to close the Joneses loan? Before they even write the contract, and let's use Natasha, say, hey, Natasha, we need 30 days to close. So then when they write the contract, they put a 30-day closing window in there. Like example, let's say somebody went under contract um, December 1st. I would tell them to put in 32, 33 days, because we lose Christmas and we lose New Year's, right? And in some cases, we lose Christmas Eve or the day after, right? Depending on the company. So to put in extra days. Now, of course, the seller or the builder wants to close as fast as possible, but there's a process. You remember Tasha was talking about there's dates that need to be hit. Not only does the lender have to hit those dates, the buyer and seller have to give us what we need. So example, that form Jacinda and I were just talking about, if she doesn't know and she's got a short closing window and Wells Fargo, and she knows, hey, Wells Fargo typically takes a while because they don't want to give it up, then having that letter and them being able to ask for those payoffs ahead of time gives us more time. If you have the information as the seller of who the HOA is, then give that to the put it, make sure you got it in the contract, or give it to the attorney's office so they can start reaching out for the HOA letter, right? All of those things takes place. If you have to fill out something or get a gift letter and you need to get it to us as the lender, let's do that right away. In the process of purchasing a home, the best processor is the buyer, because you're typically going to have everything that I need as a lender, and if not, we're going to give it to you in a time frame to where you can get it to us. When Jacinda and her team sends out that letter for you to sign, send it back to her in the words of Tasha and the group, expeditiously, right? If Tasha says, hey, we need you to sign this addendum or amendment to the contract so we can get it to the seller and the lender, if she tells you in the morning, don't say I'll get to it Saturday. We need it right away, because we lose if we lose a couple days. So every day that something's not done, that puts pressure on the lender and the attorney and the real estate professional to move a little faster. So example, if Tasha gave you that amendment yesterday and you signed it today, we lost a day because we're closed, right? Jacinda's here with me, so I'm sure she's closed. So Tasha's here with me. You see what I'm saying? Like, everybody's closed, so we lose a day. And to you as the buyer, it might, oh well, it's a day, but it's a day that makes the difference between if we close, if it's something short, if we close on Friday, we might not be able to close till Monday, and then everybody's upset because we didn't hit our dates. So with that being said, with you guys being buyers and listening, one of the best things you could do for me, your realtor, Jacinda, is to get us what we need as fast as possible.
I
Jacinda, I
did
know
want to
you.
add to,
Go ahead.
yeah, I want to add one thing, that the form we send, it also gives us authorization to reach out to those people. So like before we get your signature back on that form, like we're not allowed, they're not going to always send us the information, even though I'm an attorney. We have to have authorization, and that blanket form gives us authorization. So just keep that in mind too. Sometimes even if we know, like even if we have title back and we know who the payoff person is, they won't give it to us until you give us permission to reach out to them.
That's great information. So guys, Jacinda Walker information will be below in the description section. She'll have her information how to reach out to her. You know, if you need something done on the business side, if you need some, a trust done or some type of estate information, title work, definitely reach out to her. She's very knowledgeable. She knows a lot. If you're interested, I think I seen somebody mention about a tax lien or something. She knows all of that stuff too. So definitely reach out to Jacinda. Again, a trusted partner. She's done the closings for me and my family. Jacinda, thanks for your time on today, and we appreciate it.
Oh, thank you for having me, and good luck on the marathon. I'm excited to see the next person.
All right, cool.
All right.
Bye bye.
Bye.
Well, cool guys. We've had a great real estate agent, we've had a budget counselor, we've had an insurance agent giving us tips on insurance, we've had an amazing realtor, we've got a closing attorney. We're going to stop for a quick break, and then right after that, we're going to have one of my past clients. She doesn't know what I'm gonna ask her. So whatever happens is, I could get some sad news, but I want you to hear her experience of the home buying process as well as working with me and my team. Hey Sabu, you can put up the video.
Are you in the process of purchasing a home or wanting to purchase a home, and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long.
Cool, guys. We are back. Just want to kind of reset the room. We're going over home ownership, the home ownership process, as well as things to prepare for home ownership. So we've talked to realtor, lender, myself, the attorney's office. Now we have one of my past clients and family friend. And look at the back. Look at her wall. Great designer. As party planner. So like I want to ask Ebony some questions about her home buying journey. You guys, if you have questions, she can answer them for you. So let's kind of dig in. How you doing, Eb?
Hello. Hey, I'm doing great, doing great. Thanks for having me on the show today. What
No
look,
problem, no problem. Happy New Year.
Happy New Year to you. What better way to know if all of this stuff is real and true, except for hearing it from a real home buyer, right?
Yep, correct. So Eb, let's kind of go through your journey with me, like the home buying process. Like, so Ebony worked with my wife. Her and my wife are friends. Well, we're all family friends, right? And she wanted to her and her husband was like, hey, we ready to make a purchase, but I don't want to talk on the phone. I want to come to your house. And they're friends, so we came, sat down at the table, and it wasn't convincing Ebony that you should buy. It was my boy Kevis. And all he wanted to know was, Kevin, what's it gonna cost me? So we sat down and we went through numbers, right? We went through programs that were available to him, and then the process began. So, Ebony, from your standpoint as a buyer of what you thought the process was, and then how it actually was, what's your opinion on how things went?
Oh my gosh. Oh, I will say this, it went great. Um, so I'll say this, it's really important to make sure that you're working with a lender that's knowledgeable. Make sure that they have a knowledgeable team. If you all can't tell today, everything, all of the information that you're getting from Kevin, from Kevin, that was really helpful for me. For me, I was a first time home buyer. My husband, this was actually his second home purchase. And so even though I was there with him, the first home that he bought, I was there, but I kind of wasn't there because I really didn't have to sign anything, right? So, but this time it was like, okay, yeah, now, because I think the first home that he bought, we actually had just got married at the time. And so he was like, well, I'm gonna buy a house. I'm like, okay, I wasn't ready then. Uh, so I was, like I said, I was there, but I wasn't there. But then, a few years later, we moved to Georgia. We get down here, and I can tell you, we were renting, and my husband's like, we're not about to keep doing this, and I was still a little skeptical, but I can tell you when I looked at the pros and the cons of renting versus buying, I think maybe Natasha was speaking about this earlier, just thinking about, having an asset, thinking about my kids, thinking about when I really sat down and I looked at all the money we were spending out in renting, I was like, oh my gosh, this is 20 some $1,000s a year. I think at the time our rent may have been like maybe between 1,800 and 2,000, something of that nature. And I just remember going, you know what? Wow, this is really 20 some $1,000s a year of my money that I'm just giving away for something that's not even mine. I'm giving them money on their stuff. And so, like Kevin said, but again, I'm still trying to learn, what all this is about, because home buying, it was one of those things that it sounds scary. You hear people talk about the paperwork and yada, 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 and all that stuff. So I was like, okay, I really, like Kevin said, I'm like, I really got to know, what am I getting myself into, what am I going to have to do? Can I even afford this? And then you hear all the scary stories about people losing homes, and this is the biggest investment of your life, of course. So it can be scary. So I will say it was really, really, really great to just be able to call Kevin up and say, hey, listen, can you meet with us? Can you explain this to me? Both of us together, talk to me about, what am I getting into? My husband, like Kevin said, the bottom line for him was, what is this going to cost me? Me, the woman of the house, I'm like, no, I need to know everything. I need to know what all these little things mean. What are all these little fees? What are the some of those things Natasha was breaking down earlier? What's actually in a closing cost? What is that made of? What kind of credits can you help us with? All of those different things. What are the percentages, right now for a mortgage loan? So different things like that. And it was just a really, really great experience and great process, because again, it was my first time and I really didn't know much of anything. So I can really, really say I appreciate Kevin. And then just the connections to a realtor, because again, I wasn't originally from Georgia. So it was just helpful to be with someone who was not only knowledgeable about the process, but then could help me, to get insurance, to connect with the real estate agent and different things like that. So it was a really great experience.
That's cool. Yeah, like it's so, for me, from experience, one of the toughest things is, even though it may not seem like it, is to actually represent a friend. Because it's one thing being that friend, it's another using, giving them your service, right? So for me, I try to treat everyone the same. Sometimes you have friends who want to utilize your service and expect something different, like a different level of service. So I say, as well as the experience was enjoyable for you, it was enjoyable for me, because I feel like whenever you had questions, you asked, you called, hey, I got a question. Or Chivas, hey man, I seen them numbers, man. They gonna go down. It's like, just having those conversations. And I don't just have those conversations with friends. Like any client that I work with, if you ever have a question about anything, I want you to ask me. Like, hey, okay, you told me closing costs was going to be this. I seen some numbers and that's not what we were expecting. And then I have the ability to explain to them. Kind of goes back to the conversation Jacinda and I had, with some fees that we can't do anything about. There's some fees that we don't know until we get into it. Homeowners insurance, we don't know until you actually pick a house. So like I can estimate, and I like to estimate on the high side, right? If there's a house that you're interested in, I will reach out, and ask Kiana's office, hey, can you quote me this borrower on this house? Because it's not just the house, it's also you as the borrower. So, hey, can you quote me on this house so I have an idea what the homeowner's insurance is? Um, as far as reaching out and seeing what the taxes are, just little things like that. Because the biggest thing, like I said, they want to know is, hey, what's our payment and is it affordable to us? Like, is it going to make sense to us, right? And just getting it dialed in. But then I also have that conversation of, the HOA fees. We don't know what their initiation fee is. We don't know if they're going to have a price hike at the end of the year, depending on when you buy, at the beginning of the year, depending on when you buy. And then we don't know, like, what else is involved. Like, okay, on the homeowners insurance, have you had insurance before? And did you have a bunch of claims? So all of that plays a part. Um, in this particular case, we were able to, I think, if I remember, I think the closing cost was a little bit less than what we had initially told Ebony and them it was going to be. Me, to be cautious, I like to give it on the higher end, because if you have to bring more money, it's easier to say, okay, it's $15,000 and you need 12, as opposed to it's 20,000 and I told you 15, and then I can't explain it. Um, so, like, I just wanted you guys, like, if you have any questions for Ebony, we can get them answered. Like I said, I asked her, I asked you last night. to come on?
Yeah, maybe a couple of, yeah, it was maybe day before yesterday or something.
Yeah, I asked her to jump on a couple of days ago and just to get some feedback because I think it's important to hear from somebody who been through the transaction. Blair has a question. Uh, what's something that surprised you about the home buying process?
Oh gosh, I think I pretty much spoke to it a little bit earlier. It probably was really just all of the different pieces that go into it. I didn't realize all of these different things that Kevin and his team have been talking about earlier today. So you have your agent, you have your loan officer who's gonna, who's gonna give you your lending. Then you have to look at all of these different things, like, well, kind of what Kevin was mentioning. I'm actually glad you brought that up, Kevin, about when you're looking in terms of affordability. um I'll say this. One thing I like about Kevin is he was a friend, but he was very honest with my husband and I. Like, we love Gwinnett, the Gwinnett County area. We actually ended up buying in the Newton County area. And reason being, we wanted to get a bigger bang for our buck. So learning about all these little things that kind of go into play, like your taxes, your homeowner's fees, some of those things he's mentioning that they can't do anything about. All of that affects ultimately what you're going to be paying monthly. So I guess just learning all those different pieces. And so there are things like that, Kevin would say, you can go over here. This is what you're gonna pay. Unless you want to go over here, do you want to go over here? And so he kept it real with me, and I really, really like that. And just learning, all of these different things that affect your bottom line. Because, I think sometimes when you're thinking about, what your mortgage payment is gonna be, um, you have to think about, like whatever you're paying in rent, if that's what you're looking for, maybe, a couple of hundred more or less or whatever. When you buy, you do have to be thinking about all of those things. It's not going to be just your mortgage. You may have, an escrow account, have your insurance and all of those things, your taxes, all of those things in there monthly as well. And so, and I really liked, and I don't know, Kevin, you maybe can explain a little bit more about the escrow. But I really, really like that, because it just helps me to make sure everything is paid every month. But it definitely wasn't anything I was thinking about when I came, to the home buying process, to the table for it.
Right. So like escrows, like I hear it all the time. Oh, I want to pay the escrows on my own. But what happens is the mortgage every month, a twelfth of whatever your taxes and insurance are is put into an escrow account. Once that year elapsed and it or the time period elapsed for either taxes or insurance to be paid, what you do your first year is you send your bill into the mortgage company and they take the escrow taxes and they send it to the county and the city or whoever is owed the taxes, and boom, that's paid. Once you've done that, you don't have to do that anymore. Now they know who to pay every year and they typically pay it in advance. They do the same thing for homeowners insurance. Well, why can't I do it on my own? Because the problem was people were paying their mortgage, not paying taxes, and lose the house to a tax sale. While people were paying the mortgage and then pay homeowners insurance, the house catches on fire, and boom, you don't have a way to recoup the house. Your mortgage is due. You still responsible for that mortgage, and the mortgage company has lost the house, and so have you. So, like in those cases, it's a form of protection. Some people fight me on it. There's a way to get around it, but when I tell them what they got to put down, they say, "Okay, I'll escrow it." You got to put over 20% down, and it still has to be approved. Because let's look at it: $200,000 house. Even if you bring 20%, you're bringing 40 grand, which is a lot of money, but the mortgage company's bringing 160,000. So then they have more invested into you than you do. So like escrowing that just makes it easier because and Ebony could probably attest to it. You got a mortgage payment and all of a sudden one of the cars mess up and taxes are due. Well, now you got to figure out, do I pay the taxes or do I get the car fixed? You know what I mean? Like those are the things, and or something happens to the house. So like having those big chunks of payment while we think we're great with money, I'd rather escrow it and let it come out, and it makes it an easier process. Those are things that you just never know. Like I just had a lady refinance for that reason. She said, my bank they gave her some type of loan, but they didn't escrow it in. She said, I want to refinance because I don't want to pay $2,400 every month. I'd rather pay a twelfth of it every year. I mean, every month to get it paid at the end of the year. Even though it's the same thing, it's just depending on how you save it. So she refinanced. We've got her stuff in the escrow. We saved her some money too on her payment as well. But some people want to do it on their own, some don't. But the reason why is because the bank has the most invested into it. Cool. If you guys don't have any more questions for Ebony, we definitely can let her go. Ebony, any wisdoms or tips you want to give out to first time home buyers that you think would be essential?
I say go for it. I really believe in, like I was saying earlier, taking your money and investing in yourself. Um, Giving 20 something $1,000 away. This some people's rent are extremely high now. I mean, I know people paying 2,800, 3,000 for rent. It's like, oh my gosh, there's so much money that could be going into your own property and asset collateral that you could be using, for something else that you need. So it makes sense. And I would encourage anybody, if you can do it, even if you can't, take the steps, get with someone like Kevin and his team, to help you to take the steps. And if you're afraid of home repairs, I heard you all talking about that earlier today. Kevin can also connect you with my husband and his team, Built by Asham, who does an excellent job with home repairs. If you're looking for someone you can trust, I do want to put that out there. Kevin and his wife, Miss Gina, they've worked with my husband a lot, and so if that's something that's you're afraid of, you don't even have to worry about that piece. So you all were talking about a toilet change earlier, so just want to put that out
Yep.
there.
Yep. So, great plug. Thanks, Ebony. So when we moved into our house here in Georgia, um, you know, her Ebony's husband and his team painted our house, um, repaired doors. Like they're a handy person, like even down to, look, man, I need some TVs moved and rewired. I mean, he did it. He hung TVs for us, fixed my garage door for me. I mean, pretty much the Ebony, when you get it, if you can give my team the link to you guys' page where they can see his work. I mean, he builds custom cabinets. Like
Hmm.
I went to their house. He took um I think he took a curio set or something and turned it into a shelf or something in the living room. Like he's amazing. So if you need creativity or you want something done right the first time, definitely reach out to him.
Absolutely. And it's I guess, should I just give it to you, Kevin, or do you want me to? Maybe I could, but it's I can just call it out. It's www.builtbyashram.com, and he actually was on earlier listening in. So you may see his name there, but it's Built by Ashram, so BUILT, Built by BY Ashram, ASHAM.com.
And if not, we'll grab it. We'll grab it from the site and put it in the description so the people listening can reach out if they need to. And he
Absolutely.
will travel.
Absolutely. So please
Yep,
don't
he'll
please
travel.
please don't let home repairs scare you, because if you're looking for someone that can come in and make your repairs, and you're thinking about that, and having someone reasonable, and like Kevin said, to do your work correct the first time, you got that in your back pocket as well. So there's resources and connections there too. So
Cool, cool, cool.
thank you so much for having me, Kevin.
Thanks for coming out on the whim. We appreciate you.
All right, good luck everybody. Bye bye.
All right, bye bye. So cool, guys. So we've had, first time home buyer come and speak on, behalf of, her process, her thought process, how she went through the process, her journey, however you do it, whichever way it is, her journey in the home buying process. I see some questions and comments in here, so I'm going to answer them. We have um, another guest coming up here shortly, but I will answer any questions. So if you got any questions for me as the lender, I see Natasha still in the comments. So, and I'm not sure if Clark is still here. So if you have questions for them as well, you can, they'll definitely help me answer those questions. But let me get to some questions. And I was told new construction are using cheap materials to build. How many inspections are needed? Um, so based off of my experience and knowledge, depending on the each process in building has an inspection done by the code enforcer or building inspectors in that area, right? However, in terms of you, I would go out and inspect, like you can do a home inspection just if you were buying an existing home. Um, with the existing home, you have an inspection because it passed the builder's inspection doesn't mean it's done right all the time. There's probably some imperfections that they have and things that they need to correct. So if I'm not mistaken, and Tasha, if you can chime in, I think there's a inspection right before they do drywall that you can do for like a walkthrough, and then you just do a home inspection. Unfortunately, the quality of materials is probably going to depend on the lender. I mean, not the lender, on the builder. Um, so like that's the other thing. Like I have people who don't want new construction for the very reason that you mentioned. Um, so, it just kind of all depends. And if a house is existing and 4 or 5 years old, that doesn't mean that the materials were used were the greatest either. But just to each his own. That's why they do provide different warranties. You got homeowners warranties, but realistically, the quality of materials that we have available to us in the United States for anything isn't the greatest anymore. Hopefully that answered your question. I missed that question. She missed that question. My fault, Tosh. Let's see, we got Blair, brother Clark. They say sometimes do three when buying a new construction. The pouring stage, the drywall stage, and then the final inspection. Yep. So you can do all three of those, but then after you do those inspection stages, you want to make sure you do your own home inspection. You want to make sure you do your own home inspection with your home inspector to make sure everything is the way it needs to be. Um, in with new construction, they typically have like a year warranty as well, where they'll come out and do some repairs for nail pops, cracks, because the house is new and it hasn't settled. So they understand that, things are going to happen as the house adjusts and set and it's been lived in, right? It's got life in it, it's been lived in. So they come out and, around 11th month mark, I believe they start setting up for, to fix the nail pops and touch up things in the house that from the house settling along the way. Um, so cool. Going into 2025 as a first time home buyer, you definitely want to make sure that you are preparing to save. To prepare to be able to pay those maintenance things. Like there too much is given, much is required. And owning a home is being given much. And it's a lot required of a homeowner. What example, if you currently pay, let's say $1,000 a month for rent, right? But where you live, you're not going to find $1,000 a month mortgage, and let's say that mortgage is $2,000. while you're working on purchasing a home, I would say to start saving that additional $1,000. So pay that $1,000 to your landlord for your rent, take that additional $1,000 and put into an account so you start training yourself to prepare to pay a $2,000 mortgage. If you're not paying anything because you live at home or you're living with family to save, make sure you just, you get an estimate. Hey, okay, we're pre-approved for X amount of dollars. What's the monthly mortgage payment going to be? Okay, it's going to be around $2,000. So I trained myself. I'm going to start putting up $2,000 a month so that I get used to paying $2,000 and I learn how to budget from paying out the $2,000. I think that's one of the most important things that can happen because we have to train ourselves, right? We're accustomed to paying what we pay and then spending the rest. Getting that budget together, budgeting and getting things getting used to paying that monthly mortgage payment definitely helps. Along with that, also I would start training myself if you can putting something aside for miscellaneous things. Maybe it's $100 a pay period or $100 a month that goes into the emergency fund in terms of something happening to the house. Home ownership is huge. It could, it's something that's well worth it, but it's a lot of responsibility. But I think the better prepared you are, the easier it is for you down the road. Now, I do want to have there is a caveat. You can't you have to take action, right? If you're constantly preparing, you're missing out on opportunities. So I'm not saying, to keep preparing and then you're absolutely ready. You got your 7 months reserves and all this done to do it. I would say at least get started in finding out, hey, do I qualify? Will they lend me money? Like, look at yourself and say, hey, would I lend me money? Like, if I came to me for $200,000 and I had it, would I give it to me? And in having that conversation with yourself, then you can say, you know what? I think I need to get on a better path. Like I need to do a better job of budgeting. I need to do a better job with my money. Let me reach out to a lender and prepare. Something that you can do, even though you don't necessarily get your credit report, I mean your the right score, maybe go to annual since it's beginning of the year, go to annualcreditreport.com, pull all three of your credit reports and take a look for accuracies of items on your credit report. Okay, get familiar with your credit report. Okay, yep, there's my student loan debt. Here's my car payment. Here's my credit cards. Yep, I know about that medical collection. Oh, I know about this Geico collection. Like all of these things that you have, be familiar with your credit so when you speak to a lender, you understand. And maybe before you get to the lender, you may speak to, or when you speak to the lender, say, hey, because I'm going to ask, what do you know about your credit? And if you can rattle them off to me, I'm going to listen to you, right, to hear, but I'm also still going to request to pull your credit so I can kind of put together a game plan on what you should do to, better prepare for home ownership. I see I got a couple questions. It says, do you feel the way interest rates have been moving currently that buyers should pay points? I think buyers are going to have to pay points. Like, so what a point is 1% of the loan amount that's paid to typically pay down on rates, right? To bring rates down. So if you hear someone say, "Oh, I paid 1 point," that means they paid a point to get their interest rate to a certain point. Um, in this market, what people don't understand, if buyers weren't paying points to get that particular rate, interest rates would be a lot higher than they are, right? So, do I say pay 5 points? No, no, I don't pay 5 points. But if you desire to get to a specific interest rate, yes, you can pay points. So let me give an example. I can't give you direct numbers, but If a person has $10,000 they want to put down more in a large for a larger down payment, between that or buying down points, I'm going to show them the difference between if they put $10,000 more for a down payment versus using that or a portion of that $10,000 to buy down the rate. The reason why I want to show them is I want them to see the difference. Like allocating the same amount of money that they are already going to use, which one makes more sense? Most people think that if you put down a larger down payment, it's going to significantly change your payment, and that's not the case. In most cases, having a lower rate or paying to get a lower rate um, has a greater effect on your monthly payment. If, in fact, that's the route that we look to take, and it doesn't make sense because it costs so much, then I'm gonna say hold on to your money and take the higher payment. Why would I say that? I would say that because the reason why you want a lower payment is to make sure that you can afford your payment. If you put down any extra funds to get a lower payment, and let's say it saves you $100 a month, yes, it saves you $100 a month, but if you ever get into a jam where you can't pay your payment, at least if you had the money, you could float it for a few months. But if your discretionary funds or your extra money is tied up in the house, unless you have the ability to refinance or do an equity line of credit, your money's stuck in the house. So we also look at those and say, hey, it makes sense for them to bring, a couple extra dollars to get their rate down some and then save the rest so they can use it for something else. Um, Hopefully that made sense for you, Clark. Missionary Michelle Goolsby. What's up, Goolsby? Will 2025 market be a seller's market or a buyer's market? Um, it's gonna be a real estate market. I don't know. Like I think that it remains to be seen. I don't think any whether whoever was elected could make prices go down or up. Um, I think what's going to determine the market is probably inflation and what things cost. Because the more you pay out and stuff, the less you have for discretionary funds or to be able to save. So, in saying that, Michelle, I think, I think we'll probably see some leniency. Well, rates go down a little bit. I think we might see housing prices go down some, but I think in order to see the housing prices go down some, it's going to take for buyers to negotiate. And I tell you what I mean. You know, from experience, let's say a house is 250 and the seller's willing to take 240. But the reason why they listed it for 250 is because they don't want to be negotiated down right off the bat. Not understanding that if they want 240 and they want to stand firm on 240 and stand on business, then they can keep it at 240. The buyers will come in and say, well, I, I'm not going to bid on that house because it's overpriced. Now, if the buyer doesn't know that the seller for this house is willing to take 240. The seller doesn't understand that, hey, I'm willing to pay 240, but I don't want to insult you by offering 240 because you're asking for 250. So that's where having a seasoned agent or experienced agent who can guide you in the process. Most agents I know that do a lot of selling, they run comps to see if that house that you want to put an offer in is within price range. Is it listed too high? Is it listed low? Now, Are they 100% accurate? No, because you have a third party appraiser who comes in and he or she puts their spin on what they think the house is valued at. Tasha gave you the example of the house where she had under contract and it came in $95,000 lower. Who would have thought, right? So, just those little things. But I think that, buyers getting out, making offers. Right now we got a lot of inventory on the market nationwide, especially in Florida. Florida has a ton of inventory. Um, and with that, the only way that's if something doesn't sell, it's price or location. And even in a undesirable location, if it's the right price, someone's gonna pay for it. So the longer something may sit on the market, the seller is going to potentially do price reductions if they're advised by their agent. So Goolsby, I think, it's just gonna be real estate. I don't know if it's gonna be a seller's or buyer's market, but what I do know is that, no matter where you live, you're gonna have to pay for where you live. Hopefully that answers your question. Now, if I had a crystal ball and knew what it was, I probably wouldn't be on this live or I'd charge for it. If a buyer gets both closing costs and a reduction in price, what do you think is the better path to take? Let's say they get 15K in closing costs and 15K in or 15K in price reduction. 15K in closing costs all day. I say that because $15,000 in the pricing reduction, let's say that's 40, let's say it's $50. But if you do $15,000 in closing cost assistance, that's $15,000 they save. Let's say you take that closing cost assistance and say, hey, I want to do a 2-1 buy down. Now it may not even take the full $15,000. So let's say that $15,000, that 2-1 buy down is $10,000 on, let's say, a $300,000 house. That's probably a savings of $350 a month for the first year, about $250 for the second year. The third year is back to its normal rate. Plus, you had an additional $5,000 that you didn't have to bring for closing costs. But between the two, I'm gonna go with the 15,000 in closing cost assistance because it saves you more money up front. That's a good question, man. It says how much 15K in price might reduce your mortgage? Maybe about $50. Just kind of depends. It's not over 100, so it's not that significant. Um. Ooh. KW. Why have realtors become less helpful since the new rules have about how commissions are paid? Now, if you want information on a home, they tell you get your realtor to contact them and give them any information. Um, a couple reasons, I think. Uh, Tasha, you able to jump back on? But I'll give you what I think. So, in terms of representation, agent probably is not going to answer it. Yep, we got Tasha coming back on. An agent's probably not going to answer your questions because they don't have a buyer's brokerage agreement with you. So understand that they're not as helpful because they don't want to get caught up in not getting paid for their services. Long story short, like agents don't get paid by the hour. They invest a ton of money ahead of time and then get paid on the back end when they close on the house. And because of the new rules that they have in place, um, they want to make sure they protect themselves as well. I'm bringing Natasha back on because she's an agent and I want to hear her standpoint. That's probably a better question for her as well.
I'm glad I still look somewhat decent, and I didn't get back into bed and put on pajamas or something.
We ain't hear you, man. You can come on with your bonnet.
I'm trying to fix this lighting. Okay,
You
did
want me
you
to read
finish
the
what you were
question
saying, or
back
you
to
want me to
you?
jump in?
So it says, why have realtors become less helpful since the new rules about commissions or about how commissions are paid? Now, if you want information on a home, they tell you to get your realtor to contact them and give you any, and they give you any information.
Yeah, it's about representation. Now, yeah, you have to have representation. Agents, I was gonna say agents are kind of scared. They don't want to overstep because agents can be fined. If agents don't adhere to these requirements now, I want to say the fine. I know I have the paperwork here. I was about to say $500, but I feel like it's more than $500 that if you're not adhering to these things. So they probably don't want to get fined. So it's fair that they've put in to this, which again, I feel like is part of this big picture to make home ownership even harder. But yeah, you have to have some type of representation. So where it was before where you could just go and ask questions. And I remember sitting in the office when I first got licensed, and you'd get a call and somebody would say, "Can you show me this house?" And then I would go and show them the house and just open the door, which aside from safety, that was not wise. Now that's an absolute no. It's also some benefits in it too, because there's some people out here that just want to just look at homes. So there are some pros to it, but that's why. So if you are serious about buying a home, you have to go through these processes, go through the process, identifying your agent, identifying the lender, working with as a team, having that home buyers consultation to, put that game plan in place so that you're going about it the right way.
Right. That makes total sense. Um, I, it also goes back to, and so I don't want you to think it's all about money, right?
Mm-mm.
But at the end of the day, it's about money. Like
And then,
they,
like, would you go to work for free?
right. And that's essentially what they're doing. So, example, you ride by a house, you see a sign, and say you're represented by Natasha, but then you call me, and say I'm an agent, you call my sign and say, hey, can you tell me about 123 Main Street, which is my favorite house in the world, 123 Main Street. And then I give you this information. I I could be probable cause for you getting to that house. Like you could have somebody fight you and say, wait a minute, that's my client. Even though they didn't sign, I gave them the information. You see what I'm saying? Like, or they just like, look, I don't want to give up all this information. You spend all my time and then you go write the offer with another realtor.
Which
Those, those are
happens common.
conversations. And then the third part to it, and I might get some shade online, but some realtors are just sorry, just not for the business. You know what I mean? Like every because you have your real estate license doesn't mean that you're practicing real estate either.
Very much
Like
so.
there there's a crazy statistic. I've seen it twice. I'm gonna go with the least. 47% of real estate agents did not sell one house this year.
I heard that. Yes.
So almost 50% of the 1.6 million agents did not sell one house this year.
And I thought the number was lower. So we're gonna go with yours because I feel like that's on the higher end. So
Yeah. So like it was now I heard one that says 74%.
mhm.
But the one that I looked at, I meant to look it up was like 47%. So let's go on my business. It was I can't it was like over 50% of loan officers did not close one deal this year, 2024,
Mhm.
right? So it matters who represents you. Like me, as a loan officer, I got better the more deals I went through because I can advise because I've been through it, right? I might have messed up on the first one because I didn't know, but now I know. And the
Mhm.
type of person
Experience.
I am, I'm gonna keep that in my memory bank. Same thing with like Natasha. I'm sure she's gained 10,000% more information she did than when she was sitting in the office grabbing calls.
Mm-hmm.
Because I did this, when as an agent, I did the same thing you said you did. One woman told me she was pre-approved, want to see this house. We hopped in the car. I kept asking, and she was like, "Yeah, I'm good, pre-approved, yada yada yada." I said, "Can you send me over the lender's information?" I'm new. I'm just trying to make a sale too. Found the house she loved, reached out to the lender. He hadn't ran anything. When he did, he was like, she can qualify for about $75,000. I said, well, shoot, the house she want to put an offering on is 225. And then she was discouraged and she stopped returning my calls. I didn't refer her to that lender, but
Right.
that was me being inexperienced in letting the buyer drive the car.
Yes, and then the buyer putting the cart before the horse. So I say you got to start with a game plan here and make sure you have everything in order before you fall in love with the house, because a lot of people, they fall in love with this house and then they work backwards. So
Got you. You right. It says, now I understand. Thank you. Sometimes I don't like wasting my realtor's gas and time. Thank you for explaining. I get it. It's if you got a question, it's best to go through your realtor because at the end, the other thing is the realtor may be able to get more information on that house because they may know the agent. Like Natasha's client doesn't know that she knows 100 other agents. But Tasha may call and say, "Hey, Rhonda, my client wants to see 123 Main Street. Can you give me some information?" But if you call, and I'm not saying Rhonda would do it, but if you call Rhonda, she might give you the bare minimal. But if you talk to your agent, that's their job to get as much as they can. And they may not even need to call the agent. You can just
mhm.
say, "Hey, I seen this house on Main Street. Can you look it up?"
Yeah, and looking it up, sometimes we can pull the seller's property disclosure, the homeowners association. There are private remarks in the MLS that you don't see, only agents see. So yeah, I would say just at least share it with your realtor. Say, hey, I'm interested. Can you just pull whatever information you can? And then maybe there's an open house, and maybe she just shares like, okay, there's an open house. You can go by this date and see. So I would say always go to your agent first.
Yep. See, Blair got a question. See. Can the realtor terminate the buyer's agreement for personal reasons?
So an agreement can be terminated on by either party. Um, so yeah, it's a mutual working relationship. So yeah, for personal reasons, I'm kind of gathering like, did they have somebody pass in the family? They need to go take care of that. Um, what there's a ton of personal reasons, but yes, they can even terminate if they just realize that y'all aren't a good fit. The agent can terminate if they have worked with the client and they have showed them 50 houses, they've put in 10 offers, they're not on the same page, it, it could be not a good fit, and the agent realizes that and realizes like, hey, this isn't going to be the best fit for you. I'm not going to be the best agent to work with you. They may refer you to somebody else, but yes, they can terminate the buyer's agreement just like a buyer can terminate the agreement as well. So yeah, it is not, and that's another thing why you have to sign this agreement, and you should go into it with full intention of seeing it through to the end. If there is a serious reason why you don't want to continue in it, there is an out in the agreement. So it's not like you are marriage, you just are just stuck in this thing. So hope that gives you some ease into moving forward in the process.
Dan said, I definitely fire clients.
See, I was trying to say it nicely. I was trying to say it nicely, but yes.
I mean, even me as a lender, like I fire clients because sometimes it's not worth the time, right? Like it's not worth the time or the effort. And if someone's being difficult, it's going to take away from my ability to service the next client, right? So you make that decision of, you know what? No, I'm not going to gain from it, but I have gained from it. I know that I don't want to deal with this type of person. And then you kind of just
Okay.
walk away. I actually had a recent transaction, like looking at my board. I closed December 11th. And I, buyer, it was a buyer and her boyfriend. They were buying. And let's just say he wasn't the easiest to work with. And by the end of the transaction, when I say nobody wanted to talk to him, not his realtor, not my processor, not me, not the loan partner, like nobody wanted to speak to him. And it didn't have to, the problem is, it didn't have to be a rough transaction. It was, aside from his difficulty, it would have been smooth, but his difficulty made it difficult. We
Mm,
still closed, but nobody wanted to deal with them. And I went to the fiance, a girlfriend, and I said, "Hey,
run. Okay, sorry, you didn't say that. Go ahead.
nah." I was
Okay.
like, "Hey, from like we're on the home stretch." I said, "We're not closing on time because of him." Like insurance agent didn't want to talk to him. Like nobody wanted to talk to him, and I said, "Hey, from this point on, I'm gonna have to communicate directly with you because I can't take no more. Like I can't do no more. Anymore, I probably would have said something that I didn't want to, right? So like the only reason why I stuck in it was because it was a referral from a past client
You
and
want
I
to take
was
the
so
job?
deep into it. Like we were right there, but he kept pulling the rug from underneath us. Like we were
Mm,
right there. Um, so yeah, like while I always say it should be a site where you can make complaints on clients. Like anybody can go online and make a complaint on Tasha and I, or at a restaurant and you got Yelp. Some people it's not worth it. Like it was like I walked away from my computer and was like, yeah, I'm mentally fatigued for the day. I'm done.
yeah, this business can be very emotionally draining. But my first broker explained it to me. She was like, "You're dealing with the public. So if
Yep.
you're out in the public and you see someone acting the fool, that same person got to buy a house. That same person go to a job and drive people crazy. Like you're just dealing with the public. So it's part of the business."
Right. KW said I was looking in two different states. One realtor we negotiated 2.5% commission. The other realtor agreed to $2,500 flat fee. That's why I was trying to do as much on my own as possible. I
Hmm,
don't know.
okay.
I got a different standpoint. If they agreed to 2,500, that was their agreement.
Right. But in that agreement with the 2,500, if they're offering a flat fee, it also includes what the services they're
Oh,
providing.
services.
So
Got you.
it was probably like, well, I'm writing this offer. And so, okay. Oh, okay. So you're saying, so that's why you were trying to do the legwork. But on the other side of it, when you're going to the agents trying to do the work, now they're
They were
meeting you
shooting you
like,
down. Yep.
yeah, because they want you to be represented. So I will say this, like this is all new and people are trying to figure it out as it goes. The flat fee sounds good as a savings, but big picture, I don't see that working very, very
Right.
well.
I mean, and it's still like it's new to the agents. Like, while Georgia had that in place, that fine wasn't in place, was it, Tasha? Like if you didn't,
No, 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 no. Mm-mm,
got you.
mm-mm.
Got you. Right. So like people still, it's new to everybody and they trying to figure it out. Not only buyers, um, it's new to lenders, it's new to realtors, and it's new to everybody. So I think over the course of time, I think it'll do a couple things. It will have you tighten your business up in terms of a real estate agent, or it'll have you get out of the business because you're not providing what you need or not having the success that you need based off of that type of service that you get. So, I mean, it could be good. Like um, they predicted that a certain amount, like there's going to be less agents going into the new year than it was. last year, and the same thing with lenders. So what that does for agents is it hopefully gets them a few more deals.
Mhm.
Same thing for lenders, and then the people that are left are ones who are typically working, right? They'll get more experience. There may be more. They're predicting a few more transactions in 2025 than it was in 2024, which is cool, but also less agents. That means more transactions for the agents that are still there, hopefully, and then they, get more experience. So, um, I think, I think weeding out people is not always a bad thing
No.
because, it's one, like I said, one thing having your real estate license, the other thing is practicing it.
Yeah, because things change all the time. Like you got to stay up to date on this. And if I could tell you how many times, like I have a friend now, she has her license, but she's more of an investor and she is working a transaction. The agent don't answer the phone. The agent sends back documents. She's like, "Can you take a look at this for me? I'm looking at the document. Signatures are missing." Everybody doesn't need to be doing real estate. It's not a side hustle, a hobby, especially when you have all this money. Like this is the biggest transaction that most people make. And I want to say, was it Ebony that said it? Somebody, oh no, it was the closing attorney that basically, you're buying a house and life insurance are the two biggest things. I think that's what she said. So it should
Yep.
not be handled lightly. And I know this can seem like a lot of moving components, but it's so worth it. It's so worth it. There's wealth in real estate. That's why I want us to be in the game. So while it's a lot, just get a good team and they'll guide you to the closing table.
Yep. And KW said exactly. I definitely understand. She said she didn't want to take advantage of. She said I have a conscience.
Oh,
That's sound like my kind of buyer.
right. You are good. Those are the best clients to work with. So where you have a
Miss
mutual
Surgeon.
appreciation.
Yep, Miss Surgeon said, "Is it a good time to refinance if you got a 6.675 interest rate? I purchased May of 2024." Um, Depends on what you're refinancing for. If you're looking to lower the rate, I'm not sure if it's going to be worth the squeeze. Like you might be able to get it down some, but the amount of money that you put into closing um, versus what you save a month may not help. So when you refinance, what people don't tell you is, or what you don't hear is that there has to be a net benefit to the borrower.
To
Like,
borrower.
yep. So
Mhm.
the person like refinancing, there has to be some sort of benefit to them, whether it's a lower payment. It's a couple of things. It's like the payments got to be lower, or they have to be able to pull out cash and refinance and say it's got to be some benefit to them. So Laquana, I think you might, we could check into it and see. But right now, your rate isn't far off what rates are. So I mean, I would, hold off a little bit and kind of see what happens during the maybe first 100 days of the new presidency. And see how things shake up, how they change. Hopefully that helped. Let's see. Should you have a realtor put it in writing? Tell me what you're talking about. Like, so I'm not sure if you were here earlier, but there is a buyer's brokerage agreement that you have to get it in writing. What's going to be charged by the agent and the services they're going to provide to you.
Mhm.
But type below if that answered your question. Let's see. Miss Waggerty, if you can tell me what part of Tennessee you're in, I can refer you to an agent there. Or Tasha may have an agent partner there as well.
Yeah, but that's a good question. Like, what part of Tennessee? Yeah, just because I'm
Yeah.
licensed in Georgia doesn't mean I'll travel 3 hours to another, county in Georgia. So it's helpful if you
Yeah.
mention what state you're in. Um, yeah,
Oh, she
not
was
state.
saying, huh?
Sorry, not state, but city
City,
or
I got
county.
you.
Mhm.
Michelle was saying when you terminate the agreement. Yeah, it has to be in writing, right, Tasha?
Yes, please get it in writing. I want to say normally an email can do, and it's written in the buyer brokerage agreement, but I actually know someone, my daughter's friend's mother. She used someone to list their home for sale. The house didn't sell. And I want to say she texted her and asked her to come pick up her sign. And she ended up picking up the sign. And then she went ahead and listed the house again. And then the agent actually sued her for compensation when the home sold, saying they still had an actual agreement. She was like, but I texted you and told you to pick up your sign. That's not an official termination of the agreement. So I would definitely put it in writing. Um, yeah, you want to writing, email confirmation. Text is not going to hold. I wouldn't rely on text. They're telling us not to rely on text as far as communication with these new changes with NAR. So I would definitely do email.
Got you. Is it reasonable to do a 1 month agreement versus a 6 month agreement? Also, how do you handle the 2.5% commission agreement, but the builder may pay 4% to the agent? Who gets the 1.5%? That's a great question. You got it, Tosh.
Okay. Tag me in, coach. No. Is it reasonable to do a 1 month agreement versus a 6 month? I normally do my buyer's agreements for 3 months. So it just depends on the agents and how they work. And this is buyer agreement. You could do 6 months if someone is relocating, but I normally just do 3 months and then we kind of will extend as needed. Um, Generally isn't a reason like why do we need to be under contract for all this time. So 3 months is a good enough gauge for us to see if this is really going this is going to be work if we're working towards something legit. I just don't want to be in an agreement with somebody and it's not going anywhere. But to do a 1 month agreement, because this climate has changed, it just depends on the agent that you're working with. I have heard of some talk of people doing, and this is more like with online leads where they don't know the person, they'll do like a week agreement, or they'll list the specific properties that they're showing. So different people are doing different things. So it just depends. Um, is it reasonable to do it? You could try it and see if the agent that you're working with will go for a 1 month agreement. Also, how do you handle a 2.5% commission agreement, but the builder may pay 4% to the agent? It's up to the agent and what their policy is. So I know of an agent, and this was prior to all of this. I know people, mention 3% as if there's a standard. There is no standard commission. That's one. Two, agents can charge whatever they believe their value is. Their commission could be 6, their commission could be 10, whatever their commission and they feel like their value is. I know of an agent new agent too, charged 5% was their commission. So if the seller was assisting with 3 back before all these changes, or if the builder gave them 3, the buyer will still come out of pocket 2. And some people are fine doing that if whatever that agent provided, their services, they saw the value, they were fine with doing that. As far as the difference, you got to talk about that up front. Because if there are builder bonuses, if the builder is giving me a bonus because I've sold X many houses in the past, that bonus is coming to me. Now, if you decide as a buyer, like, okay, well, I want to get that bonus or that additional, you need to have those conversations up front.
Oh wow. So with the new agreement, it's not where, let's say you sign an agreement with me and you say, hey, like in her case, 2.5%.
Mhm.
It's not, I thought it was where that additional 1.5% didn't get paid because you agreed to 2.5.
So speaking of that, they had a change come in January to that
Gotcha.
to this again. So it could change again. So as it was last written, I want to say it changed twice. When it first came out, it said that so I could put in there, I'm gonna get up to, I could put up to 5. So if the builder was given 4, I could just take the whole 4. Then I think it changed and it made you list out any other bonuses or something like that. But it's negotiable. It's
Mhm.
negotiable. Yeah, it's negotiable and needs to be, I want to say it has to be in writing on the form, because I've heard of new construction, the on-site agents asking for that buyer's brokerage agreement. So yeah, like to what you said, if it's not on the agreement, it won't get paid.
Wow. So, i- and again, like look at a KW situation. Run the gamut of the spectrum.
Hmm.
Like 2.5. Now, if the house is $100,000, it's the same thing. 2.5% is $2,500.
Hmm.
But if it's, $200,000, that's 5 grand versus 2,500. And if you're in a position where you have to pay it, it makes a difference. That's kind of why, like, you felt like, hey, if I'm paying somebody $2,500, I don't want to ask them a bunch of questions, which
Hmm.
leads me to lead into you get what you pay for. Like if you deal with a quality agent that charges a little bit more, you're going to get that service. If
Hmm.
you charge, an agent, who has a flat fee and they've got it spelled out before you sign that agreement, you have to have a conversation with yourself as to what type of services do you want before you sign that paperwork. If you don't mind doing the legwork, that's a different story, but you still may run into pitfalls like you did in this instance where they don't want to give you information, fear of getting fined.
Yeah, it's the unknowns. Like everything is good. We hope everything is good, until it's not. So it's the unknown. But again, everybody's still trying to figure this out as it go, and the changes come under. Congratulations, Mel C, for being under contract.
Congrats, Mel. Congrats, congrats, congrats. But yeah, the market is just like it's people learning, it's fear. Um eh, I've never, 20 years I've never been in this place of
Mhm.
unexpectancy. Um if I had to choose between the market in 2008 and now, knowing what I know, I would go at that 2008 market all day. But I
Really?
think that's from the perspective of like I was in Delaware and one of my clients was telling me about condos in Atlanta, like Atlanta, for 30 and
Oh
$50,000.
yeah. Oh yeah.
At that point, the market crashed, and I ain't paying no $50,000 for no condo. I'm from the country, so we didn't have condos. We had either houses or trailers.
Mhm.
So so I'm like, man. But now that I know, you could have made that was the time to get rich in real estate later on, because the difference is you had a ton of inventory coming on the market at low prices. Now you've got inventory trickling on the market, but still higher prices. So I would take that market, in terms of any day. But then the caveat is in that market, houses stayed on the market longer and they were way less. In
Right.
this market, if a house don't sell in 3 months, people are, oh my God, my realtor's the worst. Like before COVID, stuff was staying on the market 4 and 5 months. Like that's just
Mhm.
the normal real estate cycle. And 19 was one of the best years they had prior to COVID. So it's all a
Right.
matter of perspective. But yeah, I definitely would take that other market.
And
That
interest rates
other
were higher then, because I remember when I bought in 06, 07, I had an 11% and I had a 7% interest rate.
Yeah, it was. And when I think I told the story on my channel a bunch of times. When rates went from 8 to 7, and then they went from 7 to 6, man, people thought they were stealing money. 6% interest rate. I'm buying a house.
Yeah.
Now 6%. Oh my God, you raking me over the coals. What is wrong? Like, and it's different though. You know, you're talking about $200,000 house back then was probably 3,000 square feet
Mhm. Yeah.
versus now.
Yeah.
Versus now. Man, guys. So look, if you have any questions for me on the lending side, I appreciate it. You can drop them in the comments. Man, I don't know who been rocking with me all day, but thank you. I didn't know what to expect from this. Like I really didn't. All I knew is I said I'm gonna try. You know what I mean? I got my little cup over here eating on some Shack gummies to give me some energy.
No, this has been great. I love how you brought all the different fields together.
Yeah.
So this has been very informative.
Yep, definitely. I'm waiting for our last speaker. They said they were joining. Um, last speaker. But listen, if you're just joining, we started at 10 o'clock this morning, talking about budgeting, what I thought was going to happen in the market from my, professional standpoint. We've had some amazing speakers today. We've had an insurance agency owner, multiple offices. We've got a real estate professional who jumped off, came back on. So I definitely appreciate it. Actually, Shannon has experience as a real estate agent as well. So she's well versed in that. We've had the attorneys all, attorney Jacinda Walker. We talked to home buyer, Ebony Mays, who was one of my past clients. So like I wanted to give a perspective. I'm gonna do it again. Doing it now, I see some things that I want to tweak. I definitely, respect people's time. So, Tasha, if you got to jump, that's cool. I know you
Okay.
want to finish playing Monopoly with real
Yeah,
cash.
right. No, sir. I'm over here working on some goals. But then I'm trying to listen too, so I'm tapped in, but I'm getting some work
No problem, no
done.
problem. Well,
Okay,
we're
if
not.
you need me, just tap me in. But
I got you.
this has
I
been
got you for
awesome.
sure.
And everyone, please go back and watch the replay if you're hopping in late. Valuable
Yep,
stuff.
I appreciate it. Hey
All right.
guys, before we bring up the last presenter of the day, the last speaker today, I'm gonna take a quick break. Sabu, if you can run the commercial, guys, hang in there with me for a little bit longer, and then I'll let you go. If you have any questions, so I didn't even. If you have any questions pertaining to real estate that you can't put in the chat, my contact information will definitely be at the bottom. The goal this year is to help 100 people get into their home. So listen, shameless plug. If you've purchased and you need to refinance, that's a part of my 100. If you haven't purchased or you have purchased and you know someone that's interested in purchasing a home, have them reach out to me. If you have not joined my Facebook group or my newsletter, do me a huge favor, join my Facebook group, the newsletter. Let's build a community. Let's watch this commercial and we'll be back in a few minutes. I don't know, they might be asleep.
Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long. Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast, they won't last long. Are you in the process of purchasing a home? Are you in the process of purchasing a home or wanting to purchase a home and it's a lot of information and you need somewhere to keep your notes? Well, I've put together a home buyer's journal to help you journal your journey to home ownership. By using this journal right here, it allows for you to take notes on your budget, what needs to be paid, things that you need to take care of in your credit. It also has budget worksheets, notes inside, as well as it allows for you to take notes on when you're selecting your real estate agent, your lender, and the different homes you're going to view. And at the end of the process, it allows for you to have a safe place to put the number to your HOA, when the roof was replaced, who the utility companies are, and their phone numbers. For $19.99, this could be yours. The link will be below so you can purchase it. Act fast.
Hey guys, welcome back. Welcome back. What's going on, AJ?
Hey there. What's going on, Kev?
Ain't much, man. Happy New Year's, brother.
Happy New Year.
Hey guys, I want to introduce you to one of my real estate partners out in the Houston, Texas, Austin market, AJ Randle.
Nice to meet you guys. Hey, hello, everybody.
Yeah, AJ Randall. So AJ and I have done a couple deals together. We actually met because he followed me on YouTube and reached out to me, and we've partnered on a couple deals. He's done an amazing job with some clients, and I wanted to touch bases with him because AJ has a unique skill set. When I say unique skill set, he's a realtor, but he also invests. So he understands the investment side. And he actually helped one of our clients purchase a home when she didn't think she could because he happened to know the builder who has some inventory that they need to get rid of.
Mm-hmm.
So, I definitely gonna, whatever, if you've got anybody out here watching now or later has any questions about the market in Houston, reach out to AJ. His information is going to be below. We're not going to take up a lot of his time 'cause I know he's busy, man, slinging them deals out there in H Town.
No, I
But
appreciate you.
what's going on, man?
Man, not a whole lot, man. Happy New Year. I'm excited to actually come into a new year and see what this real estate market has to offer both buyers, sellers, yourself. Good to partner with you again. And not a whole lot, man. It's just I'm glad to see a new year and to see all these happy faces and some smiles again, man.
That's what's up, man. So AJ, like in Texas, which is a different market, it's definitely a different market, man. What are you seeing in general in that Houston, Austin market in terms? What type of market is it? Like here in Atlanta, we know prices are kind of flattening out. We've
Mhm.
got some inventory on the market. What's it like in the Houston area?
All right, so I'm going to share both marketplaces with you, and I appreciate that cue. Austin and Houston are two totally different markets. Okay, and so let's start with Houston. Let's talk about prices. Now, the average price point in Houston right now is it's not the standard. It's around 270,000. Okay, that's the low end. We have $1 million homes. We have everything in between. Okay, what we're seeing in the Houston marketplace is that yes, prices are flattening out. And if you don't know the term flattening, all that means is that we've seen our market correction as of the last quarter between September and December of last year. The market has corrected, so prices have adjusted to the newer interest rates that we've been seeing. Okay, if you're a buyer in the marketplace, you've been looking at the market. Our lenders know interest rates have crept up slightly. Okay, so what that means for prices is that they've come down some to offset those increases in interest rate. Okay, that's a good news. That's some good news for buyers. On the other hand, in fighting the interest rates, what buyers are also seeing is that sellers and builders are willing to give up a little bit more in order to incentivize buyers to come and actually shop with them. Okay, so we are seeing that buyers are getting a little bit more contributed towards those closing costs. So not having to worry about that extra 2 and 3% surcharge when they come to the table to say, "Hey, I want to buy this home." Okay, builders are offering a few more incentives too to get you started with extra appliances. They may offer you some blinds in a garage opener or say, hey, we'll refinance you here in 3 years. Come shop with us. Okay. Our job as realtors is just to advise you to be your thinking cap. You're working with us to think for you and with you to brainstorm what opportunities exist and to show you all the marbles on the table and say, hey, of everything that you see, here's the best option. Okay. As far as the sell side goes, sellers are actually seeing that, hey, we can't just present anything to the market now. These prices are flattening out, so we're not able to just, market our homes at the top of the marketplace. So sellers are seeing some challenges too, where they're having to actually use some equity to make improvements on the home, the bathrooms, the kitchens, etc., to be sure their homes are really competing against new construction right now in the Houston area. Okay. Now that's Houston. And we have Houston's a quadruplex. It's a metro, a major metro. It's like Atlanta, where you have a lot of different inventory. We have high rises. We have all types of inventory here. So you'll get to kind of pick your poison with your price points. Austin, on the other hand, is double the market on price. We're averaging about 515,000 in the marketplace right now, and these prices have come down. Year over year, about close to 6% year over year in a price adjustment. Interest rates right now, we're hovering in just Texas right around 6.8% on the conventional loans. Kelvin talked to you about that a little bit more. FHA, you'll see some improvements, especially if you're using down payment assistance, you may see a little bit of a tick up in interest rate, but that may help you in the Austin market when you're looking to buy a higher priced inventory home. Okay. Now, for the resale market, we're seeing the same thing across not just Texas, but the states. Yes, you're going to have to actually make the improvement, sellers, on your properties, and buyers. You may not be able to get that showroom car floor, the showroom floor car that you're looking to buy in the house, but we can find you the alternative that you're looking for in a home if you can just make the necessary adjustments on your taste, but not necessarily make the adjustments on your budget. Okay. So we're saving you money when you're looking to shop in the Austin area too. Okay. 144 builders in Houston, more than 50 builders in Austin. Trust me, I know where you can find the gifts of the gab and where you can find your resale inventory if you need it.
Gotcha. So AJ, um, man, so when we came to Houston, I felt like, I mean, Houston's huge.
It's
Like
huge.
it's huge.
Mm-hmm.
Like it's huge.
Massive.
Man, it was crazy. But I felt like I saw, and you just alluded to it, I saw so many new construction developments. Like it was like planned communities, of new construction. But with all that being said, the other thing I saw unique about Houston was they were building single family and they were building quads, like new construction for units. Like, oh, is that common there, or is something that they did? Like, talk to us about that for the person who may want to buy a unit to live in and then rent out the other three.
All right. So this is talking about the investor. This is the side I love. So he's kind of queuing me up here. So for investors, yeah, we have opportunities both ways. So whether you're looking at a single door, single family home, a duplex, which is 2 doors, triplex, 3 doors, even a quadruplex, 4 door units, we have those opportunities available here in the Houston marketplace, and they're all over. So the answer to his question is yes. We use a term called regentrification, right? Which is a revitalization movement we're doing in the Houston area, both inner city, even working towards the outer skirts of the city to incentivize buyers to say, hey, don't just buy a house and be the only person living in it paying the mortgage. If you can buy a home and live in one unit and rent out the rest, we're going to do it. I have clients that are also buying, the quadruplex, the 4 door unit. They live in one, they rent out two. And guess what they do with that third unit? Airbnb. That's their cash cow. So we're finding creative ways to actually get persons into homes to actually not only maximize their usage of the property itself, but also save them on their mortgage or even cover their mortgage completely with the type of home that they buy. Yes, these homes come at different price points. Most are quadruplexes, brand new, right around 800,000. However, there are some ways that we can use some of the rents that are on the home, up to 75% of the total rents that come in, which Kev will explain to you, to actually contribute towards the income factor when it comes to qualifying you for the house you're looking at. Okay. What I typically do that's different than most realtors is I'm going to take you through your cash to income, kind of the what I consider how quickly can I get my cash back out of this deal if I were to invest into this quadruplex or duplex option, right? If you're going single family, like you mentioned, I do have clients that are finding some off the table deals, off the market deals, brand new construction and resale deals off the market, and they're cash flowing. Yes, in today's market at today's interest rates, they're doing it. If you're an investor and this piques your interest, or if you're a first time buyer, maybe second time buyer, and this piques your interest, get with me and Kev so we can actually explain to you how you can actually cash flow in today's market. Yes, in 2025, make this your year where you can actually say, yes, I accomplished this for myself, and start to build out your portfolio. Most of my clients, Kev, right now are on the third and fourth homes, all cash flowing, and even replacing homes that aren't performing well with new homes, even in today's market.
Wow, that's amazing. I seen Natasha. She, she's like quads. That's awesome. Not common in Georgia, and
Mhm.
that's what kind of piqued my interest. I was like you'll see a duplex here and there, but there's like, yeah, it's like 4 units here. Like it's not just onesie twos. It's like a lot of 4 units being built, which is amazing, man. It's a great opportunity for someone. So example, if you depending on the pricing point, if it qualifies for FHA, then you can buy it for 3.5% down, live in one, rent out the rest. Kind of like AJ alluded to. Hey, We can use an expense factor of 75% of the rent to help you qualify for more or with that, right? As well as, hey, it's going to go off, even so it's vacant, Kevin. We're going to get an appraisal for the market rents on that appraisal. So that's what we can determine, right? Okay, that fourth unit that you're using is going off of monthly rent, but you say, hey, I'm an Airbnb it, then that's icing on the cake.
Mm-hmm.
That's icing on the cake right there. Boom. Okay, I'm a veteran. I want to do the same thing. Well, guess what? You don't have to put anything down.
Mm-hmm.
You can get into a 4 unit with no money down and just have the closing costs. Now, there's are a few additional steps that you got to take care of, right? You have to show that you have experience managing property or have a property manager for that property. And then that overcomes that hurdle. But you're in a 4 unit, new construction, 0% down, you know, closing costs could potentially be taken care of or some of it. So just in closing costs, and you've got a cash flowing property. Let's say it's not cash flowing like you think it should, but you don't pay a mortgage, then you are cash flowing because you're saving your mortgage.
Mm-hmm.
They're paying the utilities. All you paying is the taxes and insurance, which comes out of the money that they give you for the mortgage. So like there's, if you're in the Houston market, man, that's a unique selling point. I've been in a couple different markets. And I think in Dallas they have some of that, but not as much as in Houston. Like it was crazy.
Yeah.
Crazy, crazy,
Definitely
crazy.
check with your city ordinances. I know not all cities and metros are going to allow for Airbnb, right? But Austin and Houston is still unrestricted. Definitely want to make sure you're checking and making sure that the realtor you're working with is experienced in this, can actually hold your hand and walk you through, coach you through the process. But yeah, you're absolutely right. And to keep in mind, you're not just buying old properties. These aren't old quadruplexes, right? We have townhomes that are 3 levels that we're seeing the same thing, house hacking techniques. There's different ways to invest in real estate and ways to really get your foot in that's not going to cost you a lot on the front end, which is why Kev alluded to try that FHA. Try getting a low 3.5% down option, even conventional 5% down to get you started. And once you get that first property, it seems like the rest start to roll in for you. But we definitely can help you with closing costs. The sellers are actually looking at seeing how they can incentivize you to actually even wipe away those closing costs. So veterans definitely take advantage of your benefits and reach out to us if you have questions.
No, AJ almost had me looking to move to Houston.
Still trying to get you here.
Yeah, almost looking to move to Houston. We packed up, took spring break, stayed in Houston for a week.
Come on now.
Like, amazing, yeah, amazing city,
Yeah.
amazing food.
Mhm.
Uh, like it's just amazing opportunity. Like just to see the communities, see stuff growing. The businesses, man. It's Houston. Is definitely a great place to be. Shameless plug. I mean, I'm not there, but if circumstances were different, we were considering moving to Houston. Like the
Mhm.
only thing that really stopped us was the fact that our boys are younger and their grandparents are here, and that's who we have. Like their grandparents don't travel like that, so we would have to keep coming back to Atlanta. So
Mhm.
other than that, man, H Town. We called told them I was in town. It's like, what
Listen,
I'm talking
man.
about.
Plenty of food here for you. So if you love food, if you love entertainment and all the attractions that come along with the major cities, you're not going to get any shortage of it in Houston. Even Austin, we have some raceways and some tracks out there. If you like Porsches and Ferraris and things like that, listen, we got the attractions for you. South by Southwest, everyone hears about that, right? So yeah, we've got some attractions for you here all across Texas. I mean, it's not just the Houston and the Austin metro, even Dallas. We got some good opportunities, some entertainment for you.
Yeah. So in terms of the market, with the new changes on buyer's brokerage agreement,
Mhm.
um, how has that affected you guys in your markets?
All right, so 2 things. I also want to let me start with this. As of September, right around the time in August, which is the 21st of August, a new rule was implemented where agents, or at least buyers agents, aren't guaranteed a paycheck. Okay, this is something that we fight for when we work with you as our buyer. We bring you on as clients, is to ensure that the sellers and the builders aren't tacking on an additional expense to you to work with the buyer's agent and get the expertise and guidance that you need while transacting. Okay. And so, given that we're not guaranteed a paycheck, doesn't mean we're going to stop working. And it doesn't mean business is slowed down. But what has slowed business down is this: across just Texas, we had nearly 150,000 layoffs. Okay, as of September of 2024. That's huge when buyers are looking for financial stability and your lenders are also looking that you're financially stable in order to buy a house. Okay. And so what that means is that even with acquisitions, mergers, voluntary layoffs, all of those things, with 150,000 layoffs, everyone's looking to now jump back into the job market, right? So buyers are then saying, okay, how can I now protect my income when I go to buy a house? It's not just buying a home anymore based on what Kev mentioned: family, proximity to schools, a proximity to amenities like HEB, Kroger, the grocers. It's not just those things, it's stability. So this comes back into that multifamily discussion we had before. But what are buyers doing right now in order to protect themselves when they work with agents? Just ask them up front, what's your rule? What's your policy when it comes to me seeing a house I love that isn't going to pay your commission? Does that mean that me as a buyer, am I paying that fee? The answer is yes and no. Yes and no. So it's our job to now negotiate on your behalf to be sure that you are getting the home that you love, and if we're able to be compensated by the seller in whatever capacity, we'll take it. And if you are able to actually bring any money to the table to pay for your buyer's agent, even if it's 1% of your transactions cost, if you see value there, pay for your agent. It's like a tip. Pay for your agents because we don't work for free. We have to feed our families too. And it's just a give and take, and it's a negotiation, and communication solves all things. Me personally, I have not seen in one case yet that I've had a buyer have to pay out of their pocket, but that's my negotiating. My negotiating. That's the strength of my negotiating for you to be sure that you're not spending additional money on a buyer's agent. Okay. And you still get all the expertise, 110% of my abilities and my team to be able to coach you. Okay. But in most cases, I think for other agents, I can't speak for them. They are seeing it. Brokers are seeing it, that there's changes in the market. And it slowed down the buyer's progress because they don't think that they can actually buy a house without an agent or with an agent. They don't know what to do, but come to us for the guidance, get the questions answered, and come and have Q&A with us so that we can actually give you the right information that you need to approach the market in a healthy way with confidence.
Gotcha. And that's why I wanted to, bring this on. Like, we're about 5 months into the new
5 months in.
changes for NAR,
Yep.
right? New year, headed into a new presidency, so
Mm-hmm.
new rules, new people running the country,
Yep.
and figuring out, okay, how do we maneuver through this? It, like Tasha and I talked about, it's new to all of us, right? What do we need to do as we educate people? So, like, Department of Justice doesn't like the new ruling.
Mm-hmm.
So they're trying to determine if they're going to open this can of worms back up and get rid of the buyer's brokerage agreement.
Mm-hmm.
So, like, that could be huge, right?
Mm-hmm.
If from my standpoint, if you think that you could possibly get scammed with the realtor, you might get scammed definitely without one, because
Mm-hmm.
you're going to have less to choose from because they're not going to be willing to work with you for free.
Mm-hmm.
So, like, when the Department of Justice gets involved in things, it does take some time, but, like, I think that at the end of the day, we need to look at the consumer. The consumer is the buyer from, you and I standpoint. From my standpoint, yours is your seller as well, who entails at some point is a buyer or was a buyer. So, putting those protections in place, I think part of the problem is the people looking at these things don't understand our industry.
They don't.
You
Yeah,
know what
they're
I
not
mean?
in
That's
it.
just like me and you being on the board of the hospital and trying to tell a doctor what to do. Like, that's not my wheelhouse.
Mm-hmm.
Even though I have experience in real estate, and if it comes to the financing side, I'm going to answer the question. And it comes to the housing side, I may know the answer, but I'm going to push you back to your agent because I want to make sure you understand, the separation, right? Um, that's good information. What what's a few tips that you would give let's start with first time home buyer looking to get into the market in Houston, what would be one of the first, two things you would tell them to do to prepare for, this market?
Great question, Kev. So I want to allude right back to that buyer's representation agreement. If you're working with an agent, please make sure that agreement is signed. That's your fiduciary lock in with your agent. All right. That means that they're going to give you the confidentiality you need and be able to answer questions a little bit more thoroughly, a lot more thoroughly, actually, than they could without that agreement being signed. That means you have representation, you have safety, you have protocol on your end so that whether you go into a new construction, to look at a home and you have sales representatives breathing on your neck, or you go into a seller's house and you love a home that you see, you need to purchase power to be able to buy it, you have representation that's going to be kind of your legal counsel and your guide in the process. So make sure you have your representation agreement signed. It's going to spell out everything about your agreement with you and your agent on how you can be protected in this marketplace. That's first and foremost. Number two, make sure that your agent has a buyer's guide for you, right? And are working with a trusted lender like Kevin, okay, that knows this marketplace, that will guide you and give you the tools you need to maybe understand your finances, where you are on a monthly budget, and give you that confidence you need to be able to strike at the home that you love. Because there's still competition out in the marketplace. In the home that you like and you sleep on, someone will sleep in tomorrow, right? So that's for my tools and tips of the trick. I always think that, hey, prepare yourselves financially, make sure you're saving your money. Even $1,000 a month can take you far, and be honest and open with your agent and your lender on what it is that you can and cannot do financially. Okay, because there may be ways that we can help contribute towards your transaction too, or can find contributions to you with down payment assistance programs. Kev, I don't think you mentioned this, but we have TSAC, we have SET, we have the Home Buyer Texas Home Buyer Program, things like that are grants given to buyers to give them free money, just educating them on the process of how they can actually lower their down payment and even closing costs with these incentives. Those are things I think that buyers should be absolutely talking to their agents about. Now, sellers, you're also buyers too. When you sell your home, you're going to then go back into the market to then buy another home, either downsizing, upgrading, etc., or even leasing or investing yourselves. Still keep these tools top of mind when you're thinking about the marketplace.
Gotcha. Correct, man. Correct. So look, if you guys, whoever's watching, if you are interested in, purchasing a home in the let's say Metro Houston, because it's not just Houston, surround Sugarland, Pearland,
All of it.
um, all those places, man,
Mhm.
Austin market. And if you need a referral in Texas, even though AJ may not do the whole state of Texas, he has the ability to refer you in Texas. If you're watching, you stumbled upon us and you got questions about investments. I'm gonna go out and venture and say, in terms of a realtor with investment experience, he's probably one of the best I've ever worked with. And that's, I'm not saying that because he's here. That's why I brought him on, because I know he's one of the best. Because he knows what he's doing. And he's great with negotiating, right? Um, in terms of your contact information, make sure my team gets your information, man. And look, brother, I appreciate you for jumping on. I definitely appreciate you jumping on, man.
Thank you for having me.
Hopefully, I gave you the oop. You
No,
know
you
what I mean?
did. You did. I was a little bit staggered coming in. I think I was a little bit later than the start we wanted, but I appreciate you for bringing me in. Listen, this is about the consumer. You mentioned it before. You alluded to it before. But hey, the consumer is put first. It's not about us and how good of a job we can do. Even though we're experts, we want you guys to have the confidence you need in order to get into this marketplace and execute on exactly what your plans are for 2025.
Got you, man. It's some questions up here I want to answer. I can't get to one of them, but the person asked, here it is. Here it is. That's probably more for me. So they asked, if you have multiple family members purchasing a house, are they looked at individually, debt to income, etc.? So typically, when you get on, you have multiple family members on an application, everyone's looked at how they contribute to the pie, right? So let's take a husband and wife scenario. Um, if the wife has the better credit and less and more debt, but the husband has the better income and less debt, they're going to offset each other, because his debts and her debts are combined. They've got combined income. What do the Randalls have bringing in on a monthly basis? What do the Randalls have going out on a monthly basis? the determination of the lower credit score, in most cases it's going to be based on what the interest rate is. In terms of qualifying, even though one spouse may have a lower credit score, the debt to income ratio is going to help along with the person on the application with a higher credit score. So I've seen people add someone with minimal income, but they had a great score and it helped them qualify versus them being on their own. It just kind of helps and it off balances, right? Offsets it, right? That person you add may have a low score and brings down you guys' score because it's not averaged, it's the middle score of the lowest middle score. So if, if the borrower had the husband has a 650 middle score and the wife's score is 580, they're going to go off her 580. But let's say, okay, after they pay down payment and closing costs, they have money left over in reserves, then that's more of an approvable loan. And somebody said, well, why? I've got a 700 credit score. You may have a 700 credit score, but if you don't have any money and your debt to income ratio is high, you can't get qualified because you don't have the funds. Now, granted, we can be creative and say, okay, 700 credit score, let's see if we can get this person some down payment assistance. All right, I need to put them with an agent who can help them get closing costs. Boom, that's the case. But in that scenario, I'm always going to queue you up to start saving for closing costs because there's no guarantee that the seller is going to pay it. And I've had situations where the seller was willing to pay it, but the appraisal came back less, and the first thing to go was the closing costs. So you still want to position yourself to have some funds, which alludes to another point I wanted to make before we get out of here. I I strategically had this done for two reasons. One, no, more than two reasons: to educate the public early in the year, get you started on the right path, but also to take advantage of your tax refund check if you're getting one. So if you're getting a tax refund check, hey, we just passed the Christmas season. You didn't have Christmas. No need to have a second Christmas in January or February. Let's take that money and invest it into something that is definitely going to help you in the future. If you live in somewhere, you're always going to have to pay to live somewhere. Let's look at that. Let's get with a lender, get with me, see what you need to do, and we can determine whether, hey, the best use of this money is to save it for down payment, or the best use of this money is to pay down some debt so you can qualify for more. Now, I don't know how many of you have heard, but there are 1 million people who did not receive their $1,400 stimulus check back in 2021. Starting in the end of January, the government is going to start sending those out to the 1 million people who didn't get it. No time for a second Christmas again. You want to take that 1,400 bucks that you get along with your income tax check and use that wisely. Whether
Mm.
you're looking to buy a home now or down the road, I would say put it in something and save it. Hey, if you're good and you just need to wait for your lease agreement, put it in a high yield savings account and earn some change on it. Definitely do something with it, but I wouldn't spend it because down the road you may need it for sure, and it could help. But I wanted to make sure you guys, you can't say, well, nobody told me what to do. You don't need no more furniture. Your car's good. You don't need another car. You just brought one last year, right? The TVs they're not on sale no more. Like we don't need any more TVs, and you can go on vacation after you get the house. Like these are realistic conversations that I want to make sure I have with people because that's what I see getting jammed up. Like, I'm trying to keep from laughing, but I got people telling me, oh man, we ain't got no down payment. And I'm friends with you on Facebook. I'm like, that 11 grand you spent at Disney was your down payment. Like that, like it's
Well,
so like just giving people sound advice, and give them a heads up on what to do, because I don't want you to say, oh, AJ, if I had known, I would have saved my tax return. Well, Kev just told you in January, don't have no second Christmas.
mhm.
And just, be advised on what to do with your funds. Um, Another thing is, if, your job has 401k, I would definitely consider, I would consider investing in your 401k and letting them match it and help you grow your savings. But I wanted to get that in, man, because we kind of segue to it. Let's see if we got any more questions. Um, a Sabu, can you put the question up from KW? She was asking about down payment assistance, the Chenoa program. So if I can remember it, so Chenoa is a down payment assistance. It's a nationwide down payment assistance, which helps buyers with, I mean, actually up to 5% closing costs. Now, the 5% closing cost comes with a higher, slightly higher interest rate, as well as discount points. Discount points is the points that we talked about when earlier in the segment when we were talking about, hey, should I pay points to buy down on my rate? So the points is a little higher, right? But the good part is there's no income restriction. So if you make 300 grand a year and you don't want to use your 3.5% or 5% down for closing costs, just know you can do it, but you're going to have to pay a little bit more. So in those scenarios, it's like, do I want to save, you know, $14,000, or do I want to give it up and pay or pay the higher payment? It depends on what you're comfortable with and the way you want to do business. Um, Let me see. My apologies. I joined when I began asking. I saw you discuss Chenoa with Shahida Hill. Can you explain the NHF, and the Chenoa Fund? National Home Buyers Fund. I'm not sure what the National Home Buyers Fund is. I don't want to make anything up. But Chenoa, I just explained, is a down payment assistance program. Um, I'm looking at a home in Georgia. KW, I think you said you had a lender. Like, depending on which part of Georgia you're looking in, like I've got access to Georgia Dream, Fulton County down payment assistance, Atlanta housing, which give you 20 grand. Georgia Dream's good for the entire state of Georgia. Um, what else? We got Fulton County DPA, Gwinnett County DPA, Gwinnett Home Stretch. ANDP. Like I've got access to a lot of down payment assistance programs here in Georgia. Um, the problem is if you're looking at new construction, typically the new construction lender does not offer those down payment assistance programs because they're already working at a discount. And if they're working at a discount, typically we don't get compensated company wide. They don't get compensated the same on a down payment assistance program. So they're typically not going to offer you $5,000 in incentives that may come from the lender, and they take a cut by giving you down payment assistance. At that point, it's probably a loss for the company, and they're not going to do it. So when you look at down payment assistance program or new construction, that incentive is to help with closing costs, but it's very rarely that you can use both with down payment assistance, unless it's in like a USDA territory, and then it's not down payment assistance; it's just a USDA home. So I'm glad we was able to answer that. Um, yep, I can happen. I happen. I can help in Cincinnati, Ohio. I actually got a guy who was looking initially in Georgia, and he was living in Cincinnati. We just talked like Tuesday. He's gonna stay in Cincinnati. So yeah, we can definitely help you in Ohio. Um, if you guys have any questions for AJ before he gets out of here, definitely drop them in the comments. If you got comments for me, definitely drop them in the questions for me. Drop them in the comment section, and I'll answer it. If you are new to the channel and you're just joining and you like what you see, do me a huge favor and give me a thumbs up. If you have not subscribed, if you can hit the subscribe notification, that'll definitely help us out. I look forward to doing, more lives this year. I love answering the questions as we go along. And again, the links to contact me, my phone number, email address will be below. To get on my schedule will be below. If you are not a part of our Facebook group, definitely join our group. please answer the 3 questions that we ask. We want to make sure we keep out spammers and scammers. So definitely answer those questions. Also, the weekly newsletter that we send out twice a week that gives information on the market, information on trending topics, information on videos that I'm putting out. Like if you were part of the group, part of the newsletter, you would have got an email knowing when I went live on this. So definitely join the newsletter. We don't send out anything that's not really pertaining to real estate. Occasionally, I'll send something out as an advertisement to market my book, as well as my journal. And if you want to if you want to grab my book and my journal, the link will be below. It's www.peopleslender, not but www.peopleslender.com. You'll see my book, my ebook, and my home buying journal in advance. I appreciate you. If you grab it, thank you. You can get did you get my $5 for your time? I'm not sure if the super chat came through, but I'll let you know, KW. I definitely appreciate it. Anything that somebody gives me, I'm appreciative. Thank you. Definitely appreciate it. We got another question, AJ. Got one for you. Ah, how are the property taxes in Texas?
All right, if you're in Texas, you already know taxes are up. However, Greg Abbott, our governor, did a great job in incentivizing homeowners to actually lower their taxes. Here's how: your homestead exemption. Okay, so we're seeing people, and I've seen my own clients get up to 100,000, even more, in tax credits just using the homestead exemption. So even though taxes are slightly up in the newer areas where roads and infrastructure are built out, where police stations, fire stations, etc., and schools, there are some areas where you don't have as high as property taxes and are still getting great homes. We just have to strategically find those areas that are, the lower property tax areas, but with homes that you love, with amenities that you still love. So that's my job. That's my strategy, and my role is to find you areas that cater to more of your taxes. But across the entire, geographical landscape of Texas, I'm talking specifically about Houston and Austin area myself, where I'm seeing that we do have some areas that are lower in property taxes, some that are higher. But the case in point I have here is take advantage of the homestead tax exemption. It's free to file. If you're a homeowner, if you're becoming a homeowner, I'm not going to let you forget to file that homestead exemption. For VA, for my veterans, you guys are getting additional benefits. If you're retired VA, you're going to see some benefits as well, especially if you're on disability 100%.
Wow, that's great. Hey AJ, my wife chimed in at the bottom when they asked about high the taxes in Texas. She put high exclamation point.
It's all relative. It's all
It's
relative.
all relative, man. It's all relative. Uh, quick pros and cons for joining a REIT. You want to answer that?
Yeah, so a REIT is a real estate investment trust. Okay, I will say the pros is this: you diversify your income, you spread out the risk when you're investing into real estate. Okay, typically a REIT is put together by a group of professionals or individuals. I don't have to say professionals, individuals who desire to put their money together to maybe take down real estate opportunities they couldn't maybe individually. Right. This includes commercial real estate. This includes some residential real estate that they may be looking at that's just a little bit more pricey than what they thought. And then with this real estate investment trust, good news is this: you're also able to actually take out profits from this real estate investment trust over time together and collectively as you diversify your income and kind of spread out the risk amongst one another. Typically, real estate investment trusts are going to be about 5 individuals, typically 10 in some cases, and there's usually going to be a threshold in order to get into them. They may say the qualifying number to get you in is 50,000. Be ready for that, right? Save your money, 25 grand, 10 grand. Just be ready for the opportunity when it presents itself so that you can actually vet this group of people and ensure that when you do invest your money with this specific REIT, that your money's safe, because there is risk. And yes, you can lose your investment if you're not safe. Do your research, do your reading, maybe research the company that in the group that you're going to invest with before you take down any new opportunities as well. Okay, what do you know? What do you have?
Much, honestly. Like that's why I let you answer it. I know I know from the standpoint of, typically they pay out dividends,
Yep.
consistently over a certain period of time. But in terms of being able to guide somebody, that's something we're still looking at ourselves. So I'm not much of help. I figured you'd know though.
I've got resources. Yeah, I have individuals who invest in REITs all the time. They're very savvy. They know what they're doing. So if you're connected with me, I'll connect you with them. That way you can get the information that you need in order to make a good decision for yourselves moving forward.
Gotcha. Well, brother, man, I appreciate it. Looks like that might be the end of the questions, man. Definitely gonna have you back on later on down the road, brother. Look forward to seeing you soon too. Gotta make me a trip out to H-Town.
Come on, man. Go get some of this food. Come to Trillburger. Get some
Ah,
of this
we
food
w-
down here, man.
when we went, man, they were closing.
See?
Yeah, we went. They normally they were supposed to the inside closed at like 9, and the
Mhm.
window was supposed to be open, but it wasn't. But we went to burger joint. Boy, we went to burger joint and ate till times got better, man. We got it in the car, man. We pulled over in the barbecue spot parking lot and we went in, man.
What's the town, man? Well, I appreciate you having me on. As usual, man, you're the ultimate professional. I trust your services. I look forward to us having a prosperous 2025, regardless of the administration changes that are going on, man. I appreciate you having me on your platform. And guys, tap in with Kev. I know I keep saying it, but tap in with him. Even if you just have questions, tap in with him and his team. He's going to take good care of you in good hands.
Gotcha. Appreciate it, man. I'll talk to you soon, brother.
All right. Talk to you guys soon. God bless.
All right, man. Cool, guys. Your boy tapped out. I'm done. Wave the white flag. This has been great. I mean, I appreciate everybody who joined, stayed on, asked questions. Appreciate the realtors like Clark and Natasha and Shannon for answering questions in the chat for me, ones that we didn't get to in time. Definitely appreciate my staff for being here. Definitely appreciate my wife for rocking out with me and giving me this 6 hours of time with you guys. Again, if you have any questions pertaining to home ownership, if you're watching the replay, drop them in the comments. I check my chat. I appreciate everybody. If you're not subscribed, definitely subscribe to the channel. Let's get some good information. I'm looking to help 100 people in this year. I want to thank everybody who jumped on: Shannon, Natasha, Jacinda, Kiana, and AJ. They jumped on their days off when they typically are resting, and I don't take that lightly. I appreciate you guys for joining. And random user, I asked the goat to join me, but she had something else to do. But Shahida and I are going to do something together here soon. I know we'll probably do something, and I'm speaking out of turn, but we'll probably do something during Black History Month. But my goal is to have her on my channel by the end of the month as well. So, I'll definitely be on here with her, and I'm gonna bring my girl Tasha back, and we're gonna do some good things this year, guys. Again, don't be afraid of home ownership. Try, figure out what you need to do, get a game plan. I'm Kevin Jefferson, the People's Lender. Happy New Year. I don't even know how to